Optimism surrounding the recovery, fueling a big rally in the cyclicals. Citi's Kristen Bitterly seeing more room to run.
The minute that we heard about this Pfizer vaccine, we saw one of the most violent rotations into value, into the COVID cyclical stocks, as we call them. But the truth of the matter is there's still a lot of room left to run. The key thing is actually finding these pockets that once we are in a post-COVID world, you want to have some of your exposure in your portfolio today and not wait until it's too late.
Let's get back to the market desk and catch up with Bloomberg's Katie Lyons. Hey, Katie.
Hey, John. Well, this rotation has been furious over the last 6 weeks or so. The leaders in the market losing steam and instead the laggards picking up the mantle. If you just take a look at the performance of the NASDAQ 100 over the past 2 months, of course, it holds the largest of large cap tech, and the S&P 500, which to a large extent is also beholden to big tech. They're each up about 6%. The small cap Russell 2000, on the other hand, which of course is more economically sensitive, domestically oriented, that recovery trade, that index is up more than 20%. The margin of outperformance is really staggering. That's it on the index level. And when you take a look at the sector level as well, it is the cyclicals that have led the way. From November 9th, when Pfizer first gave positive vaccine news until yesterday's close, the two best performing sectors in the S&P 500 were energy and financials. Energy up more than 30% over the past 2 months, financials by 14%. But while they are impressive rallies, they're still down 34% and 7% respectively on the year. So that is that room to run that you just heard Kristen Bitterly talking about. That is the thesis here, is that there is more upside to come. And when it comes to earnings expectations going forward next year, their profit is seen jumping 46% for value stocks. That is more than double what growth stocks are expected to post. And finally, John, I just want to point out that while this dynamic is certainly remarkable, the fact that cyclicals unusual this recession is, and how the market is basically already living in a recovered world, John.
An incredibly unusual year all around. Katie Lyons, thank you very much. Jonathan Golub in the data in the near term?
You know, I think that recent jobs data, we've seen this in retail sales. I think it's going to get the biggest stimulus plan ever known to man is going to be the reopening of the world economy.
You've got the relative valuations within it. You were looking at that in recent research, John. What did you find?
Well, if, you know, the most important thing and I don't think that that's going to be the case. And with respect to financials, the sentiment is horrible.
And look over history. What's more important here, the headline valuation of the market or the relative valuations within it?
Oh, well, first of all, I mean, if you said to me what's really valuation. I don't care that the market right now is at a 22 multiple. What I do care about is where can I get something that's attractive at a bargain? And there's quite a number of those types of areas.
John, I want to talk about growth equities as well, because through much of the summer, it was an argument you made coming into the fall. Stick with the growth names. This is where the earnings growth is, and stick with these names into 21. I remember a note in the last month or so talking about the 12-month outlook in 12 months, and growth is where you'd want to be, that this cyclical rotation would largely be behind us. John, is that still the case, or has something changed with you and the team?
Stimulus from Washington. I think the risk in the back half of the year is that, and you were asking one of your guests earlier about the yield curve steepening. The Fed may have to, at some point, stop, basically pull back from this dovish tone, and the market may not like it as much. But for the near term,
over at Credit Suisse for 2020?
Gosh, it probably we got wrong. And mind you, you get a lot strong profits and an incredibly will have stronger earnings this year.
$25 is the print. That's the record high on the S&P 500. Right now, 37.23, and up around about 0.6%. Coming up on this program, the vaccine rollout powering forward as virus cases rise. That conversation up next with Michael Hans of Klurfeld. In this market at the moment, about 10 minutes into the session, we drift higher on the S&P 500. We add some weight to it. Record highs on the S&P, record highs on the NASDAQ. Get to foreign exchange. Your dollar weaker, much weaker, much weaker. Euro dollar through 122. Cable had a look at 136. This dollar, broad-based, is weak, going all the way back to spring 2018. More still to come. This is Bloomberg.
climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
From New York and London, for our audience worldwide, this is Bloomberg. About 14 minutes into the session. From 9 a.m. to about 12 p.m. Eastern Time. That launch has paused at 1:53, I understand. Keep an eye on that. We'll continue the conversation elsewhere. From physics to biology, New York Governor Andrew
The call has started. They've had their introductory stuff. Excuse me. What I'm very happy to hear is that they are saying that they're going to curtail some of the, the usual stuff. An explanation of the no votes, which are very important to hear this time. And we want to hear about the allergic reaction discussion. We want to hear about the potential discussion around Bell's palsy. And then also the efficacy of the vaccine. Stuff to people and human beings starting using it. More vaccine to vaccinate people with. But so that's what we're, I think, hearing. Things are not as easy as they sound when you look at them on paper.
Sam Fazeli, great to catch up, sir. Sam joining us from Bloomberg Intelligence. Sam, we appreciate your time. Let's turn to Claire Found's Michael Hans now on this situation. Michael, great to catch up. with you, sir. The vaccine roll.
Different element at play right now is that we know the Fed is in force and going to continue to remain extremely accommodative. So I think even if there is but I think directionally, that's what the market's going to be focused on.
This vaccine has meant many people can just look past what's happening in the here and now, Michael. I'm going to ask you a question, and forgive me if it sounds flippant. It's not meant to, seriously. What do you think makes stocks go lower?
It's a really good question, because I think the narratives in many regards, even coming into the election, I think what concerned us as a committee was that every outcome was perceived related to an operation twist, because they didn't need to. I think as we get into the back end of next year, the conversation is going to become much more difficult. And so policy is really easy, but reducing that, eliminating that punch bowl, even if it's incremental, that's going to be where the challenge comes in. So as that Fed narrative shifts, that's going to have an acute impact as they step away from credit markets, as they step away from
talked about this briefly with Jonathan Golub at Credit Suisse. We take that 12-month rolling view and think about how we feel about the world 12 months out, in 6 months, in 9 months, in 12 months. As you do that, Michael, how do you expect your allocation to risk assets to evolve? Do you have a plan?
Yeah, so that's key in all the conversations we've had. And what I think exposure to small caps, the value orientation. I think that's something that likely persists because of that elements clearly come into play around how do we tweak at the margin, right, related to our duration positioning that's front and center, continuing to maintain an underweight to duration as rates move, potentially move. So looking at potential infrastructure investments for more of those stable cash flows, right, as we get past this upturn right now that we're seeing in some of that deep value area, there are areas within dividends, within infrastructure that we're having is you need to reopen those areas, and then a resumption likely of the high free cash flow generating, mega cap growth names likely coming back into play as valuations normalize and you have less dispersion across sectors.
Michael, great to catch up, sir. Appreciate it.
Well, you have on.
Kelly, thank you. Up next, the trading diary from
deal with climate change.
In the fight against
there were thousands of people and rebuild the company from the ground up, something that I think is stronger than it ever was before the pandemic.
%1 on the Nasdaq by about 0.6%. Record after record. Here's your trading diary. At the top of the hour, we get an update from the Senate and possibly the latest fiscal aid package as well in the next 24 hours. We await an FDA advisory decision on the Moderna vaccine. Then on Friday, the BOJ rounding out a week of rate decisions with its own. 26 minutes into the session, all-time highs. Continue the conversation on Twitter at Faro TV. This was the countdown to the open. This is Bloomberg.
a.m. in New York, 3 p.m. in London, 30 minutes in the trading day in the U.S. From New York, I'm Alex. Potential stimulus hopes. The check looks to be about $900 billion. Maybe you'll get a deal over the next 24 hours. That leading the S&P and the NASDAQ to record highs. The curve, though, a little bit flatter, but still right around the steepest that we've seen so far this year. And I wanted to focus on what's happening with the cable $1 relief plan that could be unveiled as soon as today. A final vote coverage. Anna, where are we in terms of timing, in terms of the bill?
Well, I know I said that yesterday was the make or break day, but I think today really is the make or break day. I mean, yesterday was the day that they needed to have the deal in order to get it voted this week. And like you said, it looks like the vote could slip into the weekend, which of course means we would either need a stopgap spending measure to extend government funding, or we're going to see a brief partial government shutdown over the protection program. We're also looking at $300 per week supplemental unemployment benefits and a $600 or $700 check for individuals. Those are the main provisions. The two kind of tricky provisions that have held up talks so far, that liability protections and aid for state and local governments, is looking like that's not going to be in the deal.
Come through with fiscal because jobless claims story is playing out as we expected. The economy slows and a lot more people losing jobs. Now, on the monetary policy side, housing starts were up. They're up more than 12% on a year-over-year basis.
Tom saying he expects the economy to perform strongly in the second half of the year, but also promised that the Fed will keep providing support.
Our guidance is outcome-based and is tied to progress toward reaching our employment and inflation goals. Thus, if progress toward our goals were to slow, the guidance would convey our intention to increase policy accommodation through a lower expected path of the federal funds rate and a higher expected path of the balance sheet. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so.
Joining us now, Nathan Sheets, PGIM Fixed Income Chief Economist and Head of Global Macroeconomic Research. Nathan, thanks for joining Mike and I right now. So what did you make of Powell yesterday? Some of the rhetoric was that
getting inflation back to 2% on average over the medium term. But that clarity will also provide some support to the markets and to the economy in the near term. And then beyond that, Powell was very duration in the economy over the next 6 weeks as a result of the coronavirus. We'll have another meeting soon, and we'll do more early next year.
I thought it was interesting.
Press conference yesterday that on the one hand, Powell sounded cautious and guarded as any good central banker should. And as I said, was quite dovish. Growth is a little stronger over the next few years. Unemployment is expected. The vaccine is on the way, and it looks increasingly likely that we'll have a meaningful fiscal stimulus. Back in the level of economic activity, particularly in the services sector. And in that context, I think it is altogether possible that we could see various kinds of bottlenecks and shortages emerge in the economy that puts some temporary
Like they're going to look through any of those short terms and just like, hey, go buy stocks?
Well, no central banker is going to tell you that they have inflated a bubble. And I think he was at pains to try to suggest that hasn't happened, even though we're seeing very high multiples. Cameron Crease from Bloomberg has a very good column out today. I recommend it to everybody, where he looks at this and he says, it's a that is built in maybe because of the Fed. And you wonder, Nathan, how long can that go on? Can the equity market
policies stay stimulative? Now, that's a favorable scenario. That's broadly consensus. And we also know that, and at some point, equities will be, if they continue.
And it seems like they're trying to do somewhat similar thing with the back end through their QE program. What happens if we get some serious stimulus, though? Like, let's game that out. We get $900 billion this week. What happens if we
on rate? Into 2022 and into the medium term, my sense is that this economy is going to look and feel a lot like it did
right now.
So I would say that the relative moves continue to be important for the markets. But if we really want to give that boost, I would say both cyclically over the next few months and over the longer term, structurally, I think that the challenges are much more in the fiscal policy domain.
All right, coming up next, we're going to get thoughts from Nathan Sheets on Europe as well. And what do you do?
Let's check in on the Bloomberg. Another sign that the U.S. labor market is are still haggling over the final details of an approximate $900 billion COVID-19 stimulus package. Americans would get a one-time Republicans will drop their call for lawsuit liability protection. President Emmanuel with the French president. And the UK and the European Union are heading for a final battle over fishing rights. That's apparently the one major issue standing in the way of a post-Brexit trade deal. Officials are over another major issue, a level playing field for businesses. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Alex.
All right, thanks, Karina. Well, the Swiss National Bank renewed its pledge to use currency interventions to counter upward pressure on the franc, and that's just a day after being censured by the U.S. for the practice. SNB President Thomas Jordan called the franc highly valued, and he spoke to Bloomberg's Catherine Bosley, who asked him to respond to claims of currency manipulation.
I think it's much more about the broader trajectory of currency markets and the downward move of the dollar impact. The Swiss franc. Really hard to their currency. It's still a strong currency.
So the yuan is sort of didn't make that cut, but it's still on the currency to watch list. The dollar now sliding to a 2-year low. The yuan's been appreciating, and I wonder what you think China's going to have to do about that. I mean, you can make the argument it's also fundamental, right? China data is actually holding up much stronger than anywhere else in the world. And plus, if the dollar continues on its downward slide, what does the PBOC, what does China do?
My sense is that if the yuan against it. Conversations with the Chinese authorities about currency evaluation.
difficulty with growth holding up. How do you look at China's trajectory?
Consumer is gradually bouncing back. Investment is solid. It really feels like the Chinese economy is humming on all cylinders. And it's really, it's an extraordinary performance given where the rest of the world is. Accordingly, I think the PBOC in recent months a more neutral stance. But I think China's growth will stay solid. Over the longer term.
Wage drag next. This is Bloomberg.
Crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively.
Bodies are coming along and will start to bring that number way down.
We don't.
Fiscal stimulus is going to be in order to really begin a more equalized economy.
Real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Wage of $15 an hour. So Bloomberg crunched the numbers and found that labor statistics and found that when Amazon said wages don't return to Amazon didn't care for the numbers. The company substantially less than our $15 minimum wage. All right, so what's next? So far, Amazon has been able to keep union monopolies. Now, compare that to a Wall Street versus Main Street situation. Goldman Sachs planning to boost bonuses for the trading division by up to 20%. We're looking at two totally different worlds right there. All right, let's get a quick check in here on the markets. You're looking at S&P, the NASDAQ still sitting at records high. Here's you the stimulus hopes. Maybe the 3-month jump in initial jobless claims or 3-month high is enough to really get D.C. to come down to a deal, the $900 billion in stimulus, that helping to boost markets and weigh on the dollar. Also, we're taking a look at a storm. It took me a very long time to get to work today. The Northeast is digging out from the season's first big winter storm. We're going to break down what that means, what the price tag could be, the economic impact with Chuck Watson, NKey researcher, disaster modeler. This is Bloomberg.
The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contract from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
With a new
Of snow from Virginia to New York, and it's moving on to New England. Bloomberg's Brian Sullivan's been tracking that storm and joins us with the latest. Hey, Brian. Compare this to other storms that we've had. Is it worse? Is it better? Because I'm just wondering what the impact of that is then also when we're dealing with COVID, and if that's changed the dynamic here.
So excellent questions.
COVID obviously is having a major impact because it's, keeping the commuter down, the commuter traffic down. It's also keeping air traffic down. So in a storm like this, probably sometime next week, and it might be
Disaster modeler joins me now.
Those are kind of stressed out right now, obviously because of COVID and reduced revenues. So I think a lot of communities are deciding to maybe let folks ride this one out to be ready for the next one.
Is that a good strategy?
It's kind of questionable to me in a lot of cases. In this case, this COVID world is so different. You look at, as Brian was saying, the economic impacts of this. Foot traffic retail right now in the New York area, New Jersey, into the Northeast is 50–60% of normal. So a lot of these small businesses are on the verge. So if you do anything that's disrupting transportation, that's another hit. A lot of these small businesses it's literally the last straw. And if you lose a day or two right around the week before Christmas, that could be fatal for some of these businesses. So I'm not sure it's a decision our normal economic models, and we tried to tweak them to take into account the reduced activity because of COVID. So the hurricane impacts this year were running 10, 15, some cases 20% in Louisiana under normal because of the reduced retail impacts. So we're seeing that same kind of thing here. Normally you would have a transient impact of several $billion a day from a storm that's dumping a foot in the New York City area or upstate New York. I was looking at a report a few minutes ago that was 36 inches, so 3 feet of snow in a couple places. And that's going to go to the supermarket, you've got to buy cat food and Cheetos, right? So you go and do that. You can't do it today. You do it next week. Well, the problem is these kind of transient disruptions
What some of the longer term impacts?
underestimated what the governments would do and what the lockdowns and the social reactions would be. But actually, in terms of the fatalities, in terms of the impacts of COVID, we're not that far off the mark on the epidemiological models. Where we've really just been completely thrown for a loop is the economic side. We're looking probably at $2 trillion worth of impacts from retail, those kinds of impacts to manufacturing, tend to get hidden. That's the great thing about your reporting, is that it's more in depth on all the economy, not just the people looking, oh, the stock market's up. Well, obviously the economy is a heck of a lot more than just the stock market, and the rest of the economy is really taking a huge hit. A $2 trillion number at the end of the year for this.
Yeah, and that is a huge number, Chuck. And I wonder how, as you mentioned, the markets looking through that to some extent. The markets are also looking through this time until we get a vaccine. I mean, if we look to the back half of 2021, I'm just wondering with
vaccines are such a huge if. And I don't want to talk bad about the vaccines, but how much of a mutation is it going to take to mean that, I'm sorry, you just took that vaccine 6 months ago, it doesn't work anymore. So you got to go back to the drawing board, at least with the newer vaccines. The cycle time is faster, but if we stay 6 months to a year behind, I think you're going to build the press. But when the markets, if that realization hits the markets, I wouldn't want to be walking underneath some of those tall buildings on Wall Street.
Wow. Okay. That's something, Chuck.
I'm sorry. Lightning. So we just need to hope the mutations don't play out that way. But those of us
delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Europe.
I think we have a lot to be optimistic about in this country, but in the near term, even with these vaccines, Moderna and Pfizer, we just got to allow them to be given to the people who need them the most, but that's going to take more than 6 months.
Continue to trickle out. The White House now optimistic of a stimulus deal in the next 24 to 48 hours, according to a spokesman. President stories in the news right now. Robinhood has agreed to pay $65 million to settle allegations by the customer base of young investors. And Bloomberg has learned that Goldman Sachs plans to boost bonuses for the trading division by up to 20%. Its business reclaimed its stature as the firm's golden goose. There was a 49% jump in revenue this year through September after a sluggish decade for Goldman's traders. And IMAX is looking to expand its footprint in the world's largest movie market. The theater chain operator sees the potential to add at least 400 locations in China by 2023. IMAX is known for the massive screens it has in its theaters, and it now consoles launching up scarce supply, then selling them at a higher price. So more console sales are now online, and that's allowed scalpers to use bots to track them down and scoop them up. Now, resellers are charging almost 3 times retail on sites like eBay and Twitter. And this actually could be a problem for Sony. It could actually hurt its ability to draw gamers and developers to the PlayStation 5, and that could hurt profit for years.
very short period of time how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
As Guggenheim CIO Scott Minerd making a Jeff, we never, ever really talk or start with Bitcoin, but I just had to get your take. Like, when you look at the commodity world, how do you think about
it stole demand for gold? There's really no evidence that it has. And Bitcoin can coexist. And, in terms of thinking about the run up in Bitcoin this year, remember what happened to iron ore? Remember economic boom, that's currently going on in places like China, and potentially going on if you get the vaccine take hold in the Western Hemisphere. So it's
and it's a different economy now. So what is copper actually moving to, or can we see another super cycle?
actually but you also have the dollar. That positive feedback loop three reasons we want to be long commodities right now. We think you're entering a structural bull market very similar to what we saw in the 1970s or the 2000s. We actually think that the current one is going to be more like the 70s. You have the structural underinvestment. Remember, %40 in the first half of this year in oil. The second reason is policy-driven demand. The green CapEx boom is going to be on par with what we saw with China in terms of creating a capital, CapEx cycle. It's not as big as the one in the 70s that was driven off the war on poverty and in the Cold War, but it's likely to be as big as the one in the 2000s that was driven by the
So where does this leave oil then? Because in theory, that should be somewhat good for oil. When are we going to get that sustained backwardation? What's holding it back?
Well, we have a sustained backwardation in Brent. We don't have it in WTI. You may not ever get WTI because it's a landlocked crude that's middle of a producing area. I want to be a little cautious about that backwardation. It was a textbook flip into a backwardated curve. And you typically don't see that when you have inventories as high as they are right now. So I'm a little cautious. I think it's because you have oil that's turned up in contracts. They bought it back at $22, $23 a barrel, and they keep selling it forward and lock it in. It's not coming to the market. But I think in terms of looking at the oil story, it is the vaccine trade. People get back into those planes, you're going to get solid, robust oil demand in the second half of the next year. That's when we think OPEC can bring back on that supply that's currently kept off the market. And our target at the end of next year is $65 a barrel. So we're bullish the entire commodity complex at this point in time.
So, Jeff, you brought up different spreads and different degrees of backwardation. And what we have seen is there definitely is a bifurcation of West versus East. I mean, the East, particularly China, dealing with more manufacturing, industrials. That's going to be, say, a diesel situation versus the West, which is really levered to jet fuel and gasoline. How do you play that dynamic?
Well, at this point, you want to be long, pretty much anything that's a Asian-oriented commodity right now, because as you point out, the strength is very good in that part of the world. Now, when we think about how you want to play this, you look at the Brent market, it sits in sol and vol in Europe. It's kind of dead center in between the U.S. and China. It, too, is backwardated right now, like the Dubai contract is. And so what we like to do is just do a simple, plain vanilla, GSCI style, the Goldman Sachs commodity index, where you roll the front end of that curve. But we don't want all the concentration in one commodity, like let's say a Brent. We want to buy the entire suite of commodities, such as the Goldman Sachs commodity index. Now, I want to say, for those who are worried about ESG issues, we recommend being long a carbon neutral commodity index. So you get to own the whole index, and then you buy the carbon offsets, the EUA market, to offset the emissions. So it's basically 13.5% of the index is in carbon, and then you actually have an ESG friendly exposure to commodities.
It's such a good call with that. Jeff, last question for you. Energy stocks have been crushing it. In a good way. What do you think is going to happen to U.S. production as we still have, Brent at 50?
Well, the capital discipline is the name of the game now. The group that was all about growth, going back to that old super cycle era, the managements have changed. The mentality is very different. They're going to be focused on returns to shareholders. And I think that you're not going to see that rapid growth. Our base case is you take U.S. production at 8.7 million barrels per day right now. It's likely to go to 9.1 by the end of next year. We don't see it really growing until you get to 2022 at 10 million barrels per day. But given that, against decline rates ex-U.S., strong, robust demand growth is more than enough room for both the shale and OPEC production to increase.
Jeff, it's always good to see you. Thank you so much, Jeff Curry, Goldman Sachs Global Head of Commodities, and happy holidays to you. And tune in later on today for Commodities Edge. That's coming up at 1 p.m. in New York, 6 p.m. in London. We'll also dig into those carbon offset markets as well, so don't miss that conversation. Coming up on this program, Fabrice Montagna, Barclays chief UK economist, will be joining us next. The BOE pretty much does nothing. Brexit deal should be coming ... soon, although you have some putting 50% possibility of a deal getting done. The markets feel more optimistic. We'll break all of that down. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Live from New York, I'm Alex Steele. Guy Johnson's off today. We're going to count you down to the European close on Bloomberg Markets. Here's everything you need to know from Europe at this hour. The COVID spread. French President Emmanuel Macron tests positive, while Europe should roll out the vaccine on December 27th. And Bank of England's warning. Central bank says tighter restrictions will hit the economy harder than expected in the first quarter, with no mention of negative rates. And a Brexit deal within days. European Parliament sets a Sunday deadline for negotiators to reach a post-Brexit trade deal. Michel Barnier sees a possible deal on Friday. So let's get into the market action here. In the U.S., the story is like a stimulus deal is coming, maybe, and it feels the same way here. Brexit deal is coming, maybe, and that definitely having an impact on the markets. European stocks are higher. You have utilities, you have technology leading the way, so a little bit more of a cyclical feel to the markets. I wanted to point out euro sterling here down 0.2%. So we're off the lows of the session, but nonetheless, you're still looking at a stronger sterling, which obviously is hitting the FTSE down by about 0.2%. You're seeing some cautious buying here on the 10-year. No mention of negative rates, like I said, from the BOE, really standing back, kind of waiting for Brexit to play out as yields are down by about 1 basis point. And I said to pick out Bitcoin. We just talked about it. Still seeing another record high at 22,000. Is it risk on? Is a safe haven? That's just kind of permeating in the markets as well as we're looking towards those Brexit hopes. Also, the vaccine hopes. German Chancellor Angela Merkel held a video conference with BioNTech's CEO earlier today, who made a very promising announcement about the possible vaccine rollout if the European Medicines Agency gives the green light.
Entering a very exciting period. If we get approval from European authorities, we can soon begin deliveries for our vaccine, if possible, before the end of this year. Our employees will be working over Christmas, so it's really possible for the vaccine to reach every country, and every country can start immunizing those who need priority help.
And of course, behind the U.S. and the U.K., so a lot of impetus there. I want to get Bloomberg's Emma Chandra in for more as well. Hey, Emma.
Hey, Alex. Yes, the European Union now really pushing for speed. Leaders struggling really to explain to their citizens why they're still waiting for a shot that's already being rolled out in the UK and the US, as you mentioned there. It's a particular sore spot, of course, given the Pfizer-BioNTech vaccine pioneered in Germany. And so we heard from Ursula von der Leyen today, the European Commission president, tweeting that vaccinations in Europe will begin from the 27th of December. So really expecting an approval for the vaccine in Europe. Now, despite this positive news on vaccines, we did hear today that another leader, a G7 leader, Emmanuel Macron of France, has tested positive for COVID-19, the third G7 leader to test positive for COVID-19. We hear he's experiencing mild symptoms and is isolating whilst continuing to work. What is interesting here is that his diagnosis impacting other European leaders. So the Prime Minister of Portugal, the Prime Minister of Ireland and Spain's Premier also having to restrict their movements because of recent contact with Macron. Let's also switch up the board because let's talk about Denmark. Hearing there that a partial lockdown to be extended to be a nationwide lockdown. There we're going to see restaurants, bars and gyms close nationwide. Also, schools are going to shut for all of those children above 5th grade. And in the UK, hearing today from the Chancellor of the Exchequer, Rishi Sunak, saying he's going to extend that furlough scheme, the government help for employees, part paying some of those wages. That's going to be extended into April 2021, really saying the economic impacts of that second lockdown we saw here in the UK, they're due to last for much longer, some long-lasting impacts there, Alex.
All right, Emma, thanks so much. Really great roundup there. Speaking of the Bank of England keeping its monetary stimulus unchanged, waiting for the outcome of the trade talks between the UK and the European Union. So for more, we're joined by UK BOE reporter David Goodman joins me now. David, what did we learn from the BOE, if anything?
Yes, a quiet announcement we've become used to from central banks. I mean, they kept their main policy levers unchanged, and it's just waiting for some more clarity on Brexit. One thing they did that was interesting, which especially in light of the business support you were just talking about there, is that they extended their term funding scheme for small and medium sized businesses by another 6 months to really kind of help spur lending in the real economy.
Hey, David.
Within a few hours.
David, I'm sorry. We're going to have to cut you off. We're having a really hard time hearing you. Cell phone connections, sorry about that. Bloomberg's David Goodman, but we do appreciate you joining us. Let's dig a little bit deeper then. Fabrice Montagna, Barclays chief UK economist, joins me now. So I'll give you the same question, Fabrice. Did you learn anything from the BOE today?
Listen, just to pick it up where David left it, the Bank of England extended its term funding scheme, and I think that's the main outcome of today's meeting. And it carries much of the same message than the extension of the quantitative easing program decided last month, which basically means, the Bank of England needs to keep an accommodative monetary policy stance for over the foreseeable future, right? So that's the main takeaway in terms of action. When it comes to the content of the minutes, we found it a very entertaining meeting in the sense that the Bank of England reflected on many of the topics that are extremely relevant when assessing the quality of the recovery next year. Think about, the impact on vaccine on the economy. Think about saving rates, consumption, why the UK has done so poorly, compared to other countries. Unfortunately, on all those fronts, there are more questions than answers. But, that makes us think about February meeting next year, think about the May MPC next year. Those are going to be critical in knowing whether, the direction of travel remains a prolonged status quo or whether the Bank of England needs to do more.
Well, and talking about doing more, let's talk about fiscal for a second. I want to break some headlines here for you. The Senate Majority Leader here in the U.S., Mitch McConnell, is speaking on the Senate floor. He's saying the bipartisan funding bill is on the 1 yard line, and he thinks that we could get a deal today, or he says he hopes that there is a deal today. Fabrice, I know you're the chief UK economist, but I wonder how you look at the fiscal actions of different countries, because that's going to really point out to investors which country is going to be able to close their output gap fastest once we get the vaccine. How do you think about it?
Listen, one way to think about it is that the UK kind of stands out here in not having an equivalent multi-year spending program in place or even being discussed. I mean, the UK is still stuck in stopgap policies, such as you mentioned the furlough scheme earlier. We are pretty much in reactive mode, depending on how this second wave of outbreak pans out. But when you look at Europe or when you look at the US, we have much more ambitious spending programs over several years, which, are not about mitigating the downside of this virus, but are about creating opportunity for the future. And I think, your question reflects on how different countries approach, the post virus recovery. Well, I would say the right thing to do at some point is create new opportunities for economies looking forward. And there are many, many challenges, some of them pre-existing the virus. Think about climate change, think about technological transitions. Mm-hmm. So there are many things that governments can do right in an environment where interest rates are definitely super low.
So can the BOE do anything with that? I mean, the negative rates thing has been floated for a while. Is anything that they do going to help the scenario that you just laid out?
Yeah, listen, the negative rate discussion is not showing much progress because the Bank of England still needs to produce the results of its own survey about the bank readiness to negative rates. And we think that will likely come in February when the Bank of England has a monetary policy report and a press conference to explain all that. We think there's nothing wrong about negative rates or an additional round of stimulus. You know, the way you can look at it is that with a status quo, both on the fiscal side and the monetary policy side, you will experience a certain type of recovery that will most likely not be very impressive with medium-term scarring. You know, I mean, we estimate something around 5%. That's the gap between pre-virus forecast and our current forecast. So quite a large scarring, you know, left after the virus. But monetary and fiscal authorities can decide to move the economy into a higher growing equilibrium. And that means, you know...
Oh, it looks like we're having technical difficulties there. I'm just going to blame the storm. Can I just do that? Even though he's in the UK, I'll just go ahead and do that. Fabrice, sorry we couldn't finish that conversation. I did want to get your take on Brexit, but we appreciate that, Fabrice Montagna of Barclays. Okay, coming up, Peter Mendelsohn, former EU Trade Commissioner and former UK Business Secretary, will be joining us. Get his insight about politics driving that Brexit deadlock. Can we really move closer to a deal here? Talking about moving closer to a deal, Mitch McConnell speaking on the Senate floor. Here are some of the headlines. He says they have yet to nail down every detail on relief. They say the bipartisan virus relief deal, though, is close at hand at the one-yard line. Also says hope to have a deal sometime today. Markets, I got to tell you, not moving at all. The S&P off the highs of the session, but not really moving on these headlines. Maybe we're looking through all of that to price in a vaccine.
For millions and millions of our fellow citizens. So for the information of all senators, we're going to stay right here, until we're finished, even if that means working through the weekend, which is highly likely. And if we need to further extend the Friday funding deadline before final legislation can pass in both chambers, I hope we'll extend it for a very, very short window of time. Our citizens can't afford for us to get bogged down.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Live from New York, I'm Alex Steele. This is the European Close on Bloomberg Markets. Well, the European Parliament is setting Sunday now as the deadline for negotiators to reach a Brexit trade deal. UK Cabinet Office Minister Michael Gove tells lawmakers at the moment I think regrettably the chances are more likely that we won't secure an agreement, less than 50%. Meantime, the UK is announcing it will extend its furlough program until April for 2021. Joining us now from Brussels is Bloomberg's Maria Tadeo. I mean, honestly, I can't get my mind around it. So Gove says 50%, but the rhetoric otherwise seems relatively positive, like Barnier sees us, inching towards a deal. Where are we in reality, and where are the sticking points?
Yeah, Alex, and that is actually a very good point, because even though we hear, especially from the UK side, this is less than 50% likely, the reality is that here in Brussels, talks have been happening around the clock. And when you go quiet and when you don't actually get leaks and you don't really know what's happening inside the room, that's actually a good thing. You don't want this to be shot down. You don't want it to be killed before it can fly. So it does show that they have, to some extent, entered the tunnel. That's the diplomatic terms for really the final stretch of a deal. Now, in terms of where we're at, we know that, and this is interesting, by the way, the head of the European Commission did say that the governance of the package, that was an issue that had been to some extent resolved, and this really much comes down to the fish and the level playing field, and it's quid pro quo with one and the other. If they move on one thing, the European will move on something else. But again, the technicalities and the detail haven't really come out. I wouldn't read that as a bad thing. If anything, it's a good thing. The fact that they're actually working, nothing has leaked.
Fair enough. Fair point. Maria, I'm wondering, the fisheries seems to be the sticking point. It seems like there has been some movement towards a transition period, towards the access, et cetera. Can we get a deal with something kind of mushy on fisheries?
Look, it's also key to point out that this idea that the fish and that this is going to fall on fish, the Europeans simply don't buy it. They do believe that this is UK spin, because this is the only area, perhaps, where they have the upper hand in the negotiations. If the Prime Minister is going to claim a victory, he's going to do it on the fish. What I hear repeatedly is that this is not going to fall on fish. It is true that the Brits wanted quota that could be talked about and negotiated on a yearly basis. The Europeans want something much more longer than that. Initially, they wanted 10 years. That could move to an area of compromise too, but this is not just about the fish. That's not really how it feels very much on the ground. It's still the idea of the level playing field and that equal ground when it comes to the future trade and what kind of access you want into the single market. And that will also mean what type of access the Europeans get into the fishing waters.
All right, Maria, I really appreciate your reporting, Maria Tadeo, joining us in Brussels. So let's talk about the political dynamics driving those Brexit talks. Peter Mandelson, former EU Trade Commissioner and former UK Business Secretary, joins us now. Lord Mandelson, thank you for joining us. What Maria was saying, that the less you hear, the better, because it means everyone's kind of on lockdown, so nothing leaks. Is that true? Like, the less you hear, the more optimistic are you?
Yes, I think that is probably a strong, sound perception. Look, the UK Cabinet Office Minister that you quoted, Michael Gove, may be saying the chances of success are at 50% or less. But of course, he personally, and everyone knows this, is very strongly in favor of reaching a deal. And he's predicted privately that there will be a deal. And he, along with the other most senior member of the government, aside from the Prime Minister, the Chancellor of the Exchequer, is also known to want a deal, because they know better than anyone else, possibly even better than the Prime Minister himself, what the very damaging consequences would be for the UK economy if we left finally the transition period from the European Union without a trade deal. So although nothing is in the bag, absolutely not, I think there are greater hopes for success than perhaps Mr. Gove was implying.
You've been in negotiations before. How do you sort of keep faith, like be able to go back to your side and say, this is what I got, and still give a little to the other side? What's the wording, et cetera, and the fine line that you have to kind of thread here?
That you don't compromise on principle, but that you do find another route to the goal that you are seeking. So that transition periods become very important in a range of renegotiating fishing quotas between 1 year and 10. You find somewhere around about 6 or 7, or say, or even 5, and so it goes on. On the other issue, to do with the level playing field, and that is Britain maintaining the sort of regulatory gold standards in relation to the environment, labour market, and state aid issues. There, I think the principle is now accepted by the British government that there needs to be a level playing field, there needs to be British compliance, and that there should be no regression back from the standards that Britain operates at the moment. But there was a quibble about whether Britain should adopt and implement every dot and comma of every change in regulations and standards made by the European Union in the future. And I think actually at first the European Union set the bar too high in what they were demanding. I think it's right that they should now say, well, if you want to diverge, then we should have the right to introduce some sanctions or tariffs, but those would be subject to arbitration. We shouldn't unilaterally impose them. I don't think the European Union was ever going to maintain such a rigid position. I think it's thrown it in now, that flexibility for negotiating purposes. Probably they always intended to do so, but that helps the British side reach an agreement.
So let's pick up on that a little bit in terms of the monitoring. Something that I read a lot about fisheries is that it'll be kind of like a regular check-in, monitoring the deal. It'll be like a rolling situation. Would you agree to something like that if you were in the room? Because as an investor, I have to wonder if there's just going to be like a persistent uncertainty overhang that can't be good for either side.
I don't think it's going to be quite like that. You're not going to have a sort of mud wrestling going on over fisheries or any other issue on a day-to-day basis. But I think there is one very important aspect of this, and that is whether the British government, and the Prime Minister in particular, Boris Johnson, is really committed to and fully intends to uphold both the letter and the spirit of an agreement once he reaches it. I think there is real concern on the European side that he'll sign up to something one day, and then as the weeks and months pass, he'll start wriggling around and trying to move away from an agreement which he's already signed up to. And that will plunge both sides into eternal tension and friction and endless arbitration and argument about the implementation of it. That is why, in my view, the European side is belt and bracing this agreement. Once it's made, they want to really reduce and restrict the latitude that the British side have for moving away from it. Because the Prime Minister, I'm afraid, does take a rather sort of fly approach to these matters. You know, he is known for being somewhat erratic. Now, the European side is nervous about that, and that's why they're drilling down hard into the detail.
That's an excellent point. To that point, is there anything that Boris Johnson could technically say or do that would make them feel better?
One thing, the best thing he could do at this stage is not get engaged in the negotiation himself. This is best left to technical experts. It's best left to people who know more about negotiation and can find, you know, the areas of flexibility and compromise. As one Irish former head of government said, there's hope for success in this deal as long as there are no more dinners. That's a reference to the dinner that Boris Johnson had in Brussels the other week with the President of the Commission, Ursula von der Leyen, which started badly and went downhill after that, after Boris Johnson had opened the discussion with the President of the Commission by demanding that the European negotiator, Michel Barnier, be stood down and removed from the negotiation altogether. She said, that won't happen, but let me ask you, Mr. Johnson, what exactly are your new proposals that might enable us to reach agreement? There weren't any. And they then nonetheless pursued a 3-hour discussion over dinner, you know, for the sake of it, because it needed to happen. But then the real negotiation resumed the next day and the day after amongst the technical negotiators. And that's how this thing will be done. It won't be done by Boris Johnson and Ursula von der Leyen negotiating. They can sign it off, right? But the real negotiation has to be done by others.
Stay out of it. Interesting. I wonder what the U.S. can also learn from that. Thank you very much, Lord Peter Mandelson, former EU Trade Commissioner and former UK Business Secretary. And here's one other fallout from Brexit here. These last days of the year are shaking up London very much, and it's a position as the country's economic growth engine. Now, the city is already struggling to contain the resurgence of the virus, which has inflicted a bigger hit on the job market on the city than it has in other regions. Now, on top of that, global banks are shifting people and assets away from London to other European cities, all because of Brexit. London is the world's biggest exporter of financial services, but now there are a lot of questions about how well the city can adapt after decades of spectacular growth driven by the influx of global capital into banks, property, and the businesses that cater to the financial hub. Yikes. This is Bloomberg.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
There is a need and a clear need for me to spend money. I need to spend money to boost the economy, the necessary push. And therefore today, as of now, and for this fiscal, I shall not worry about the deficit number.
Live from New York, I'm Alex Steele. This is the European Close on Bloomberg Markets. And here's another not-so-sweet story that caught my eye. So Christmas is greeted a lot with mulled wine, mince pies, but apparently demand for chocolate appears to have declined this year. The Association of the Chocolate, Biscuits, and Confectionery Industries in Europe, this is a real thing, whose members buy more than half of the world's annual cocoa production, said it sees lower demand for cocoa containing products this Christmas due to those lockdowns. Prices in New York, I should point out, if you saw from that chart, is actually down by about 10% from last month's highs. I'll eat it. I'll eat all the chocolates. I have no problem with that. And staying with me on commodities here, tune in today for Commodities Edge coming up at 1 p.m. in New York, 6 p.m. London time. A quick check-in here on the markets as we're heading right for the close. Not a lot of movement happening here. You are seeing higher equities for European stocks. FTSE also getting hit because you have a stronger sterling. But it's materials and it's tech that are leading the way in European equities. Even the DAX eking out by 1% gain. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you? Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Live from New York, I'm Alex Steele. Guy Johnson is off today. This is the European close on Bloomberg Markets. Stocks finishing trading in Europe. There's just one more day for a full week in 2020. Anything that gets us closer to 2021 is fine by me. The overall theme here has to do with what we're seeing with Brexit. Maybe we're inching closer. There could be a deal by tomorrow, according to some officials. UK officials, they may be less optimistic, but nevertheless, that feels to be what's permeating a bit within the markets. European stocks ending up by about 0.4%, with materials and technology leading the way. No doubt, if you get a Brexit deal, you get a higher cable rate, higher sterling, and that's going to weigh on the FTSE, the DAX, and the CAC. Also being able to eke out some kind of gain. The CAC not really, though. You're looking at Macron did test positive for COVID, so he is quarantining currently, but the DAX holding on to its lead by about up 0.9%. Again, it's the cyclicals that are really leading the way. Let's dig a little deeper into some of the currency moves as well as the individual stock moves and toss it over to Emma Chandra. Emma.
Thanks very much, Alex. As you said, let's go cross-asset here. I wanted to start actually with Bunds and with Germany, as of course, hearing today that they're about to sell a record amount of federal debt. That happening next year, close to 500 billion euros. This, of course, as it looks to prop up the economy as the coronavirus pandemic really enters a second year. I know none of us really want to think of it as entering a second year. Still not much reaction there in Bunds. Big reaction actually in the Norwegian krona today. This, as we heard, the central bank there really moving against the global grain, saying that it might look to raise interest rates. That's something we don't hear very often. Raise interest rates sooner than it had expected. Gain at about 0.8% against the euro at the highs today. Also wanting to mention the UK, of course, right here in London, hearing from the Bank of England, unanimously deciding really to wait and see, but no mention of negative rates. Wait and see when it comes to monetary policy, of course. And there it seems to be that, of course, the bigger impact or the bigger market catalyst is, of course, Brexit, something you were mentioning earlier in the show. Taking a look here at the pound. This is the pound against the dollar, heading for its fourth day of gains and its best week since March. We're hearing that a Brexit deal is in the final stages and fairly optimistic tones, hitting at about 136 at the highs today. Now, I'm showing you a 7-day chart, though, because I wanted to take you back to where we were really about a week ago. We were waiting for that dinner between Ursula von der Leyen and Boris Johnson, the dinner that your guest Peter Mandelson said earlier was essentially ill-fated, and it really was. After that dinner, we saw the markets get jitters, we saw the pound fall, and we've really gained a lot of ground since then. Let's return to equities and take a look at things by a sector basis, certainly looking at the Stocks 600 and what is leading there. Look, only 3 sectors there in the red today. Look at what is gaining. It really is a bid for cyclicals, the miners, retailers, all rising. Perhaps Brexit news, but also that good news, I guess, that we might be seeing a vaccine rollout in Europe before the end of the month. Look at retail gaining there around 2%, and it really is broad-based in Europe in retail. We're looking at the likes of Kering, which owns Gucci, gaining, also Zalando, a big e-commerce company, and a UK high street giant Next, all gaining there. Also, media stocks up around 1.4%. WPP, a big gainer there. This, as it says, it's going to save a lot of money because of the way its workers have changed the way they work during this coronavirus crisis. Essentially, they're not spending on hotels and travel. So WPP doing pretty well then. Another few movers for you. I wanted to mention Rio Tinto also gaining today, getting a new CEO. Their CFO moves to the CEO position from January. Also, TalkTalk, that's a big UK telecoms company. That is going to be taken private. $1.5 billion deal there to take it private, led by private equity. And ending here on VW, we obviously had some pretty poor news for the European auto sector today, hearing that European car sales fell again on a monthly basis. But VW also doing pretty poorly today because that diesel emissions scandal rearing its head again as a top European court, ruling that the technology it used to help bypass diesel emission standards went against EU rules. Alex.
A great roundup, Emma. Really appreciate it. Thank you very much. That's your look at European markets. Let's talk about the car makers a little bit more. Joining us now from Frankfurt is a Bloomberg auto reporter, William Wilkes. Hey, William, is this the bottom in badness for car sales out of Europe?
Unfortunately, it's probably not the bottom for car sales out of Europe. Car sales are down almost 15% on the year in November. But during that month, Germany, the biggest car market, had kept dealerships open. As you've probably seen, the virus is getting much more serious in Germany, and Angela Merkel's introducing a hard lockdown this week, and that means dealerships are going to close. So I think December is likely to be worse than November.
Which car maker is going to get hurt the hardest? Are the stocks reflecting this?
I think Volkswagen is among those that's going to get hit the hardest, but they're all hit by this. Fiat Chrysler is doing slightly better than others. I think that might be because they had harder falls in Italy, where they sell much of their cars earlier in the year, and there's still some pent-up demand there, but it hits everyone, really.
When we come out of this, what cars are going to sell the most, and who's going to be best positioned, considering that we're having much stricter rules on emissions from the EU, not to mention the UK that wants to just phase out all gasoline-powered cars in decades? Who's going to be best positioned for that?
Volkswagen are bringing a lot of electric cars onto the market. There's going to be a real push by the German manufacturers next year. I think there's a lot of incentives in various countries for electric cars. So I think the manufacturers that have the best electric car offering next year are going to be in a good position to benefit.
We really appreciate it, William Wilkes. Thank you very much, Bloomberg auto reporter. Some breaking news here in the U.S. when it comes to stimulus, talking about deals. You now have the minority leader in the Senate, Chuck Schumer, saying that they're putting the final touches on virus relief deal. He's eager to deliver a virus relief, and they're just hammering out the few issues. You heard earlier from Mitch McConnell, who was saying that the stopgap should be for a short time, and hopefully there'll be a deal by the end of today. But working through the weekend is highly likely. It seems everyone's committed to staying in D.C. Until we get a deal from them. $900 billion is now it's being floated a little bit. All right, well, the Swiss National Bank is renewing its pledge to use currency intervention, something you don't hear very often. That's all in spite of U.S. criticism. Earlier, we spoke with SNB President Thomas Jordan and asked him how to respond with the U.S. move to label Switzerland a currency manipulator.
Switzerland or the Swiss National Bank, we are not currency manipulators. We are looking forward to a constructive dialogue.
All right, joining us now is Derek Halpenny, Head of Research for Global Markets at EMEA at MUFG. It's good to see you. I laugh because they're like, yeah, we're just going to keep doing it. I don't really care. What's the potential for more dollar downside here? Because in so many ways, this is a dollar story.
Yes, I think it's also a story of having reached the lower bound and capacity on rates that you're only left with this alternative. And, I do have some sympathy with the SNB view. Yes, it's currency intervention, of course, but to argue that they're trying to gain a competitive advantage through movement in exchange rates, I think that's definitely a very tall stretch of the imagination. Just looking at the performance of currencies in the G10 space year to date in 2020. The Swiss franc is the second best performing G10 currency. So it's had a very, very good year despite the substantial intervention. That, again, very much took place in the very extreme period around the collapse in asset prices when COVID hit in the first half of the year. They've been a lot less active since then. And I think that just reinforces the view that it's a policy step rather than trying to manipulate the currency.
So, exactly. So to that point, it really then, if we just focus on the dollar, what's the next downside catalyst for the dollar? Like, is it going to be the stimulus deal that we may get today? What is it?
Well, I think the big last macro event was yesterday on the Fed. And I think the door has been opened for the current trend to be maintained. Obviously, we've got the Brexit deal that looks like it's about to be announced, and of course, the fiscal stimulus package in the US. But I think that the markets have all been largely positioned for that. What they really wanted was clarification from the Fed that next year we will not really be in a situation where we might get a change in policy, because that's the real catalyst for this US dollar move. It's the fact that negative real rates in the US will be a very important foundation for the US dollar to continue to weaken. And the message from Powell yesterday was that certainly will be the case.
Do you need a stimulus bigger than $1 trillion? And do you need a Biden stimulus in the first quarter to keep that going?
Well, you know, as somebody who forecasts FX, I do get quite uncomfortable when I see such, you know, profound consensus one way, and that's definitely the way we are for 2021. There are, of course, risks, and you know, the rollout of vaccines, which has been a very big catalyst for the optimism for next year. You know, there are still a number of uncertainties about that, and I think that's something that will, I think, convince policymakers, both governments and central banks, to keep the foot on the gas in terms of policy and fiscal stimulus. And certainly to date, governments and central banks have been doing just that. So is it needed? I would say, given the risks over the next 3 to 4 months, I would say yes. Yes, I think it is needed.
So let's turn to Brexit then, because I'm going to try and marry the two topics here. Let's pretend that we get a deal. Let's pretend that we don't need to talk about port congestion. There doesn't need to be stockpiling of stuff because you don't know what the tariffs are going to be. If there's clarity, we did get the EU recovery fund. There's going to be voting on that today. You continued backstop from the UK government for closures. If we eliminate these risks, what kind of upside might we see?
Well, I would say, you know, just based on the momentum in the market of late and the performance and the betting markets that suggest about 85% priced, I think a lot is priced now. You know, we're close to fully priced for a deal. You've touched on some of the elements of uncertainty. You know, what kind of grace period will the deal include in terms of suspending customs declaration obligations at the beginning of 2021. Certainly, I think that would be part of any deal, because otherwise there would be significant disruption at the beginning of the year. Assuming all of what you've said, I think certainly, you know, very quickly we could test 140, but I'd be quite concerned and would be very cautious about suggesting any further upside over the short term. Let's not forget a Canada-type deal a couple of years ago was kind of enough to shock the markets into what's coming in terms of the trade frictions that would go with that. And now that's the best case scenario that we're going to get. And it will involve trade frictions. And that is going to be a drag on growth for an economy that has been hit the worst from the COVID outbreak this year. So, you know, the outlook is still not particularly favorable, in my view, for the pound in 2021.
Okay, can you imagine if the Canada deal was the worst case scenario? Derek, thanks a lot. We really appreciate it. Happy holidays. Derek Halpenny of MUFG. All right, let's talk about where European stocks are settled here. You have Euro stocks off the highs of the session as we settle out. The FTSE actually down to the lowest, down by 0.3%. Volume, though, really light. Volume in the IBEX light as well. The DAX having pretty solid volume, but closing off its highs up by 0.7%. One more day for the last full week of 2020. It's too early to say we made it, but we're so close. This is Bloomberg.
Hiyo mkokoteni ya stima nikaipata naweza sikia vizuri sana kwa sababu inatumia nguvu sana.
The advantage of the electric handcut over the manual conventional handcut is that one, it increases the productivity level of the users. Two, it is eco-friendly in that it does not pollute the environment. Three, it increases the income level for their users in terms of loading capacity and also in terms of productivity.
SAS and Microsoft are joining forces to further shape the future of AI. Now you can run workloads that work for you. It's time to reimagine analytics in the cloud.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
I think consolidation has been put forward for 2 or 3 years. When this will happen, I think Société Générale will be a protagonist, not a prey.
That was SocGen Chairman Lorenzo Benismaghi speaking exclusively to Bloomberg's Francine Lacqua earlier today. Joining me now from on consolidation and challenges faced by banks is Bloomberg's Sonali Basak. Sonali, what was your take on the dividend cap here?
So you have the European regulators coming off much harder than the U.S. regulators. But of course, even in the U.S., there was a cap. Now we're facing this next stress test tomorrow. And it's really crazy to even think about the fact that we have to do this. But the outlook is getting better for the U.S. banks. With that said, there are still a lot of hurdles for these banks. And no matter whether they're able to return capital to shareholders or not, there's going to be a lot of concerns about how they use that money. Is it for the shareholders? Is it for the employees? Is it for, in terms of bigger bonuses, bigger pay? Or more importantly, lending at a tough time where we're seeing conditions tightening in certain places?
Do we know, are investors buying stocks of banks for dividends right now? Because the idea is we get consolidation and we get higher dividend payouts in Europe. There's going to be a flood of money into the sector. Is that a thing on either continent?
Well, you care about the return, right? You care about the dividends for sure. But at the same time, if you look this year, Alex, you know that these banks have been so depressed, and it can't get worse than what we saw this year. That's the hope.
Don't say that.
Well, that's the hope. That's the feeling. This amazing exuberance, right? But even if it can't get worse than a global pandemic, there's a lot of concerns into next year, and you've seen the Federal Reserve voice those concerns. Concerns about the commercial real estate market, for example, is something that people, frankly, don't talk about enough. Concerns about the money market, for example. We had Seth Carpenter of UBS pretending some hiccups in the future, if you want to take a listen to what he said here.
Easily see some wider bid-ask spreads in repo markets as banks start to worry, is it really worth this sort of low value, low margin use of my balance sheet when there's just more and more and more and more reserves coming on? So I think there's a real chance of some volatility, some frictions in money markets, probably as the Treasury runs down its cash balance and pulls down bills outstanding, you'll probably get some richening there as well. So it's sort of setting up for a bit of a storm in money markets, I think.
So that is a terrifying thing for banks and regulators to take a listen to after the big intervention we saw back in March. People were calling that moment the LTCM moment because hedge funds were so levered, and we're seeing hedge fund leverage rise yet again. But we're not seeing the banks want to step in, and so obviously you are going to see some caution from the Fed, some concerns for the banks moving into next year.
Right. So it leads me to the stress test, is in how much we know the U.S. banks are better than the European banks in terms of their capital buffers. Do we need the stress test on the big banks? Do we need them on hedge funds? Do we need them on private lenders?
Well, that's a great point that you make, and it's something that Janet Yellen particularly has been very concerned about, this shadow banking market. And so into next year, her moves and any potential future regulators, if they start to crack down on that in a bigger way, will be a very significant thing for the market.
Well, that's a fair point. Do you have a read yet on Wall Street as to how they're looking for her to do that? Because she doesn't have unilateral decisions, right? So where she can affect the most change with that?
Well, one big concern is that she does it through the banking system itself and starts to put bigger constraints around the banks.
Higher leverage ratios, that kind of thing?
Exactly. And so that is one major concern. But there's no indication yet. It's very early still. We don't really know. But we know that the bank regulation won't be so extreme, but it also won't be as light as maybe some of them would like.
Great analysis. Looking forward to that. Bloomberg Sonali Basak, thank you very much. All right, coming up, we're going to bring you the latest on stimulus talks. Senate Majority Leader Mitch McConnell earlier said it is highly likely they'll be working through the weekend. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
feel really lucky, having stared into what felt like an abyss for travel, and then to kind of rally together with thousands of people and rebuild the company from the ground up, something that I think is stronger than it ever was before the pandemic.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Some breaking news for you. Banco de Sabadell is naming Cesar Gonzalez Bueno as the new chief executive officer. That was widely expected. The Spanish lender is trying to sort of move on and forge its own path after some short-lived talks combining with a rival. Gonzalo Bueno comes from, he did the UK arm. He was on the board of Sabadell's UK arm. He has experience in digital and has expertise there, and all that speculated to be part of why he would be named CEO. So again, that breaking news. Sabadell names Cesar Gonzalez Bueno as the new CEO. Let's get to some breaking news on Brexit. Also, now apparently the UK's aim is for Parliament to have a say over Brexit deal. That's according to Michael Gove. He also says that talks could go on until after Christmas. So a little bit of walking back here from Michael Gove. He was more skeptical of a deal earlier today as well, thinking a deal is about 50% done. Let's turn to the latest negotiations on what's happening in the U.S., talking about a deal, I mean, inching closer to a stimulus in D.C. Senate Majority Leader Mitch McConnell sounded a touch optimistic earlier today.
The bipartisan bicameral agreement appears to be close at hand. The outline that I've been discussing with Democratic leader Speaker Pelosi and Leader McCarthy would get another huge dose of bipartisan support out the door as fast as possible. We've yet to nail down every detail, but in broad strokes, we've been discussing the targeted second round of job-saving Paycheck Protection Program that Republicans have sought since last summer.
Joining us now on the phone is Bloomberg Senate reporter Stephen Dennis. Stephen, okay, some positive rhetoric. What's the reality here? Are we actually going to get a deal?
Yeah, I think we're, both parties' leaders say we're very, very close. McConnell said the 1 yard line. Schumer said, the Democratic leader said that none of the remaining issues are big enough to bring down this deal. Of course, we still haven't seen text, and they are still wrangling over several key issues. Not big issues as far as hundreds of billions of dollars, except for, there are things that both sides want. You have some Republican senators who want to make sure that those Fed facilities that Secretary Mnuchin has ordered to be shut down on December 31st, they want special language in there to clarify those cannot be restarted. Some of the Democrats are not so happy with that. The House Financial Services Committee wants sort of an investigation into how Mnuchin shut down those facilities. Mm-hmm. And this is all, it's the kind of language that could potentially, cause a few hours delay here and there while they try to finesse it. There's also money that Democrats want for food stamps, and there's funding for state and local government emergency spending for COVID relief. The Democrats want that percentage to go from 90% to 100% as far as so that the state and local governments don't have to match these emergency funds. Republicans don't want to do that. So, these are the kinds of things that they're still working out, still wrangling over. But, sometime either today, tomorrow, or this weekend, all sides seem to be pretty confident they're going to get there before the beginning of next week.
Yeah. Stephen, fingers crossed on that. Stephen Dennis, a Bloomberg Senate reporter, thanks a lot. I should point out that the S&P did not even twitch at all when all these good headlines came out, but it has rolled over a bit. It is just up by about 0.3%, so right around the lows of the session here. That wraps it up for me in New York. Guy Johnson will be back tomorrow. Coming up, Dr. Mark McKellen, former FDA commissioner, will be joining Balance of Power with David Weston on Bloomberg Television and Radio. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements we can actually have the superb measurements that we expect of sea level rise, but also the waves, the significant wave height, which is the top 1/3 of the waves if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York to our Bloomberg television and radio audiences worldwide, I'm David Weston. This is Balance of Power, where the world of politics meets the world of business. We start, as we do every day pretty much, with a check on the markets. With that, we go to Kaylee Lyons. Kelly, just looking at it, looks like equities are up a little bit, but not a whole lot.
Yeah, not huge moves today, David, but there definitely is a risk on tone. A lot of optimism out there, it seems, on the prospects for a fiscal aid package coming out of Capitol Hill. That seems to be offsetting any kind of risk-off sentiment surrounding the fact that we are continuing to see weaker data. 885,000 Americans filing for first-time unemployment benefits last week, but stimulus hopes seem to take precedent over that. You have the S&P and the NASDAQ at all-time highs. Within the S&P 500, it's materials that is the best performing sector. That has a lot to do with the fact that copper is rallying up 1% today. And I would note, too, David, that the dollar continues to weaken. The dollar right around its lowest since back in April of 2018, weaker against everything in the G10 space. The Fed yesterday doing nothing to change that equation. And I would point out, David, that the Fed didn't change that much of the equation for the bond market either. There was a lot of talk going into the Fed decision that if it disappointed the markets, didn't extend its maturity, that you could see the 10-year yield move back above 1%. That did not happen, though we are seeing yields ticking higher today by about 2 basis points. Still, though, sitting around 93 basis points. The expectation seems to be that even though the Fed didn't make the move yesterday, it will do so in the future, David.
Kelly, thank you so very much. That's Kaylee Lyons reporting on the markets. Well, the Fed yesterday, as Kelly was talking about, saw at least some brighter prospects ahead for the U.S. economy in the new year. But at the same time, Fed Chair Jay Powell said that they are not going to back off of their aggressive bond buying program until they see what he called substantial improvement in the economy, both with respect to employment and with respect to inflation. To lay out exactly what this does for the economy, and for that matter for the markets, we turn now to BlackRock's Rick Reeder, where he is Chief Investment Officer for Global Fixed Income, as well as the head of their global asset allocation. So, Rick, thanks so much for being back with us. I guess my basic question is, did the language they use really do something to support the economy?
I mean, they're on a persistent movement to support the economy. I think there was a lot of analysis yesterday that said that the Fed was hawkish because they didn't increase the weighted average maturity, or they didn't actually increase the asset purchase program. Anybody who describes this Fed as hawkish is so misguided. This is a Fed that is just going to continue to be there and be as accommodative. They said they're going to continue the asset purchase program at least as large, both in treasuries and mortgages. By the way, I don't even think they need to increase mortgages at all. In fact, I think they could shrink them. But they're going to keep going, and they're going to be incredibly supportive of the new administration and fiscal stimulus from here.
Well, let's pick up on that exactly, Rick. Why are they sticking with this allocation for mortgages?
You know, I think the Fed's doing a brilliant job. I don't think they need to do that. I mean, if you think about there aren't enough mortgages to purchase from what they're doing. The banks are dying for those assets. And the levels are incredibly low. And even if they slow down the purchase program, mortgage rates aren't moving higher. The demand for mortgage product is incredible. And then you take the other side of it, the housing market is in incredibly good shape. And if you think about it, one of the things that is a risk for particularly lower and middle income is the housing market is doing so well that you'll continue to see increased home prices, which I would argue that is the one part of inflation that I actually think is real. And quite frankly, it's burdensome to a lot of the economy, a lot of particularly lower and middle income. So anyway, that part I don't, other than signaling we're not going to pull any accommodation. I don't think they need to do that.
So Rick, as I say, the message out of the Fed, I thought yesterday was, we think in 2021 it's going to start getting better, presumably in large part because of the vaccine, which we're hoping for so much. At the same time, there's a real divergence, maybe even a bifurcation in the marketplace, whether it's individuals or it's companies, between some people who are doing very, very well and some people who are doing very, very badly.
Yeah, I mean, David, you hit the nail on the head. Listen, but I think this is, what the central bank does is, its tools are blunt. And a lot of what happens is it lifts financial assets and it creates this bifurcation, as you described. And it doesn't, what the Fed can do is it sort of paves the runway for other policy to come in. Now you really need the fiscal. And the fiscal is where you can direct tax policy, where you can direct where the stimulus gets to, things like state and local, things like healthcare spending, education spending, et cetera, things that can actually close that gap. I mean, now we actually are going to get what I think, particularly when you think about Chair Yellen, I still call her Chair Yellen, the Treasury Secretary, and now you've got functionally two Fed chairs that are going to operate in concert with one another, and that's where you get really effective policy when fiscal and monetary work hand in glove with one another.
So is that constructive, or does that undermine the independence of the Fed? I mean, how closely do you want the two of them to operate together? You've called it sort of pilot and co-pilot.
Yeah, it's a great question. I do believe in the independence, and I certainly know that people at the Fed really believe in the independence of the Fed. However, you do create some coordination. By the way, having where they're not talking, that is a problem. But having some coordination makes sense, particularly as you described earlier. We've got a problem in the country today. We need to put more people to work. Until vaccine starts to really get implemented, we need to put more people to work, and we need to stabilize an economy and employment dynamic that is real. And so, that idea that the Fed's going to neutralize the debt that the fiscal is going to put on. And by the way, I think Larry Summers is going to talk about this. Their paper that they wrote on the system can actually withstand more debt is 100% right. And as long as, and a big part of it is the Fed is keeping rates low, so the interest burden on the economy is not onerous.
Yeah, no question. This goes to Larry Summers' secular stagnation, that the problem we have is too much savings, not too little, that we need to actually be investing and spending some money. The question always is, Rick, isn't it, how do you spend that money? Okay, you can borrow it really cheap, but it depends on how you spend it or invest it.
It's definitely right. I mean, by the way, I think we're at a point in time today, what Larry says is dead right, is the amount of savings. I mean, you think about the liquidity in the system, what's been created, the aging demographic. I know we've talked about for years, pensions, life insurance companies, the ability to fund is extraordinary. Savings do outweigh the assets by a lot. And that's why you're seeing appreciation in so many assets across different markets. But you're right. I mean, there's different return on equities, as it were, return on equity possibilities, depending on how the government spends the money. I actually think we're at a point in time today that the velocity of tax dollars working their way through that comes on the backside of fiscal, quite frankly, lowers the bar for what those returns need to be for those government programs. But like you say, some are obviously much more efficacious than others. And but I truly think that quite frankly, most of the fiscal stimulus you put in today is going to create a velocity and which impacts the monetary base that the Fed has created in a very positive way.
So, Rick, you have two hats at BlackRock, both Chief Investment Officer for global fixed income, but also asset allocation. So put some money to work here. Given that situation, the way you view the world, what's going on, what you expect, where are the investment opportunities? Where is it smart to put money right now?
So it gets harder every day, but I don't know. I feel like coming in every year, it's always hard. So, but I think the equity market's going higher. I think when people look at, when the Fed says we'll keep interest rates down and we're going to leave them down for a long period of time, It makes where rates have gotten to. It doesn't make the Treasury market interesting. Doesn't make, as we said, the mortgage market interesting. When rates stay where they are, that is a direct injection of value into equities and allows companies to finance for M&A, for capex, for R&D, et cetera. So the equity market's going to go higher. I'm pretty convinced of that. And then how do you create balance in the portfolio? I would argue hold some cash. Hold some of your government rate risk, your government the government debt you own in TIPS to get some inflation protection, and then get yield into the portfolio. It's getting harder and harder to get yield, but the credit market, parts of the emerging markets, parts of the securitized market, get some yield, run a bit more cash because it's harder to hedge today given where rates are, and then own the equity market because I think equities are going higher. I don't think hear the story of why equities are fully valued. I think people who just do equities don't see fixed income and don't see the benefit getting to the equity. And I think equities have got some upside to them. Doesn't say we can't trade down for a period of time, but I think they're going higher.
Rick, you led me right to it. If we're looking to diversify our investments, what about Bitcoin? We had Scott Miner tell Bloomberg yesterday, Scott, say he thinks Bitcoin should go to $400,000.
So, I think putting a number on Bitcoin as a valuation is hard. I don't know there's an algorithm. I don't know. I just think, I think there's a demand that outstrips supply today and particularly when you're seeing debt printing, not just in the U.S. and Europe and other parts of the world. So, I think there's clearly greater demand than supply. I think storehouse of value, you're seeing it somewhat in gold today, but I think storehouse of value and I think millennials have definitely adopted Bitcoin is one of the ways you get that storehouse of value. So, I wouldn't say it should be at this price or that price because I just don't know how you could determine that. But it does strike me it's going to be part of the asset, the asset suite for investors for a long time.
Rick, you said that equities look pretty good and maybe going to get better given what the Fed is doing, particularly with the interest rates. What about within equities? Is it time to really make that big rotation away from some of the tech names that have done so well for the last year or two and into some of the more cyclicals if we're anticipating that vaccine?
So I think there's tech and there's tech. I think, like you say, some of the names, particularly big tech, has had a really, really good run. And I think the story of 2020 was ride the coattails of big tech. I think they'll be fine. I think they should still be part of the portfolio, but not as much as they were. But I'm still a big believer. Things like software, semiconductors, things that are aligned with artificial intelligence, cloud, et cetera, data assimilation. You saw play out this week in a number of names that came to the market. I still like those names, but then I like, and take some of that big tech that we've rotated down, go into some of the cyclicals, which will continue to do well. And whether that's in manufacturing, housing, we talked about through home builders, home improvement. And, I actually think, post-vaccine, you're going to see things like leisure, gaming, that there's some real upside. So I do think taking some more cyclical risk and, riding the consumer, because I think the consumer is going to continue to be in good shape. So consumer durables are a winner. And that, I think, I'm not a big believer in there's a big value rotation. I'd rather buy the companies that are cyclically oriented and they'll participate in the upside. Some of those are value and some of those aren't.
Rick, it's always a treat to get to talk to you. That is Rick Reeder of BlackRock. Thanks so very much. Coming up next, we're going to be inching toward that stimulus deal, talking to Don Beyer. He's the Democratic congressman from Northern Virginia. This is Balance of Power on Bloomberg Television and on radio.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Not only do we have the capital required, we have the long-term vision, the ability to focus and execute. And this is really about reimagining transportation, really. And so it gives us a baseline to build from and then expand on.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for Bloomberg First Word News, and for that we go to Mark Crumpton.
David, thank you. A coronavirus relief deal appears close at hand. Senate Majority Leader Mitch McConnell says he's hoping an agreement can be reached today as lawmakers put the finishing touches on a nearly $900 billion agreement. Leader McConnell says it's highly likely the Senate will need to work this weekend and pass a very short stopgap funding bill. Pfizer and U.S. drug regulators are revising guidelines concerning the company's COVID-19 vaccine after rare allergic reactions were seen in some recipients. Officials say 2 people in Alaska who received the vaccine suffered reactions, which were also seen in some vaccine recipients in the UK. This, as an FDA advisory panel is meeting to decide whether to recommend a second coronavirus vaccine. Parts of the U.S. Northeast are digging out of the first major snowstorm of the season. The system dumped a foot or more in some areas. More than 10 inches of snow fell here in New York City. Parts of western New York were buried under more than 3 feet of snow. The storm hit as trucks carrying Pfizer's COVID-19 vaccine from Michigan fanned out across the country, but officials say the weather will have little impact on vaccination efforts. Russia was banned today from using its name, flag, and anthem at the next 2 Olympics or at any World Championships for the next 2 years. Russian athletes and teams will still be allowed to compete at next year's Tokyo Olympics and the 2022 Winter Games in Beijing. It was the most severe penalties imposed on Russia since allegations of state-backed doping and cover-ups emerged after the 2014 Sochi Olympics. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks so much, Mark. Well, it appears that after 7 months of impasse, as Mark just said, we may be getting past the roadblocks to a 4th round of stimulus. Here to bring us up to speed on what's going on is Democratic Congressman Don Beyer from Virginia. He serves as the vice chair of the Joint Economic Committee. So welcome, Congressman. Great to have you back with us. Give us your sense of where this negotiation stands right now. We heard from Mitch McConnell. He thinks they could have a deal today.
Yeah, this is the most optimistic I've been in 6 months, David. It looks like the big hangups have been, as Democrats, we really wanted more money for state and local governments. They've laid off 1 million workers, but the Republicans really wanted this gross negligence shield for liability for companies, and there was just no way of getting over it. So they pulled those 2 out, put them in a separate bill. It's not clear that we'll even vote on that bill. But what's left is about $900 billion, including more money for the unemployed, $300 a week for the next 10 weeks, and another $600 check for people below a certain income level, and probably most importantly, a big chunk of money for vaccines.
So in the nature of a compromise, you don't get everything you want. It sounds like both sides are not getting something that they wanted. Is it enough? And particularly, is it enough for the workers, for the people around the country who are really facing food insecurity, housing insecurity, a lot of risk, and small businesses, goodness knows. I mean, you're a businessman yourself. You built your own business. Is it enough?
I don't think it is. In fact, you look at the initial claims this morning that jumped up to 885,000. and that was, supposedly seasonally adjusted. So we're looking for unemployment, new claims in January, more than 1 million a week. And that's a level we haven't hit since last May. So, no, it's not enough. But once again, this is the art of the possible. And we're going to hit another cliff in 10 weeks when we have a lot of people still unemployed and the unemployment insurance has gone away. So it's a little
raises a question. Which raises a question, Congressman. Do you anticipate the need to come back for more stimulus, perhaps, fiscal stimulus, in the new year with the new Congress?
I absolutely do. Because I think part of our optimism, and it may be misplaced optimism, is that with Joe Biden in place and we see what happens in those Georgia Senate elections, that we get another bite at the apple. And we're also very much hoping that the Republican governors and mayors and county board members finally start beating up the Republican senators about getting money for state and local governments.
Tell me about the situation in your home district in Virginia. Where is the greatest need?
So I'm Arlington, Alexandria, right across the river, and they've seen basically 15 to 25% drops in revenue. A lot of real estate taxes are doing fine. It's mostly the retail sales taxes, gas taxes, things like that. And so they've just laid off a lot of people, and that's why we've been calling it the Heroes Act since last summer, because the people that lose their state and local jobs are the trash men and the child protective service workers and police and fire and zoning. Things get slowed down. So all the things that give us that quality of life.
As you look at the need to build back better, is I think the way President-elect Biden is putting it right now. In the Biden administration, how do you think it's going to be different than managing the economy? What do you look forward to?
I think the biggest thing will be, if we look backwards, and maybe not everybody wants to hear this, but there's a great Bloomberg piece just published last night, a couple of British economists that looked at 35 different countries and whether cutting taxes stimulated economic growth. And their conclusion was absolutely not. And we saw that huge $2 trillion Tax Cut and Jobs Act, and the economy kept growing at the same rate it was before and the same rate basically that it did until the coronavirus. So I think we're going to have a much greater emphasis on investment. So think a big infrastructure package, more money for education, especially those folks who've been left out of the economy, high school education or less. And I'm hoping a much more expansive trade policy that depends less on tariffs and more on new agreements with Europe, with Pacific Rim nations, folks like that.
If the tax cuts may have been a mistake at the time, in retrospect, does that mean in this economy, given the perilous situation, it makes sense to actually reverse some of those and increase some taxes to pay for some of that investment?
No, I think we'll be very reluctant to do that in the short run or even in the middle run. You're right. With maybe 30 million people unemployed, even if we can argue that the 21% corporate tax rate was way too low, I think we're going to be very reluctant to move it back to 27 or 28 until the economy is really moving again. I think most of us think that the austerity measures of 2011 were premature. The austerity measures going back before we were born in 36, 37 were premature. Let's make sure that we're moving back towards full employment before we start thinking about reining in the deficit. Interest rates are close to zero and will be for the foreseeable future. We can afford this in the middle term.
Congressman, it's always a treat to have you with us. Thank you very much for joining us. That is Democratic Congressman Don Beyer of the state of Virginia, Commonwealth of Virginia, I really should say. Okay, coming up, there's a Roku rally going on as they finally get that deal with AT&T. That's our stock of the hour. It's next. This is Balance of Power on Bloomberg Television and on radio.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
With the new administration coming to Washington, changes are undoubtedly in store, from the economy to foreign policy to public health. I'm David Weston. Join me for a Balance of Power special report, a look ahead to the next 4 years, this weekend on Bloomberg Television. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for Stock of the Hour. It is Roku, which has a new streaming deal, which has helped its stock, as I understand it. But Emma Chandra knows the whole story. She's here to tell it to us.
Thanks very much, David. Yes, it is the US's biggest streaming TV provider. That is Roku, hitting a record high today. The stock up some 8% at the highs, paired a little now to 4%, but still, as I said, trading at its highest level since the company went public back in 2017. And as you alluded to there, it really is deal news that is pushing the stock to these highs today. As we heard, it has struck a deal with AT&T to carry its HBO Max app. Now, HBO Max, it's a relative newcomer when it comes to content providers, launching back in May, but it has signed up about 12 million customers since then. A relative minnow compared with Netflix, but that has been a pretty speedy way of signing up customers. And it's pretty timely as well, because what we're hearing is HBO Max due to stream the new Wonder Woman movie on Christmas Day, on the same day that it will arrive in theaters. And that's seen as a real moment to sign up new customers, both for HBO Max through the Roku platform, but also for Roku itself. And Bloomberg Intelligence saying that this could be a way, this deal with HBO Max could be a way for it to push its subscriber or active account base up past 50 million. It currently has about 46 million. And David, Roku been doing very well throughout the global pandemic. Of course, really intensified at the moment. Everybody's staying at home and they need some sort of platform to watch all those movies and TV shows.
That's what I'm spending my time doing. I don't know what you're doing, Emma, but thank you so much for that report on Roku as our stock of the hour. Coming up, the vaccines are on their way, but we've got a rough time to go until we get there. We're going to talk with one of the people who's helping us get there. She is Dr. Sheila Davis. She is the CEO of Partners in Health, leading the way on testing and tracing. That's coming up next on Balance of Power on Bloomberg Television and on radio.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
I think we have a lot to be optimistic about in this country, but in the near term, even with these vaccines, Moderna and Pfizer, we just got to allow them to be given to the people who need them the most, but that's going to take more than 6 months.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We're going to go now to Mark Crumpton for Bloomberg First Word News.
David, President-elect Biden's cabinet picks are beginning to work through the confirmation process. The Senate Finance Committee has sent questionnaires to Janet Yellen, whom Mr. Biden has chosen to be Treasury Secretary, and Javier Becerra is picked to run the Department of Health and Human Services. That could potentially lead to some cabinet members being confirmed on Inauguration Day or shortly afterward. Members of a congressional watchdog panel are asking for an investigation into Treasury Secretary Steven Mnuchin's decision to end Federal Reserve emergency lending programs. In a letter to Treasury's acting inspector general, seen by Bloomberg News, Democrats say Mnuchin might not have consulted with legal counsel and may have changed his position on the programs after Joe Biden won the election. The European Parliament has set a Sunday deadline for negotiators to reach a post-Brexit trade deal as they battle over fishing rights. It's the one major issue standing in the way of an agreement. Officials say this is the last chance for an agreement to be ratified before the transition period expires on December 31st. The European Union's chief Brexit negotiator said today there has been progress, but that this last stumbling block remains. Canada's population growth ground to a halt in the third quarter after travel restrictions and closed borders prevented most forms of immigration. Statistics Canada reported today that the country's population was essentially unchanged during the period, up about 2,700 or just over 38 million. It was the slowest increase in data going back to 1940s.
Thank you so much, Mark. Well, every single day seems to bring new news about vaccines, but also new instances of COVID-19 infections and hospitalizations and, yes, deaths. The question then is, how do we get from the current crisis to the time when we can start to get our lives back together again? Well, Partners in Health is leading the way in that with its pioneering in testing and in tracing across the country. Welcome now the CEO of Partners in Health. She is Dr. Sheila Davis. So, Dr. Davis, thank you so much for being with us. Before we get to the testing and tracing, give us your take on where we are on vaccines. We expect to hear later today from the expert panel on the Moderna vaccine, probably approved tomorrow. How far away are from really widespread distribution of the vaccine?
Thanks so much for inviting me to be here. You know, vaccines, I think we're very optimistic, but still best case scenario, we're a number of months away for having full coverage, certainly in the US, and globally even, we're even much further off, which is really alarming.
So that does raise the question, how do we get from here to there? Because we have a real crisis on our hands right now. Give us a sense of what you are doing at Partners in Health.
Yeah, in the U.S., we've been working closely, certainly in the state of Massachusetts at the invitation of Governor Baker, and then in 11 other jurisdictions in the U.S. who have asked us to come in and help. And we've taken lessons learned from our work around the world in Haiti and Sierra Leone and other places on how to actually do contact tracing as one piece of a comprehensive plan. We really need a strong public health system, and this COVID-19 has illuminated, I think, that in the U.S. we're really lacking a robust public health response.
Well, that's one of the interesting things here. I heard someone say, I think Larry Summers actually said, we've overinvested in private health, underinvested in public health. As you say, Partners in Health originated really in Haiti, but you've done extensive work in other countries, including Rwanda, elsewhere around the world. What can we learn from some of the less developed countries that can really be applied and we need here in the United States of America?
Yeah, I think it's a great question. You know, there's a lot we can learn. We know that other countries that do not have the same investment in health have done much better through this pandemic. And I think a lot of it is because there is a comprehensive healthcare system that does have a public health model that includes contact tracing, that includes much more of people embedded in the community, like community health workers. We still need high-tech ICUs in all the places that we work, but we definitely can have lessons learned from Rwanda, which has done a fantastic pandemic control, and other places, and how do we infuse those into the U.S. health system and really build a system that's not reliant just on hospitals as the pinnacle of all of the healthcare.
We've seen the testing ramp up from very, very modest origins, and now it seems to be moving along in most of the United States. At the same time, I wonder about the tracing part of it, because I know you're very involved in that. We have reports, for example, out of New Jersey, for example, where we had reports from Governor Murphy that maybe 70% of the people contacted don't comply, don't cooperate in helping with the tracing.
You know, I think what we've found is that when we're able to also assess what their needs are, a lot of people are not able to isolate or quarantine safely if they don't have the social support that's needed. People need diapers, people need formula, people need food. So a core component of what we embedded in the Massachusetts program, as well as with other places we're working, is that there's a direct connection to when our contact tracers reach out, which is the advantage of versus a text or some other type of tech option, and assessing, do people need help? Do they need a place to stay where they can safely isolate from their family members? So it really is, it has to be more of a safety net model. So I think most people do want to comply, but many people don't have the ability to have a separate wing in their home or a separate way to have food brought in.
Now, that sounds like a pretty labor-intensive effort. As you say, it's not just a technological fix of figuring out who's got it and who might give it to somebody, but how do we support you? In fact, you have it and you have to isolate or you have to quarantine somehow. How labor-intensive is this? How many people do you have working on this?
You know, in Massachusetts, in collaboration with other members of the state agencies, which has been a phenomenal experience for us, and we've learned a lot, we have now over 2,000 people who are working on this effort. But really, they're people who are picking up the phone, talking to people, you know, assessing what their needs are, and connecting them to existing resources in the state. So a lot of it was not, certainly some new money was infused for the social support efforts, but part of it was also making sure that we're connecting the dots. And if we look at the overall cost of what it costs to have robust public health programs, it's much cheaper in the long run than a few days, weeks, or months in a hospital, which is the most expensive place, certainly, to have care.
How widely distributed is this in the United States? I mean, you've mentioned Massachusetts. I remember the governor of Massachusetts at the news conference announcing early on that he was going to turn to partners and help them on the tracing. How far beyond Massachusetts has it gone?
So we're now currently working in 11 different jurisdictions, and it's anywhere from states to counties to working with mayor's offices. And we're also taking lessons learned and having a learning collaborative, which is an open sourced ability for lessons learned to be shared from Illinois to North Carolina in a way that we're continuing to learn from each other. So we have staff embedded in all of these different places, and they are providing technical support. They're looking at connecting for convening for knowledge sharing. And also we're really committed to advocacy, and that we're using this moment to also look at how do we have a better health system in the US that really focuses on those who need it most and those who have been most disproportionately impacted by COVID-19.
It would be great if we could learn something from this crisis that takes us beyond the pandemic. Thank you so much, Dr. Davis.
Thank
really
you.
Great to have you with us. That's Dr. Sheila Davis. She's CEO of Partners in Health. Coming up, we're going to talk with a former FDA commissioner who is now at Duke. He is Dr. Mark McClellan. We're going to talk to him about the approval that's expected tomorrow of the second vaccine, and that is one from Moderna. That's coming up next on Balance of Power on Bloomberg Television and on radio.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The FDA is expected to permit emergency use of a second vaccine, this one from Moderna, as early as tomorrow. There are several vaccine candidates out there. And to take us through the field right now, we turn to Dr. Mark McClellan. He is founding director of the Duke Margolis Center. He's also a former FDA commissioner. So, Doctor, thank you so much for being back with us. First of all, is it pretty sure, do we think at this point, that Moderna will get approval tomorrow?
David, it sure looks that way. The FDA's analysis of the Moderna data that it presented this morning at the advisory committee meeting, an independent expert advisory committee meeting, was very positive on approval or authorization of the vaccine for emergency use. The issues that are coming up now involve things like the rare side effects that have been observed with the Pfizer vaccine, these allergic reactions, which do turn out to be manageable if serious, and no other big roadblocks are turning up in the discussion so far. So like you said, I expect approval very soon after that meeting based on everything we're seeing so far.
So if that happens, that means we have two horses in this race, one from Pfizer and BioNTech and the other from Moderna. Is that enough, or do we need more? I know Johnson & Johnson is working on a version. Various people are. AstraZeneca's had a little hiccups along the way.
Yeah, we do need more. So this is going to make a big difference, though. The Moderna vaccine expects to be able to deliver millions more doses this month and into next month. So remember, the first priority for vaccination across the country has been frontline healthcare workers and people who are residents or working in nursing homes, who's been really hard hit, including in this latest surge. That'll probably take till the first part of January to finish those vaccinations, and then with maybe 50 million or 30 to 50 million doses of the Moderna and Pfizer vaccines available in January. That'll be many more people vaccinated. You mentioned the J&J vaccine, and I'm on the board of J&J, so I know a bit about what's going on there. That trial is just about completed in enrollment, and so watching to see what happens. And with, unfortunately, so much COVID activity in the country, that means it's going to figure out faster just how well that vaccine works. So that could be reporting out data by late January, early February, and could be available soon after. That's going to be another 100 million doses over the first quarter or so of 2021, if that works out. You mentioned the AstraZeneca vaccine. That's the fourth one that could be potentially providing additional access in the U.S. There have been some bumps in the clinical trials. They're doing some further clinical studies to meet U.S. standards. I expect that one may be approved if it stays on track in Europe first. That'll be some additional data that we can use here. Then that would add to the vaccine availability heading into February, March, April. So perhaps by the end of the first quarter or so, most people who have high risk for COVID, that includes all other types of frontline or essential workers and people in high-risk groups like the elderly or with serious chronic conditions, they could have access by first quarter or so, and then more adults, more of the rest of us into the second quarter of next year across those 3 to 4 vaccines. But to keep that pace, J&J does need to get their vaccine authorized, and the AstraZeneca vaccine would help as well.
Doctor, come back for a moment to the Pfizer-BioNTech, which is the one who's being distributed right now. There was a report yesterday I saw of an allergic reaction, I think up in Alaska. We knew there were issues of anaphylactic allergies, but this seemed not to be related to that. Is that cause for some concern? Is there an allergy problem?
Well, you know, FDA is investigating that now, and in fact, it came up at that advisory committee meeting on the Moderna vaccine this morning. We're not completely sure what in the vaccine may have caused that very rare but serious reaction. Looks like at least one of the people in Alaska had a strong history of severe allergies. At this point, though, based on all the data we've seen, there's no reason to expect that people who may have food allergies or allergies to snake venom or something like that should not take the vaccine. The current advice is that if you have had an allergic reaction to a vaccine or a vaccine component before, definitely worth talking to your doctor about that before you get the vaccine. But so far, it doesn't look like it's really going to disrupt access and use. And the good news too, David, is that with good treatments for allergic reactions, these very rare side effects are completely manageable.
Dr. McClellan, also give us a sense of the challenges, the hurdles perhaps on distribution, because the notion of distributing 300 million doses twice in the United States sounds overwhelming. We already have heard some talks about maybe some shipments have been too cold and so they couldn't use the vaccine. How difficult is the logistical problem?
You know, they are very challenging. We have not had to mount a vaccination campaign in the United States, anything like this, since polio in the 1950s, and this is much larger than that one. So this is unprecedented. I know people use that word a lot in the pandemic. The first round that's going on now will hopefully let us work out some of the kinks. This is a very well-controlled, tight, limited distribution to healthcare workers and to nursing homes. And as you said, there have been a few bumps there. Where things are going to get more challenging is as we move beyond these very first priority groups into trying to reach all of the elderly Americans who are at a higher risk for COVID complications, and all of the frontline workers and all of the essential workers, teachers, people who are working in prisons and so forth. That is going to be more complex. And as you were just talking about with your last guest, the people who have been most hard hit by this pandemic, they tend to have less access to care to begin with. There's a lot of distrust, particularly in communities of color around the vaccine. So this is going to take not only a major logistical challenge, but also a major major public education effort and a lot of engagement with community leaders and a lot of transparency in sharing the data about how everything is going so far. And again, so far it looks really good. The vaccines look very effective. The side effects look very rare and temporary beyond, you will likely get a sore arm and feel bad for a day or so after these vaccines. But beyond that, it looks very good from the vaccine standpoint. Very challenging, though, ahead from the distribution standpoint.
Yeah, we never want to lose track of the fact that, as far as I can tell, this is almost a miracle to have a vaccine this fast in these circumstances. Yeah. Doctor, we always love talking with you. That's Dr. Mark McClellan of the Duke Margolis Center. Coming up, we're going to talk about that massive computer hack of government computers with Teresa Payton. She's a cyber expert who served as the Chief Information Officer under President George W. Bush. That's coming up next on Balance of Power on Bloomberg Television and on radio.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We learned about a massive hack of government computers this week that has the White House now having daily meetings on the subject to figure out what happened and what can be done about it. We turn now to a true expert in cybersecurity. She is Teresa Payton. She was Chief Information Officer in the White House under George W. Bush. She is now the CEO of Fortalice. So thank you so much for being with us, Ms. Payton. First of all, give us a sense, how big a problem is this?
Well, on a scale of 1 to 10, I'm approaching a 9, and it's not just about what we know, it's all the things that we don't know at this point in the investigation.
Well, so start with that, first of all. Do we know, does the government know at this point, how many agencies may have been affected, how much data may have been affected?
They don't know, and that's the challenging part. This is a cyber attack like none other that we have worked in the past. First of all, it is installed in U.S. military. Our allies use it. Our departments and agencies use it. The private sector uses it. And the challenge is that if you had certain versions of the software, the malware was installed inside the SolarWinds software. And so if you were using a version of that, it gave them an opportunity for the cyber operatives with nefarious intents. Right now, the investigation points towards Russia. Russia, for the record, denies it. They pretty much always deny it. So, the investigation ongoing. But for all intents and purposes, once that malware has been downloaded, embedded in the software that's supposed to be a security product, it then gave them the opportunity to create what is referred to in the industry as God access or a God door. Now, whether or not they walk through every single God door that was potentially out there remains to be seen. But when you have God access, that means you look like you have the master key. It looks like you belong there. So other security products and tools are not going to try to kick you out. So who knows? And this is potentially dating back as early as March 2020, which means they had unfettered access for months. So who knows? It could be emails. They could have changed data. They could have deleted data. They could be embedded so deeply into networks that you'll never be able to trust them again. You'll actually have to build something brand new and abandon what you have because you don't know if you can get them out.
Ms. Payton, just hold on one moment. I apologize for interrupting, but a headline is just crossing. It has to do with cyber, but not exactly the area you're involved in. A group of states now has sued Google, alleging abuse of dominance of the search market. This is a monopolization case involving the search market. You remember yesterday, Texas led a group of states that actually alleged abuse of dominant position in the advertising market. This is search market. We'll bring you more on that as we get information. So apologize again, Ms. Payton, for interrupting you. How sophisticated was this attack, as far as we can tell? You just described they really imitated as if they were the master.
Yeah, well, what's interesting is in the days and weeks to come, we may finally learn how did they get access to SolarWinds. And oftentimes in investigations like this, they operate at stealth and with a level of expertise, but oftentimes the way that got in was not stealthy. So it'll be interesting to see, do we learn, some security researchers said they found in the past weak passwords. Sometimes in cases like this, the stealthiness happens after a very old school way of getting in, which is a social engineering email. Employee clicks on the link and bam, they're in. And once they're in, then they go into stealth mode. So it'll be interesting to see what the point of intrusion was. But once they were in, because they had written the malware themselves that had been downloaded, then they had the access they needed. So that's the part of this that really requires very high level of capability, intelligence, and patience. Whoever did this was definitely playing the long game to get the biggest payout they could.
Just very briefly at the here, what does this mean about the priorities given this by the incoming President Joe Biden?
Well, my advice to the incoming president and the outgoing president is the two teams need to work together on this. This is a hack that could potentially be impacting businesses, the U.S. government, could be impacting us for years to come. We do not know the full extent of access and potential damages that were created as part of this hack.
Okay, thank you so much for joining us. That was very informative. That's Teresa Payton. She is Fortalice Solutions CEO. We'll have a second hour of Balance of Power on Bloomberg Radio. That does it for the TV portion. I'm David Weston, and this is Bloomberg.
I'm Alex Steele. Welcome to Bloomberg Commodities Edge, where we focus on the companies, the physical assets, and the trading behind the hottest commodities with the smartest voices in the business. Let's get right into the data dig and dig deep into some of the market stories of the week. Want to start with that oil inventory data in the U.S. After that massive build last week, stocks actually fell by more than 3 million barrels, with the biggest fall, no surprise, in the U.S. Gulf Coast. So the bad news, though, gasoline stocks actually up for 5 straight weeks. Does it matter? I mean, maybe not, because investors are actually all bulled up. This is a great chart from Bank of America's monthly fund manager survey and shows managers to over to underweight commodities. They are the most positive, that orange line, on the sector in a decade, and that's pushing up overall prices, that white line. And talk about prices, Bitcoin, another week, another record, this time to 23,000. Now, Scott Minerd of Guggenheim thinks prices could actually top 400,000. I spoke to Jeff Curry of Goldman Sachs for his take.
Well, if you overlay a chart of Bitcoin on the price chart for copper, they look very similar. And what do they have in common? They're both risk-on growth proxies. And I would argue that Bitcoin is the retail inflation hedge.
All right, now let's get into the ring. Exxon finally unveils emission targets. By 2025, the company wants to cut the intensity of its emissions by 15 to 20%. Joining me now, Liam Denning, Bloomberg opinion columnist from Florida. Liam, what'd the market think about this?
I think people in general are pretty underwhelmed for a couple of reasons. First off, Exxon's targets, you really had to read the fine print on what you were getting. Exxon set new targets for methane emissions in 25. They are going to start reporting their Scope 3 emissions. Those are the emissions from the actual use of oil and gas from next year. The problem they face is that it all feels a little too late and kind of grudgingly given. Other companies have moved much more quickly on this. Even Chevron, which is, by no means pivoting into energy transition territory, is already reporting Scope 3 emissions. And Exxon said it will do it, but it couldn't resist the opportunity to say that those numbers on their own don't really mean anything. So I think, particularly in light of the activist campaign that got going recently as well, this seems like, Exxon is giving a little ground on this, but it doesn't feel like the kind of strategic rethink that some people have been calling for.
Which was what's so surprising about this week, that Exxon stock was actually crushing Chevron's. I mean, it went down on the day the emissions came out. But what do you make of this?
I mean, you can make a lot of things of a short-term move in prices. It's actually, apart from March when the market completely melted down because of COVID, it's actually the biggest kind of short-run outperformance for Exxon versus Chevron in the past decade. And you can lay that at a number of things. Exxon has become more of a leveraged oil play because it's been borrowing to pay its dividends. So that's one explanation. But it's possible that even though these activists who have emerged are pretty small in the grand scheme of things, and we're still talking about Exxon here, it's possible that people are beginning to see the possibility of Exxon actually embracing some sort of strategic change. If you look at this year, in fact, the last couple of years, it's been a kind of a steady process of Exxon being forced to give ground in terms of, cutting its capex, in terms of really meeting shareholders halfway who are worried about big capex budgets, worried about the dividend. So it's possible that as we see these activists emerge, people do think that Exxon might actually, embrace more of a fundamental change in its strategy.
Liam, really appreciate it. Bloomberg's Liam Denning on Exxon. Time now for Commodity in Chief, where we delve into one topic and one person in the commodity world. And today, it's former Bank of England Governor Mark Carney's push to cut carbon. So let's say you're a big company like Walmart, targeting zero emissions from its global operations in 20 years. So part of it's going to be using things like wind, solar, and EVs. The other thing they can use, carbon offsets. Here's how they work. Company A wants to cut its carbon emissions. Company B is financing a project, say building a wind farm or switching from coal to solar plants. Now, a registry validates those carbon savings from Company B. They're real. Then a broker matches those offsets with a buyer like Company A. Company B gets their money for their projects, and Company A gets closer to meeting its emission goals. Now, this market is still tiny, about $300 million, and it can be bigger. Bloomberg NEF estimates that there are over 2,700 of these kinds of projects verified with major registries, with the potential to reduce 359 million tons of CO2 a year. That's larger than all of France's emissions. Enter Mark Carney. The ex-central banker says this market needs to grow 15 times bigger or more in 10 years, and he is helping develop it. Now, the hope is that it can help companies get to their net zero goals faster by compensating for emissions that haven't even been eliminated yet. The criticism is that it's a get-out-of-jail-free card for bad actors who promise carbon reductions that don't actually happen. Either way, you need big buy-in from big companies to drive this forward. Now, Carney told me the market should be as much as $100 billion a year, and it needs to happen fast.
We've formed a group under leadership of Bill Winters, who's the CEO of Standard Chartered, long market experience, Annette Nazareth, who was a commissioner, formerly a commissioner of the SEC, sponsored by the Institute for International Finance. We have 50 institutions all the way through the value chain for this market, from verification, production of these offsets, verification, clearing, the plumbing of financial markets, the buy side, the sell side, and companies that actually would buy these offsets. Because remember, who's using these offsets in the end? We're seeing companies around the world, Microsoft, Unilever, a huge range of companies saying, we want to get to net zero. We have a plan. Well, where are they going to get the net? These are big companies. They have high standards. They need to know that the offset's really there. We have them involved in the development of this market. So we have this core group. We've given them a tight deadline and a focus. They produced their first report for consultation last week with an aim to have a blueprint for the market by the first quarter and to have a pilot market up and running by this time next year.
So flip it for me, though. So those are the companies that are going to need the offsets. What are the companies that are going to make the offsets? Are they like companies that just go ahead and plant trees, or is there something more deeper than that?
You have that as an example. You also would have examples. I mentioned the example of avoidance of emissions. So let's say I owned a coal plant in India or Indonesia, and I wanted to take that plant and convert it. Shut it down and convert it to renewable. I could be a major Indian utility, industrial. I could be, a financial investor that catalyzes that activity. Now, there's economics in that activity already, because as you know, and a lot people watching will know that actually renewables are getting cost competitive. But the strip of reduced carbon, if I can sell that in through a market like this, because it is removal of carbon, we get the same electricity but with less carbon, then that adds to my economics, it adds to my incentives, it will add to activity, and it will also, very importantly in this, will help drive down costs in power and generation in these areas, which is something we need.
The criticism is that it's a get-out-of-jail-free card for some companies. What's the pushback to that?
Yeah, I don't buy it for a couple of reasons. First, if you have a net zero plan, one of the things we're pushing for COP is transparency. First, companies having net zero plans, but then transparency about it. If your net zero plan is business as usual and I'm buying offsets, that's going to be clear. You're going to have to live with your stakeholders, including your shareholders and creditors. That's not a credible strategy. This is a transitional market. That's the first point. The second point is, look, we have a limited carbon budget. On some measures, it's 10 years for 50% probability of 1.5 degrees. Every ton of carbon we take out of the atmosphere adds to that carbon budget. It creates time, and it creates time for the kind of innovation that we need in hydrogen, carbon capture, direct air capture and carbon, sustainable aviation fuel, all those other areas. So this is critically important, but it's transitional. This is not the end state. As I said at the start of my answer, yeah, that cannot be your strategy. And if you think it's your strategy, yeah, you will be put in jail by your stakeholders.
Metaphorically, of course. So what will a climate-friendly house of the future actually look like? Bloomberg Green asked some architects known for their sustainability chops to pick up their pencils and imagine Europe's green future, and the results a sunflower house built to blossom from a warm Mediterranean climate. The circular roof is petaled with solar panels that rotate around a central axis, much like a sunflower on a stem, as it follows the sun to maximize energy throughout the day. One more example is a flora house that's built on existing structures. The private areas are smaller and there's more space for urban farming. It's complete with wind turbines, solar panels, and a water system, a collection system. For more examples, very cool, check out Bloomberg.com/green. And we end on a somber note today. The gold industry lost a truly beloved name this week. George Giro of RBC passed away at the age of 84 after battling COVID. His love of gold started at an early age when it helped his family survive and escape Hungary during World War II. He started his career at the commodity brokerage Goodbody & Company, eventually serving as a NYMEX board director, member, and a managing director and financial advisor at RBC Wealth Management. He always looked out for people, was never too busy to explain the complex details of the gold market. I myself learned so very much from him. George, you will be missed. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Markets. I'm Vonnie Quinn. In just a moment, a year-end conversation with Aryeh Bourkov, Liontree CEO, on the changes the pandemic has wrought on telecom, media and telecommunications, among other areas. First, though, news just in, a bipartisan group of 38 states suing Alphabet's Google today, alleging broad antitrust violations in the online search market. This, of course, just a day after 10 Republican state AGs sued for anti-competitive practices. And in October, as you'll remember, the DOJ also filed a complaint. So let's bring in Bloomberg's Naomi Nix to join all of this together for us. Naomi, is obviously escalating suits and complaints thick and fast against Alphabet's Google. Will it have any impact on anything that Google does for the moment?
Well, I think that's the big question. In the past, when tech companies have faced antitrust scrutiny, they're often slowed down by their business practices, less likely to make acquisitions or bold moves for fear of inviting more antitrust scrutiny. So we'll have to see how Google responds to this. In terms of the legal case, I think what we're still waiting to see is what kind of evidence do these state attorney generals have against Google? What did they find in discovery to be able to support their claim that Google has been engaging in anti-competitive conduct?
So when will we get a response from Google, Naomi? Is it Google's prerogative to hold as long as it wants on this, or does it need to come back with some kind of an answer?
It will have to respond. Yesterday, Google submitted a statement arguing against the claims being made by the Texas state attorney general that it essentially colluded with Facebook to manipulate the online advertising market. They were very bold in their proclamation that this allegation was not true, and that its services are open to many of its competitors.
Naomi, thank you for bringing us up to date. Google down just about 0.5% now. It's been on the decline all session. That is Bloomberg's Naomi Nix. Well, let's focus on the year in deals now, particularly the TMT area and extensions such as gaming. All of that has seen so much activity this year. Aryeh Bourkov is the founder and CEO of LionTree, one of the biggest boutique banking firms in this area. A range of deals for LionTree this year, including co-managing the Warner Music Group IPO back in June. LionTree also just yesterday the exclusive advisor in the XL Sports funding deal with the PE firm Shamrock Capital. And of course, yes, Shamrock is that firm that bought the Taylor Swift rights from Scooter Braun. Aryeh out with his year-end letter called Leaving It All Behind. Aryeh, it wasn't a terrible year for you. I'm sure there are things that you're quite happy not to leave behind. What's changed for the TMT space in the pandemic?
Well, Vonnie, thank you for having me, and it's great to be with you. I wish we could be together in person, as we have last year and in many years past as our tradition. And it wasn't a terrible year in the sense that there were deals and activity in the deal-making environment, but really it's not about us. It's really about channeling the broader ecosystem of humanity, and it was a very challenging year for us all, and we all felt that, and I think we all regrouped, not only ourselves, our families, the country, the world, but the industries that we focus on. Every company that we work with, I think, went through a period of revisiting strategies in terms of how to deal with employees, business continuity, and then really the portfolio about how much outdoor business activity there is in terms of outdoor advertising or theme parks in certain cases versus those that have streaming and digital businesses, and those that had digital businesses, gaming, streaming, others, audio, podcasting, et cetera, did quite well during 2020. Others tried to reposition themselves into a 2021 period that can be on the rebound, which we're all looking forward to now. But every company, I think, went through a jolt, just like every person revisited their priorities this year.
And some of the mega companies really pivoted in record time, Aryeh. I just want to quote something from your letter. You say now that companies that cannot make their footprint feel intimate and bespoke will fail to gain traction. Every company needs to be working towards the plus version of itself. Of course, you're referencing Disney Plus, Hulu Plus. Everything this year seemed to be a plus.
That's right. I mean, when you look at companies that create a plus on the back of the name or on the back of the product, that indicates something extra that they're adding to the equation for the benefit of consumers and obviously for their companies and the strategy. But over time, what they're really saying is the plus is the thing. So it used to be that companies created a digital media division for a media company, and then digital media became essential to every company. Just like in the ecosystem today, if you're not working remotely or having a digital offering or an e-commerce solution, you aren't really being there for your consumer or your constituents. So digitization has accelerated throughout. The direct-to-consumer world is here now. That has to be integrated and accelerated into every strategy, and we're seeing that. So we at LionTree, and I think all of us, have to look at what is the plus version of ourselves as we get to 2021. 2020 has been a holding pattern for the right reasons. We've had to think about our priorities. Now we move forward. We leave all that behind. We move forward. We're still hurting, but we have to look at what happens after the pandemic. Living in a pandemic is not a sustainable state for any of us. We have to move forward and look at the plus version of ourselves and our business models.
And of course, we're seeing as well distribution and content come together a lot at the moment. And even today, we just had the announcement about Roku taking on HBO finally, right, which will open it up to millions more. What digital media or, say, podcast companies, where are you looking for M&A into the new year and beyond? Because you say the deals, now that they've started again and started in earnest, that flow will keep going.
Yeah, look, we're looking at a pipeline going to 2021 that is probably our most robust pipeline from a deal perspective that we've seen. And it's partially related to the trends we've seen before, like the audio, the gaming areas, or media consolidation to get to scale, content and distribution, IP production. All those things are important. But there are also other areas that are important, like the platform players, the Microsofts, the Amazons of the world. Obviously, you mentioned Google and so on. Some of those will be more restrained in some of their M&A activity, but others that will want to reposition their portfolios. You'll see divisions of companies spun out to have a more rational shareholder thesis and structure. Even you've seen companies like AT&T look to sell companies like DirecTV, which is a division of the company. I think you'll see more of that. And then obviously there's the SPAC trend, which is kind of bringing more private companies or private divisions into the public domain a lot more quickly at earlier stages than we've seen in the last few years.
Ari, I want to ask you a little more about SPAC in a second, but first back to DirecTV and the various potential deals we might see. Can you give us any more of an idea about where we should be looking or who wants what now?
Well, I think, first of all, if you have a big consumer reach, if you're a Netflix or if you're an Amazon, Apple, et cetera, even Comcast or some of the telecommunications companies that have a large consumer reach, you need to have a multi-product offering. You can't just have video. So you need to complement the video offering with audio. Audio is undervalued in our view versus video. Gaming is under-penetrated still versus video. So I think you're going to see the big platform players complement their video strategies by having a more robust, diversified offering. In our view, even gaming is considered a new metaverse. Gaming is the new internet. Fortnite could be the new internet, where you're going to have not just music concerts like you saw with Travis Scott this last year inside the Fortnite ecosystem, but movie premieres and other formats. So you could see a whole new platform created that will lead to more deal flow. Plus, we're seeing still, I think, a lot of content and distribution activity where there's media consolidation that still needs to happen. Given what happened with Warner and HBO Max, and even Disney and Disney Plus with its proprietary content, every platform needs its proprietary content and exclusive content. And I think you'll see more of that. And then lastly, portfolio optimization. So we were lucky enough to advise Viacom CBS on its sale of Simon & Schuster a few weeks ago. That is about selling off assets that are better situated with other strategics and optimizing your portfolio. We will see more large conglomerate companies rationalize their portfolios by selling off divisions in the coming year.
Aryeh, will there be a winner? When you see all of this content that's being produced and the standard has been phenomenally high, but at some point you have to expect that either the standard will come down or the pay will come down and there'll be a vicious cycle and so on. Plus, there's also the cord cutting that's sort of still going on. Who wins out of all of this?
Yeah, it's a delicate balance because as companies move to a digital format, pricing usually comes down in favor of the consumer offering because there are more choices and things are more readily available. That's what's really hurting industries like retail right now. When you have even luxury retail businesses that are starting to move into the digital format, that is an expansion of their business and a way to scale the business more efficiently and effectively, but also potentially risking the unit economics of each product. That is a balancing act that has to be done. But over time, that is more than made up for the volume, they say, but the reach of the global consumer can be attained much more easily in a digital format. So even in education, for example, we've all now seen children working remotely in their education this last year out of necessity. But we haven't really seen universities accustomed to having a digital offering that replicates the price point or the experience of the physical space. When you go to a top university, you're paying top dollar, but if that goes fully digital, should the price point be the same, for example? And I think everyone's going to look at digital in different ways for access versus pricing.
Arya, nearly half of all IPOs in 2020 were SPACs, and that's going to continue, right? There's, 200 out there looking for targets, some of them pretty massive and some of them fairly small. But you talk about the difficulty for sponsors to find the right mix between having long-term, responsible institutional investors in there and finding the right price. Are they getting it wrong?
Look, I think the SPAC market is here to stay. At the beginning, it's a corrective measure of what is wrong with the IPO market. So there's a certain amount of friction in the IPO market in terms of, as we've seen, what's the right pricing for an IPO? Why are employees locked up for 6 months post-IPO while they watch the stocks traded with volatility? Those things should be taken care of pre-IPO in different formats. The SPAC market corrects a lot of that in terms of valuation, supply-demand, efficiencies. And I think that will be a good dynamic for the entire market. Even the IPO market will change as a result of it. But SPACs right now are changing the way that product approaches the market. So we're seeing 200 SPACs, as you mentioned, now looking for deals. But deal making is part of that. You have to be able to not just create a SPAC and raise the capital, but get a deal done or you lose it. And so we're seeing different types of deals go public now, not just the growth companies like the DraftKings and the Virgin Galactics and a lot of other industries that will see growth transformation into the public domain faster, but divisions of companies that are private go public, or as I have been talking about recently, even potentially individuals like imagine LeBron James with a big income stream going public through a SPAC. How about Bloomberg? Bloomberg, we're talking about Bloomberg. Bloomberg's a private company. Why is Bloomberg not public through a SPAC? These opportunities are now much more readily available. And it will lead to a lot of conversations in the coming 6 months, really, about deal flow that will keep all of us busy. But we all, at the end of the day, have to be judged on whether they are the right deals, which will be judged by the investors over time and really growing into these valuations. And I think the ultimate measure of value and whether the market settles the right way will be in 2022, not this 2021 year. But I think 2022 is, will the companies that have gone through the pandemic, will the companies that have gone public, that will go public, be able to really grow into their values and rebound accordingly into 2022 levels that we were all looking for anyway, and then we can look at all this and leave it behind.
Arya, we are out of time, unfortunately, but I am waiting to see LeBron go public through a SPAC. That would be fun. Arya Borkhoff, CEO and founder of Liontree.
Saving for retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. A coronavirus relief deal appears close at hand. Senate Majority Leader Mitch McConnell says he's hoping an agreement can be reached today as lawmakers put the finishing touches on a nearly $900 billion agreement. Leader McConnell says it's highly likely the Senate will need to work this weekend and pass a very short stopgap funding bill. Talks between the UK and the European Union over a post-Brexit trade deal could carry on in the days after Christmas. That from Cabinet Office Minister Michael Gove, hours after the European Parliament set a Sunday deadline to reach an agreement. A battle over fishing rights is the one major issue standing in the way of an agreement. The British Prime Minister Boris Johnson and European Commission President Ursula von der Leyen will speak by phone tonight to discuss the ongoing negotiations. France's President Emmanuel Macron has tested positive for the coronavirus. The presidential palace says he took a test as soon as symptoms appeared, but it didn't say what symptoms he had. President Macron will self-isolate for 7 days and will continue to work. Russian President Vladimir Putin says if Russia wanted opposition leader Alexei Navalny dead, it would have killed him. In his annual news conference, President Putin dismissed new information linking Russian secret services to the near-fatal poisoning of the opposition leader. President Putin also talked about the coronavirus pandemic, saying his country has done a better job than the United States and Europe in fighting the disease. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Live from Toronto, I'm Amanda Lang. Welcome to Bloomberg Markets.
And from Bloomberg World Headquarters in New York City, I'm Vonnie Quinn. We're now joined by both our Bloomberg and our BNN Bloomberg audiences. Here are the top stories we're following from around the world. The vaccine rollout. The FDA meets today to discuss emergency approval for Moderna's shot. And the EU looks to start vaccinating after Christmas. We'll bring you the latest on the vaccine front. Closing in on relief. Senate Majority Leader Mitch McConnell says the deal is, quote, close on hand. A nearly $900 billion coronavirus relief package, and it could be announced as soon as today. And just how well is corporate America doing when it comes to human rights? We'll ask Anna Potts, APG Asset Management Head of Responsible Investing in the Americas. Amanda.
And Vonnie, we do have sort of a similar set of cross currents for investors today. So we have some positive action for markets, and obviously that broad S&P 500 sitting closer at a record high here. That's despite the fact that the economic data show a bit of turmoil out there. Every state showing a drop in personal income, and of course the jobless claims number rising unexpectedly, at least against expectations. And you can see though the broad market is holding its own. We are seeing techs doing just okay today. They're not a massive drag on the market, but they're not helping out particularly. One reason for that is some softness for Google today. It is such a heavy weight that even its 0.6% decline, a bit of a weight. Keeping our eye on the price of crude, of course. This has been one of the stories to watch. Hit hard by the pandemic, crude has been gaining in part because of production shut-ins and now enthusiasm about what a vaccine might mean. And even as we get the vaccines rolling out from our first batch of vaccines across North America, we do still see rising cases of COVID-19, concerns about additional lockdowns needed. All of that in the mix here in terms of the sentiment out there. And then a new milestone is expected. The FDA, of course, expected to approve a second vaccine, this one from Moderna, for emergency use. Nina Decca is with us now, senior research analyst from Robo Global. Nina, thank you very much for being with us. And let's just start with any differences that you would note between what would come from Moderna and what Pfizer already has in place.
Well, I think the main thing to note is that given the strong efficacy and the similarities between the two, and the overwhelming vote toward passing Pfizer toward the EUA, it leads really most people to think that there shouldn't be a problem with Moderna also achieving a similar result and also getting the EUA.
Yeah, now, Nina, while we're absolutely thrilled and it's extraordinarily exciting news that Moderna has succeeded with such a high success rate and the stock is up something like 600% in just the last year alone, it has come off the last couple of days, though, because I suppose it's priced in now. So what happens next for Moderna? Does it make money off this vaccine? Does it have to come up with something new?
Yeah, I do believe Moderna this is going to be their first commercially approved drug, fingers crossed. And so they're actually going to generate real commercialized revenue off of this product. And so it would be reasonable to expect that there should be some profit built into their pricing at some point, whether it's in the very initial stages or over time. I think that that's a reasonable expectation with this particular company. But that being said, when we brought Moderna into our HTEC, we have a healthcare and innovation ETF, when we brought it in March, yes, we were very excited about the prospect of a coronavirus vaccine, but we were actually looking at this company more broadly about all the other things that they have to offer. They are a technology leader in the world of mRNA, and the years that they have behind them, all of the AI that they utilize takes thousands of hours of manpower out of their research and development process, which is what enabled them to come up with a vaccine so quickly. They have over 20 other therapies in clinical trials as we speak. And so all it takes is for one drug to be commercially approved in this new mRNA modality for everyone to get excited about everything else that they've got in the pipeline. And Moderna is very well positioned to capture that for years to come.
What are some of the other drugs or categories of drugs that you find most exciting about the pipeline for Moderna?
So they've got a bunch right now in the vaccine space. They've been working on CMV vaccine, which was originally their lead candidate until it was displaced by the coronavirus vaccine this year. But they're actually looking to potentially bring that to market in the next 2 to 3 years. They did report phase 2 data on that on time this year in Q3. They're also working on RSV as well as HIV and Zika. So these are all like remaining unmet needs, and we need a vaccine for all these. And potentially down the road, maybe they could couple RSV with the coronavirus vaccine and offer them as a combo. Beyond infectious diseases, they're also working on orphan drugs, and those could wind up getting fast-track designation due to their high unmet needs. And so there's a lot to speak for this company. They've also been partnering, like a recent announcement of a partnership with Vertex to help work on cystic fibrosis medicine as well. And interestingly, one of the challenges that we've seen thus far in gene editing, specifically with CRISPR-Cas9, is that it's been difficult to deliver into the right place, into the human body for different types of treatment. mRNA down the road, this is like the future we're talking about, could be a potential tool to help deliver CRISPR-Cas9 to get to the places where it's needed most.
Yeah, I mean, this year has been very exciting, not least because people have started to look at this area again and really concentrate on it, from investors to just the general public, Nina. And at Robo, you've been putting together indexes for a long time now on many areas of biotechnology, pharmaceuticals, and so on. What else should we be watching out for when it comes to research and development, AI, and healthcare delivery systems that might start to come into view now?
So when you look at healthcare in general, I think that we're seeing that there's a strong investor appetite for healthcare innovation specifically. So if you look at the HTEC ETF, it's up 61% year to date compared to low double digits of some of the comparable like IXJ. And the reason why is that portfolio is comprised mostly of technology and innovation. So what you're looking for is you want to be exposed to virtual care, virtual care is going to underlie every facet of healthcare in the next 5 to 10 years, and we've only just scratched the surface. You also want to be exposed to genomics. Early cancer detection is going to be the next frontier of clinical genomic innovation, opening a $75 billion market over the next 15 years. So imagine going to the doctor and in your annual visit for just a routine checkup, you have a routine blood draw, and they can screen you for 12 to 20 different types of cancer just from a blood draw. So that's the next frontier of genomic innovation, bringing things from research and academia into the clinical use. It's going to be big, and we're in early days right now.
And early days, and obviously that means investors need to understand there's a certain amount of risk. We have seen growing M&A activity in this space. Do you see that as the kind of liquidity event for some of the investments you might make at this level?
Potentially, although, so I will say that in genomics specifically, there was over $10 billion worth of M&A activity looking to go after this early cancer detection market. There was also a lot of virtual care M&A, Teladoc acquisition of Livongo. So our portfolio probably either includes the acquired asset or the acquirer, because we're looking specifically at market leaders, and they often wind up coupling together in the long run. So M&A is one way to look, but what I really be focused on is growth here and innovation. And if you're focused on just the market leaders, the technology leaders, which we are, then your portfolio is well positioned for the ups and downs that come with things like changes in the administration or a world global pandemic.
Yeah, well, listen, after this one, let's hope we don't see another one of those for a long time. Nina, thank you very, very much for joining. Nina Deca, Robo Global Senior Research Analyst. Coming up, Anna Potts, the head of responsible investing in the Americas at APG Asset Management, the massive Dutch asset manager. She'll join us to talk about how corporate America scores when it comes to human rights and which companies are way behind. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
we explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I feel really lucky having stared into what felt like an abyss for travel, and then to kind of rally together with thousands of people and rebuild the company from the ground up. Something that I think is stronger than it ever was before the pandemic.
This is Bloomberg Markets. I'm Vonnie Quinn in New York City alongside Amanda Lang in Toronto. The COVID-19 pandemic has exposed systemic weaknesses and inequalities throughout the global value chains. According to new research, the worst aggressors are in the automotive industry. With us now to talk about how corporate America ranks when it comes to respecting human rights is Anna Pott. She is head of responsible investing in the Americas for APG Asset Management. It's one of the world's largest pension investors, $538 billion in assets under management. It serves 1 in 5 Dutch households. So Anna, talk to us about this new human rights ranking that you have and what you're actually doing in conjunction with the New York Comptroller.
Yes, thank you so much for having me. Yes, human rights, it's an important topic. In particular, if you look at the topic of today, the COVID pandemic, the right to health, it's affecting everybody. But it's also affecting us as an investor for pension funds in the Netherlands. It matters for the companies we invest in, the workers in those companies. And it also matters for the performance of these companies, which is obviously of importance to us investing those Dutch pension assets. And therefore, in our responsible investment approach, we not only look at the financial performance of the companies we invest in, but also consider sustainability performance, climate change, and yes, also respect for human rights.
You are part of a proposal with Amazon asking for more information or disclosure on protection of their workers during this pandemic. What prompted you to become involved in that?
Exactly. So talking about human rights, the right to health, and looking at Amazon, an important portfolio company for us, a company that employs over 1 million workers that are obviously affected by the COVID pandemic. And as I said, as part of our approach, we look at their sustainability performance, including how they treat their workers. What we want to know is not only their policies and their programs, but actually what is the impact of those health and safety programs that they are investing in. And what prompted this? Well, actually, a few months into the pandemic, we started to hear mixed stories about how well those policies and programs that Amazon has invested in, billions of dollars invested in, how effective they are. So on the one hand, April, May, we hear these stories in the media, we hear these stories from worker organizations, and on the other hand, we hear Amazon more and more vocal on their commitments, investing more and more dollars into programs to ensure social distancing, investing in protection measures, in terms of investing in paid sick leave for their workers. So on the one hand, we hear these programs that Amazon is investing in. On the other hand, we hear these stories from workers. And then again, taking a step back, for us as an investor, what we want to know is, are these investments that this company make actually have an impact? Are these workers safe?
Well, Anna, where do you go to get that information? Because presumably if you ask Amazon, as we have, and we'll give you the statement at the end, they say everything is fine, we're doing all in our power to be extraordinarily humane, a fantastic employer. Have you seen data to that effect? And if it doesn't please you, would you actually withdraw or cut down massively your investment?
Well, indeed, what we are looking for is indeed, what measures does this company take? But again, we want to see the outcomes. How effective are these health and safety measures? In other words, what is the return on investments of these billions that this company is investing in? And what we are asking Amazon is to report on the adequacy of these programs. And we are pleased to see that over the past months, Amazon did step up. They disclosed the number of positive cases at one time at one time. But what does it tell us? What are the trends? How can we know that their measures are effective? How are those social distancing programs actually implemented? And in terms of your question, where do you go to get these data? Yes, we go to the company. That's as an investor, that's where we need to go to get those data. And therefore, what we are asking in this shareholder proposal is the board to report on the adequacy of those measures and how the board is actually overseeing the effectiveness of this.
Right. Just one quick question here. We mentioned the automotive industry scores badly. It's one of the first times that industries like that have been included in this way. Their supply chains, I guess, not overseeing human rights the way you'd like. As a major investor, are you better off staying invested in companies to try to affect change, or are you better off boycotting? Because we're seeing the boycotting side of this in the ESG space more and more.
Yeah, it's interesting. We see that as well. But the approach that we take as you mentioned, a pension fund investment manager with a long-term leading responsible approach, we believe in being engaged with our companies. And actually, looking at Amazon, but also looking at other companies, we are engaging with these companies to improve their sustainability performance. We want to invest in sustainable operating companies. And to that end, we invest in the dialogue. And again, going back to Amazon, I think over the past months, we have seen that the company is stepping up on their disclosures and is stepping up on their measures taken. What we want to see is the outcomes.
Well, Anna, we're going to go check back in with you on those outcomes because we're all very, very interested as well, not just on Amazon, but on all those automakers and all those other companies that you invest in at APG Asset Management. And I do want to note that we got a response from Amazon. It read part of their statement as follows. Amazon prioritizes the safety and health of its employees and has invested millions of dollars to provide a safe workplace, which is why at the onset of the pandemic, we moved quickly to make more than 150 COVID-19 related process changes. Today, we continue to innovate, learn and improve the measures we have in place to protect our teams. Amanda.
All right. Coming up next, Senate Majority Leader Mitch McConnell says a stimulus deal may be close at hand. We will get the latest from Washington. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
There does appear to be progress on a stimulus deal in Washington, at least according to Senate Majority Leader Mitch McConnell. Is a deal close at hand? Lawmakers may work through the weekend. Laura Davidson is with us now. Laura, obviously much anticipated. What's the latest that we know about a potential stimulus package?
Well, all the leaders on all sides, Democrats and Republicans, keep saying that there have been progress. We do know that there are a couple sticking points that they're still trying to figure out. The stimulus checks, that's still one of the issues that hasn't been resolved. Lawmakers are looking at something in the $600 per payment range. Both some progressives as well as Senator Josh Hawley, who's a Republican, have said that that's not high enough. So there's still some haggling and negotiating there. Another issue that's important for Republicans are these Fed facilities, these Fed lending programs. They say that these are scheduled to end by the end of the year, and they want to put in some specific language that would make sure that there's no doubt on what the law says. Democrats say they want those to extend for several more years. So again, haggling over that. There's also an issue with some FEMA money. Republicans say that this looks like it's a sort of a backdoor way to give some money to states and localities, which they don't want to do. So again, they're working through the details here, but that's really where we are. We're kind of at this final stage where they're sort of ironing everything out. They're looking at how much everything costs, and they're hoping to put out a deal potentially as soon as this afternoon or this evening.
What will be the issue that makes or breaks it, Laura? As I understand, state and local government aid is also a sticking point, which would also mean sort of less or more money in unemployment insurance.
Yeah, really, the issue here is, can they get enough of the things that both parties want and stay within a price tag that they can all agree with? So it's all right now about dialing different novels up and down and seeing if they can get the right mix of things. This $900 billion range is kind of roughly where they've agreed on. The question is, can they get 60 votes in the Senate? Can they, between Republicans and Democrats, to make that happen?
All right, Laura, you will be there.
And just really quickly here.
Sorry.
Go ahead, Bonnie.
Quick, Amanda, yep.
Just wondering how quickly we might see dollars in pockets, Laura, if this comes to pass.
About 3 weeks from the time period that the bill is passed to getting the checks out, those stimulus checks. Unemployment can take longer. It's dependent state by state, although they've learned a lot of lessons and may be able to do it quicker than last time.
Brilliant. Glad we got that in. Laura, thank you so much for joining us. That is Bloomberg's Laura Davison, who will be completely following this as we hopefully get some kind of a deal. From me in New York City and Amanda Lang in Toronto, this is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Not only do we have the capital required, we have the long-term vision, the ability to focus and execute. And this is really about reimagining transportation, really. And so it gives us a baseline to build from and then expand on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm Mark Crumpton with Bloomberg's First Word News. Pfizer and U.S. drug regulators are revising guidelines concerning the company's COVID-19 vaccine after rare allergic reactions were seen in some recipients. Officials say 2 people in Alaska who received the vaccine suffered reactions, which were also seen in some vaccine recipients in the UK. This as an FDA advisory panel is meeting to decide whether to recommend a second coronavirus vaccine. The hacking spree that hit U.S. government agencies posed what officials are calling a grave risk to federal, state, and local governments, as well as critical infrastructure and the private sector. The Homeland Security Department investigating the attack says removing the hackers from the compromised networks will be, quote, highly complex and challenging. Hackers tied to the Russian government are suspected in that attack. Parts of the U.S. Northeast are digging out of the first major snowstorm of the season. The system dumped a foot or more in some areas. More than 10 inches of snow fell here in New York City. Parts of western New York were buried under more than 3 feet of snow. The storm hit as trucks carrying Pfizer's COVID-19 vaccine from Michigan fanned out across the country, but officials say the weather will have little impact on vaccination efforts. More California homes and businesses could be plunged into darkness again. Southern California Edison is warning that it may need to cut electricity to customers to prevent power lines from sparking wildfires during violent winds. As many as 45,000 homes and businesses in 5 counties could lose power. Forecasters say there's an elevated fire risk through early Friday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It is 2 p.m. in New York. It is 7 p.m. right here in London, live from Bloomberg's world headquarters. This is Bloomberg Markets, The Close.
I'm Romaine Boston.
I'm Caroline Hyde.
And you're Caroline Hyde.
And I'm Kaylee Lyons. Taylor Ricks is off today.
Almost forgot my name. What's it like? But we're closing in on virus relief. Stocks hold gains as lawmakers wrangle over $900 billion of coronavirus relief package, which could be announced, we hope, as soon as today. Meanwhile, health of the economy was still without aid. We'll gauge the state of the U.S. economy as initial jobless claims jump, personal incomes, they drop. And 3 times unlucky for Google. The tech giant is hit with its 3rd antitrust lawsuit case in 2 months. This time, 38 cross-party states are suing. All that and so much more coming up, Romaine.
All right, Caroline, well, remember this, 3702, that was the last record high on the S&P 500. Right now, of course, we flirted with that yesterday, but right now we are firmly above it. You see the S&P 500 up about 0.5%. Most of the push higher here actually coming from utilities, materials. You are seeing some of the tech names and discretionary names also get involved here. You're seeing the Stock 600 Europe, which closed a little bit a while ago, up about 0.3% here, back at its February highs right now. And the dollar weakness, this is obviously going to be something we're going to talk a lot about heading into 2021. The persistent weakness that we've seen on the BBDXY going back really now for the last couple of years, back to 2018, really important here. 1113, that was that 2018 low. A lot of people keeping eyes on whether we test that. And what more can you say about Bitcoin? I mean, a few days ago we were 19, then 20, and if you blinked yesterday, you would have missed the dings on your screen, Kaylee, when we hit 21, 22, 23. I don't know. You're going to be telling your grandkids about this at some point, I assume.
The velocity is insane.
Yeah.
Well, let's dig a little bit deeper into the bond market as well, because we were expecting fireworks off the Fed decision yesterday. That didn't really pan out. Where we're seeing yields move higher is actually in today's session. They're up around 2 basis points. 93.79 basis points is where we print at the moment. The fact that Jay Powell left the door open to possibly extending the maturity may have something to do with the fact that yields are kind of staying capped below that 1% threshold at this point. What I would point out, though, Caroline, is that even though those nominal yields remain capped at that psychological 1% barrier, break-evens have picked up. The 10-year break-even rate at 195, which is the highest in over a year. That is a sign that inflation expectations, growth expectations are picking up. The outlook is rebounding, even if the nominal Treasury yield isn't necessarily following suit, with the Fed acting as that anchor, Caroline.
Kaylee, great setup for what's going to be a great conversation. Joining us is John Taylor, Stanford University professor of economics. Of course, his name is the Taylor rule, the rule that many central banks, including the Fed, use to help set and steer monetary policy. It's wonderful to have you with us, Professor. And talk to us about the lack of clarity or some sort of guidance that we got from the Federal Reserve. It wasn't as much as the market was hoping. Do you think more guidance is needed from Fed Chair Powell?
I do think some more guidance is needed. I think they took a little bit of a step with respect to the asset purchases, but I think it was small, and there's still some vagueness about the interest rate itself. So I think the markets are looking for a little more clarity about the forward guidance, and I hope they do that going forward or slip it in. But so far, I think it's been very small, and I hope it could be larger.
Do you think that that the Fed right now, that the members there, that they feel maybe a little constrained in making any sort of clearer guidance than they would normally make, not only given the pandemic and some of the uncertainties around the economy, but just the fact that the expectation of markets has changed quite a bit here over the last couple of years?
It has changed, and I think you saw they're responding to that last March, April in a reasonable way, but at the same time, they could be indicating where they're going. And I just give an example. If you look out a couple years, their publication came out yesterday. They have that interest rate at between 0 and 0.25, even though the inflation rate will be 2. That's their forecast, and unemployment below 4. So if you just go back a year ago, the same conditions, they had an interest rate over 2%. So that's quite a change, and I think that needs to be clarified a little bit. It's a bit of an inconsistency, and I think people are wondering, what does that mean? Some of the questions in the bond market you just referred to are related to that.
Professor Taylor, I want to get back to that in just a moment, but we do want to bring you some breaking news. Coinbase has filed confidentially for a stock listing. That news just crossing the Bloomberg terminal, looking perhaps to capitalize on the crypto boom that we have been talking about, with Bitcoin crossing through $23,000 level today. Professor Taylor, I want to ask you about cryptocurrencies, this boom that we are seeing. Does it worry you?
It doesn't really worry me. I think it's a sign that people are looking for an alternative. I think at the same time, you've seen the central banks get into the act to try to add a little clarity to this aspect as well too. But I think this is technology moving. I think Facebook they've changed a little bit from their Libra to the DM, they call it, responding. And so I think you're seeing the changes which we need. It doesn't concern me. I think it's a sign of our progress technologically, delivering a better system for people.
Do you think the dollar should ever go digital? What do you make of the dollar's continued weakness over the course of the year?
Well, I think the dollar is still the global currency in many respects. I think the weakness you see from time to time has to do with the policies. We just mentioned a minute ago about how the asset purchases, $120 billion a month, were clarified a little bit. It wasn't clarified on the downside, clarified on the upside. And this interest rate, going out to 22, 23 now at a very low rate without much description. I think those are the things that are concerns about the dollar, but their own concerns as well for the state of the economy. Again, a little clarity would be better. There's no reason not to, going forward, to provide a little bit of that. Even the current situation, you can do what's important currently, at the same time give some guidance to the markets about where you're going in the next year or two.
Given where we are right now with benchmark rates and the expectation that they're pretty much going to stay where they are for the next couple of years, there was always that fear as we sort of made that descent to where we are today, this fear that by the Fed allowing this to occur, this would sort of create that reach for yield amongst investors. And there was the fear that that would in turn sort of maybe create some sort of bubble, some sort of systemic risk out there. So far, that has not really occurred. The reach for yield has occurred, but some of the systemic issues that people feared hasn't necessarily shown up. Do you worry that an extension of this low rate environment for much longer would eventually lead to any real systemic risk?
Yeah, I think it will, unless there's some clarity about how long it will last. It used to do that. You know, the Fed used to be a little more clear about where it was going down the road. Now it's less clear. Yes, they're saying it's going to be, you know, between 0 and 0.25 for the most part out to 2023. But at the same time, their forecast is pretty good out that far. It's, you know, unemployment rate below 4, inflation around 2. That's kind of where they want to be. So why is the interest rate still projected to be so low? I think there's some inconsistency there. They may be worried about other things they're not saying, but that I think is the concern going forward, and that can come anytime. We don't know exactly when it will come, but it's a concern to me, and I think it'd be better off if there was more forward guidance, put it that way, about what's happening.
What about fiscal policy? That is something that Jerome Powell pushed not just yesterday, but has really for the duration of this pandemic. And we're getting news today that one Republican senator is pushing as part of a fiscal aid package wording that would terminate the Fed's facilities, emergency facilities that it has put into place. Is that a mistake, or can fiscal really carry the mantle from here?
No, I think the action of Secretary Mnuchin was right at this point, and took the right action. I know there was some dispute about that. There's still some dispute, but I think let's clarify what the policy is. And this additional, $500 billion plus can be used as part of the current stimulus package. But it would be better if at the same time the Fed was clear, then we could have a better package, a more package which is aimed at really what we need to have in the country, rather than just guessing about what the Fed will do. So that clarity is important. Also, I might add, there would be nothing wrong when this stimulus package is passed to say a little bit about what's happening down the road with fiscal policy. There's very little discussion about that. The focus is all on the $900 billion or whatever happens to be, but not where we'll be a year from now. And we have a vaccine that's coming down the road. It looks promising. That will be good for the economy if it all works. And so that the policy actions should take that into account and at least be thinking about that. And I think being more explicit as well.
I want to ask you, of course, Professor, that your Taylor rule doesn't just guide the Fed, but it guides global central banks. And we are seeing central banks around the world moving more in lockstep with fiscal policy. We've seen it from the Bank of England today. You're seeing Europe finally passing off on that enormous fiscal spending that they're going to tailor towards green spending in particular, but moving very much in concert with the ECB. What do you make of policymakers around the world, central bank action around the world?
Well, I think the so-called Taylor rule has delivered good performance when it's been used, and when they've deviated from too much, it's not been so good. There's evidence of that. This is not rocket science, so you can't be terribly precise, but you can be more precise. I think the danger at this point, if you lock in too much a fiscal monetary connection, that you really are building on each other in a way that's not stable. It would be better if the central banks were clear statements, had clear statements of what they're doing, and then the fiscal authorities, with the additional powers they have, could make the right decision. So I think that has worked in the past, and it can work now going forward. Again, I think the vaccine is changing things more rapidly than we thought. Let's face it, and the fiscal and monetary policy should take that into account. Well, of course, we're also getting into questions about whether monetary policy should do many other things, income distribution, environment, which they have not done in the past, but that's becoming a part of the conversation as well.
Yeah, certainly made it part of the conversation. Powell's certainly driving that. John, really great to have you on. Really appreciate you taking time to be with us. Of course, John Taylor, of course, former Treasury official, now at Stanford University. All right, we want to go back to that breaking news that was crossing the wire just a while ago. The cryptocurrency boom continues here. Coinbase, of course, one of the largest operators of cryptocurrency exchanges out there, filing confidentially for a stock listing. Of course, we don't know exactly the date or how big of a deal that this would be, but certainly a move here that certainly would be the chef's kiss to this recent rally that we've seen. All right, we're going to talk a lot more about crypto today. We also are going to talk a lot more about the vaccines. Coming up next here on the program, the FDA nearing approval for a second COVID-19 vaccine. We're going to speak with Dr. Rod Hochman, CEO of Providence St. Joseph Health, about the rollout. Plus, survival of the fintechs. Clever. The trend of digital banking has skyrocketed, but will it last? We speak with the global head of Goldman Sachs' consumer business later this hour. And another legal hit for Google. We're going to talk about that bipartisan group of 38 states suing the tech giant, the third such case here in the U.S. All that and more coming up shortly. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The grim virus headlines continue to cross the wires, the latest coming from California, which has reported a 3.3% jump in hospitalizations, now at a record 16,426. We know 3 of the state's 5 regions are already on lockdown as they try to get that under control. But more broadly, hospitalizations in the U.S. are right around the all-time highs. Of course, this puts all eyes on the vaccine. We could have a second one approved in the coming days. Moderna's, of course, in addition to Pfizer's. And Goldman Sachs says that those vaccines, the fact that healthcare workers will be getting them, could mean that hospitalizations begin to decline around January 9th. But of course, in the meantime, we watch and we wait remain.
All right, let's get a little bit more insight from Dr. Rod Hochman. He's president and CEO of Providence St. Joseph Health. It's a national Catholic not-for-profit health system. Doctor, thanks for being here today. I want to start off with the vaccine. Of course, a lot of us in the public are putting all of our hopes and dreams on this vaccine rollout in 2021. We have gotten some news today of some side effects that have been reported. Can you give us a little insight into what those side effects are and whether it's anything that we should be concerned about on any sort of grand scale?
Sure. In addition to being CEO, I trained as an immunologist and rheumatologist, so this is right down the alley. To me, it's not surprising that we'll see some allergic type reactions to any type of vaccine that's going to be developed. And looking at that, so for me, just with the numbers that have been given, those are still small amounts, and both patients, according to the reports, were treated very, very successfully. So one seemed to be more serious than another. For me, given the numbers that are being treated, we should expect that we are going to see some very, very infrequent side effects that are there, but it shouldn't dissuade us from this going full tilt. This is one of the most exciting vaccines that we've seen, and it is a different type of vaccine, being a messenger RNA vaccine, than we've used in the past. And there'll be more vaccines to come, obviously with the Moderna vaccine that's going to be approved hopefully soon, but others coming down the pipeline.
Dr. Hongman, about the others coming in the pipeline, that the current dissemination of the vaccine, the slight hiccups in supply, is it something that worries you?
No, I think this is going to be complicated. Look, we do influenza vaccinations every year, and there's lots of hiccups getting it out. It's just the sheer magnitude of what we're trying to do. 300 million Americans at some point need to be vaccinated, give or take 4 billion worldwide at some point. So this is going to be a process that's going to probably take, the initial phases of it are going to be the next 3 to 6 months as it rolls out. I've actually been really, really pleased with so far how the initial rollout's gone, and that we'll have some other choices in vaccines as things come along. So actually, it's been much smoother than I would have predicted.
Can I ask you about confidence, though, Doctor? Something like 64% of Americans say that they would take the vaccine. That's not quite enough to get to herd immunity. What are the consequences if enough people don't get the inoculation?
I don't know. I'm a little bit more optimistic just seeing the results in our own system. We're in 7 states out west, California, Washington, Montana, Alaska, and we have about 120,000 caregivers. And when we've polled just our own people, the results are well in excess of 85% that want to take the vaccine. So we're actually surprised. We think it'll gain momentum as more confidence is, as people see their doctors, their nurses, and other caregivers getting the vaccine. We think that will build. The general number that we tend to use is if we had a vaccine that had 70% efficacy, if we got 70% of the population, we'd be in good shape. We now have a vaccine that has at least 90% efficacy, and we think we're going to surpass that 70% range in terms of what we're seeing so far. So we've been really pleased with what we're seeing from at least our caregiver population.
So, Doctor, I mean, we mentioned the Providence network here, 50 plus hospitals. I do want to get your general thoughts here on just how the general business of these hospitals has been in the COVID era. Obviously, a lot of attention, if not all of the attention, has been given to the pandemic. Do you anticipate sort of, I guess, more of a right sizing of the type of care that you're providing anytime soon?
Well, obviously, you alluded to California. We've already had to cut back on services a second time because of the number of COVID cases. Just in our LA and Orange County hospitals, we have over 1,000 COVID patients in those hospitals. So that's putting a stress on us because we're slipping back into where we were with the initial wave. But I'm glad to say in our other states, we're starting to see some flattening. So it's not taking that rise straight up as it was before. So I'm a little bit optimistic about that. I'm the incoming chair of the American Hospital Association in January. So we've been keeping an eye across the country on how hospitals have been doing. And probably our greatest concern in the longer term is how smaller and rural hospitals are going to do and how they're going to weather the economics of this pandemic in terms of where we're going.
Dr. Rod Hogman, we thank you so much for your time amid an incredibly busy time. Of Providence St. Joseph Health, we thank you. From London and from New York, this is Bloomberg.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
With a new administration coming to Washington, changes are undoubtedly in store, from the economy to foreign policy to public health. I'm David Weston. Join me for a Balance of Power special report, a look ahead to the next 4 years, this weekend on Bloomberg Television.
Welcome back to Bloomberg Markets The Close. I'm Kaylee Lines. Let's get a quick check on the business flash headlines. This would be a first for Amazon. Regulators have given 1,500 workers at a warehouse in Alabama the go-ahead to vote whether to form a union. None of the company's hundreds of thousands of warehouse workers in the U.S. are represented by unions. Amazon says it doesn't think the retail, wholesale, and department store union represents the majority of its workers' views. Nissan has decided not to make an upcoming electric vehicle in the UK. Instead, the battery-powered SUV will be built in Japan. Nissan is concerned about the long-term viability of its plant in Sunderland if there's a no-deal Brexit. And a bipartisan coalition of states sued Google today, alleging broad antitrust violations in the online search market. 38 attorney generals filed the suit, which accuses the company of illegally monopolizing internet search and search advertising through a series of anti-competitive contracts and conduct. This marks the third U.S. case against the search giant in just 2 months. And that's your business flash update. And Romain, we have more news on Google crossing the wire right now.
Yeah, Google putting out a statement on its company blog, effectively saying that redesigning Google search, these are the company's words, would harm the quality of your search results, and it would come at the expense of businesses like retailers, restaurants, repair shops, airlines, and a host of others. The company, Caroline, here, basically making it clear that the lawsuit, as it's presented, would effectively do away with the way that it structured its business.
It's also seemingly trying to combat the anti-competitive nature of the accusation, saying, look, we know that you could go to other companies that feature search. They talk about Amazon, Expedia, TripAdvisor. Kind of fascinating.
I'm Mark Crumpton with Bloomberg's First Word News. President-elect Biden has announced another cabinet pick. Bloomberg has learned he's chosen North Carolina environment regulator Michael Regan to head the EPA. Regan, who is African-American, would add to the diversity of cabinet. Mr. Biden has said he wants to look like the U.S. His early picks for the jobs have drawn criticism for not featuring enough people of color. Meantime, some of Mr. Biden's other cabinet picks are beginning to work through the confirmation process. The Senate Finance Committee has sent questionnaires to Janet Yellen, the president-elect's pick to be Treasury Secretary, and Javier Becerra, his pick to run the Department of Health and Human Services. That could potentially lead to some cabinet members being confirmed on Inauguration Day or shortly afterward. Members of a congressional watchdog panel are asking for an investigation into Treasury Secretary Steven Mnuchin's decision to end Federal Reserve emergency lending programs. In a letter to Treasury's acting inspector general seen by Bloomberg News, Democrats say Secretary Mnuchin might not have consulted with legal counsel and may have changed his position on the programs after Joe Biden won the election. Canada's population growth ground to a halt in the third quarter after travel restrictions and closed borders prevented most forms of immigration. Statistics Canada reported today that the country's population was essentially unchanged during the period, up about 2,700 to just over 38 million. It was the slowest increase in data going back to 1946. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets, The Close. I'm Caroline Hyde.
I'm Romaine Bostic.
And I'm Kaylee Lyons.
Let's get you caught up on where we stand right now in the commodities space. WTI crude futures here in New York settling right now. You're looking at 48.37 on your screen. The final settlement number not quite clear yet, but we are going to settle above $48, which is a significant, probably the most interesting metric, because this will be the first settlement that we've had on WTI at 48 or above since February. So pretty interesting here. Gold also getting its legs back. Remember, it had gotten battered around over the last few weeks, up now for 3 straight days. You're looking at the most active futures contract there. Copper futures also getting another bid. We saw over in London hitting that $8,000 level, and then here in the U.S. hitting, I believe it was 361 a pound was your high here on the day. Right now, just a tick or so below that. And iron ore, something we never talk about, continues to be the talk of the town. Kaylee?
Well, something we can't stop talking about, Romaine, is this pandemic and how it has changed the way that we do almost everything, including banking. Going into a physical branch, talking to a teller in person, less appealing during an outbreak like this. And FIS did a survey back in May to see how people were changing the way they bank and pay for things during the pandemic. 45% said they changed the way they interacted with their bank. That was true across all generations, from boomers to Gen Xers to millennials. On top of that, 45% of survey respondents said that they were using a mobile wallet of some type, 16% indicating they were using paper currency less than before, and 31% said they would continue to use contactless or mobile wallet payments instead of cash or checks in the aftermath of COVID-19. So let's talk a little bit more about this. We welcome now Harit Talwar. He is global head of the consumer business at Goldman Sachs. Harit, thank you for being here. Of course, you also helped Goldman establish Marcus, its digital bank, about 5 years ago. How have you seen the business, the appetite for Marcus and its services change over the course of the pandemic?
So, Kaylee, you're absolutely right. There have been dramatic changes. First of all, I would acknowledge that 2020 obviously has been a very difficult year for all of us as people, society, planet. However, from a business perspective, it has been our best year yet. It has been a strong reaffirmation of our business model, building a digital online bank delivered on your phone. We are in our 4th year of business. We are serving over 5 million customers with products that deliver value, are easy, simple, transparent. We are earning more than $1 billion of revenue annually and growing rapidly. And our revenue per customer is almost $200, which I reckon is far in excess of almost any fintech. But going beyond the numbers, during this pandemic, we have accelerated our momentum. We have expanded the products that we are doing with our partner Apple. We've launched partnerships with Amazon and Walmart and JetBlue and AARP and Stripe. And we've launched a Marcus mobile app. You were talking about wallets, which is performing very well, one of the best rated apps on the App Store. And we are working furiously to launch next year Marcus investment products on the app and a modern digital checking account. So that's true. We have been very busy and feeling very good.
All right, I want to go international here because I'm interested in where you think the US stacks up vis-a-vis international areas of fintech. I mean, London always held its head up high as being the fintech dominant force. Europe, you've seen the birthplaces of the likes of Monzo and Revolut and N26. You look across to even India, State Bank of India I was speaking to about their digital banking and their apps and how much they're seeing them take off. How do you think the US compares? How much does Marcus compare to the international competition?
That's a great question. And, the first thing I would obviously say is that Marcus is not just in the US. We launched in UK a little over 2 years ago. We have been overwhelmed by the success we've had over there. Our customers have come to us in hordes. We have offered them great, attractive interest rates, fantastic service, making it simple, making it transparent. And our business in Marcus UK is doing extremely well. Now, stepping aside beyond Marcus, the digitization trend is global and it is secular. And as Kaylee was saying in the introduction, it is just rapidly going. I could have said digitization acceleration 3 years ago and it would have been true, but all of us have been taken in by the speed with which it has happened. And it is happening around the world. Now, there is innovation happening all around the world. It's happening in US, it's happening outside the US. The US market overall is very large as a single market, but there's a lot of developments happening all around the world. Yeah. Because the context, Caroline, is that the consumer financial services is a very large market. Yeah. It has many categories of players, large banks, small banks, fintechs, technology companies, and yet customers are not happy. In the US, a majority of the customers don't trust their bank or card company. They don't have enough savings for an emergency purchase. They find the bank processes very opaque. So all this creates a very ripe atmosphere for innovation. And therefore, you're right, around the world, you'll see the secular trend of fintechs doing well.
Well, to your point there, Harrit, I mean, underlying all of these changes, underlying a lot of that frustrations is really, I guess, kind of a different way that a lot of consumers, particularly younger consumers, look at money overall and look at the relationship that they have with money and the relationship they have with how they purchase things. There are a lot of people that will look at your bank and they would say, well, you're the old guard. What gives Goldman, other than your size and other than your legacy, more of a mover advantage than, say, some of the smaller, more nimble companies that have maybe been doing this for a little bit longer than you have?
So I think we at Goldman are, frankly, uniquely well positioned because we are one of the only large banks which did not have a legacy consumer business. We did not have legacy distribution models, legacy engineering, legacy business models. So we could operate like a fintech as a startup with no legacy, and we built truly a modern engineering stack. On the other hand, we are a bank. We have a balance sheet. We have a trusted brand. We have risk management DNA. And these are very important attributes to be a successful disruptor in a regulated industry. We do believe we can do to retail financial services in the US what perhaps Apple has done to music or Amazon has done to retailing, which is bring convenience and ease and simplicity in how people can purchase financial products. The other thing, Romain, what you said is very important, is it's not a matter of product, it's a matter of relationship with money. When people come to their relationship with money, they have anxiety, no matter what the affluence level. If you have a backache, you talk about your backache. If you have money issues, you feel embarrassed. And therefore, the opportunity for somebody like us is to establish a relationship with consumers about their money, not just merely selling products.
Harit, we want to thank you, Harit Talwar of Goldman Sachs. All things markets, all things consumer. Let's talk all things Brexit, because we've got another headline. This time it's from Ursula von der Leyen. She, of course, is European Commission President, saying that there are big differences remaining in Brexit. Of course, negotiations continue between the UK and the EU, and the pound a little bit knocked off of its highs, Romain.
All right, let's go from the drama in the UK to the drama in the U.S. That fiscal stimulus bill apparently moving a little bit closer to reality. House Speaker Nancy Pelosi now saying that progress has been made this morning on the stimulus talks and that she hopes that a deal will be released at some point today. Of course, when that happens, we'll bring it to you live right here from New York and London. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
I think we have a lot to be optimistic about in this country, but in the near term, even with these vaccines, Moderna and Pfizer, we just got to allow them to be given to the people who need them the most, but that's going to take more than 6 months.
All right, time now for our deals report. Mergers and acquisitions rocketing back to life in the second half here, with companies looking to show growth out of the pandemic. Will the trend continue? Bloomberg senior deals reporter Ed Hammond caught up a little bit earlier with Kirkland & Ellis M&A partner Daniel Wolfe for his outlook. Take a listen.
Coming out of a lot of other downturns and crises, I think we're seeing certain types of deals getting done. Stock consideration has certainly been a feature that we've seen at levels that relative to historical norms are higher. You know, that's something you often see because people like to think about relative value as opposed to absolute value in sort of dislocated markets. I think we're also seeing some new players in the M&A market. A year ago, no one had ever even heard of what a SPAC was. And now there's probably a couple hundred SPACs out there in the market looking for deals in addition to the dozens that have already been done. I think also certain industries are places where you're seeing more deals happening. I think that's a function of the crisis this time, which has been much more siloed and not across the whole breadth of the market. Certain industries are doing just fine. You look at something like a pharma or tech, and they're just doing fine. And I think you're going to continue seeing those industries outperform in the M&A market as compared to some like travel or other that have been affected badly by the crisis, where I think you're going to see a continued dip in those until we see a recovery with the vaccine.
At a more fundamental level, is it also a sort of change in the way investors think about M&A? I mean, historically, they perhaps saw it as a highly risky activity, not something that was a core part of any, corporate strategy. Whereas now, you've had this broader pivot from value to growth. Investors like growthy stories. They like things that look sort of, exciting and new. Is that fair? Is that a sort of factor that now informs the way companies think about their deals?
Yeah, I think you hit it on the head when you mentioned growth. At the end of the day, companies are rewarded for growth, whether it's in the stock market, whether it's in compensation programs, and even in the run-up to COVID, and since the pandemic hit, it's been very hard to identify sources of organic growth, which has forced companies to go, look, if you're going to tell a growth story, you're going to go and have to look for inorganic growth. And clearly M&A is the fastest way to show inorganic growth. And as long as companies are going to be rewarded for showing that growth, I think M&A is going to be a key part of the playbook that boards and management teams are going to look at in order to continue feeding that growth story, which, as you said, the stock market investors are looking to see too.
COVID or not, we are getting a new administration in 2021. What are your clients telling you about that?
It's obviously something that's front and center in the discussion. I think when you look back at September and October, when the polls were showing the prospect of a blue wave, I think there was a lot more discussion about how the new administration and some of their policies in the regulatory front, on the tax front, were going to significantly impact M&A activity. I think almost since the election, there's been a bit of a sigh of relief. And, I say that somewhat irrespective of what happens in Georgia. I think the divided government or close to divided government is going to put significant constraints on what the new administration can do. And I think it's hard to see in any specific area where the new administration coming in is going to be a significant damper on what is otherwise a pretty active environment for M&A.
What about the approach to regulation from that new administration? Because obviously one of the factors under Trump that we all got to sort of know best was this, regulation by tweet. Presumably that's something that companies are I don't know, relieved is no longer going to be part of the process.
Companies are going to be relieved that you don't have to wake up every morning, whether it's something that's going on, whether you're closing a factory, whether you're doing a deal, which is going to involve job cuts, about worrying about being eviscerated from a tweet from the White House, whether it's merited or not. And I think a return to norms in the regulatory environment is probably something that we're expecting to see, and I think is going to be, again, something that's welcome in the corporate community. Whether it's in the realm of CFIUS, it's not going to be a tweet on the way to the helicopter on a Friday afternoon that's going to tell us what's going on with ByteDance and TikTok, and instead you're going to probably see a return to normal pathways of evaluating the regulatory review of deals.
Kirkland & Ellis partner Daniel Wolfe there speaking earlier with our own Ed Hammond. Now, let's get a quick check on the latest Business Flash headlines. Here's Kaylee.
Let's do it, Caroline. It seems we can't go a day without talking about Robinhood. The latest news is that the company has agreed to pay $65 million to settle allegations by the Securities and Exchange Commission. The SEC accused the broker of failing to inform clients that it sold their stock orders to high-frequency traders and other financial firms. In addition to the fine, Robinhood agreed to have an outside consultant make sure it provides the best execution for trades. The company, of course, has gained notoriety by attracting a massive customer base of young investors. And the Premier League has agreed to beIN Sports for it to be its official broadcast partner in the Middle East and North Africa until 2025. The deal consists of 380 live matches each season that spans across 24 countries. Sources close to the deal say the broadcaster will pay the Premier League $500 million for those rights. And that's your Business Flash update, Romain.
All right, Kaylee. Time now for our Stock of the Hour. We're taking a look Lennar. Shares of Lennar right now on pace for the biggest gain in more than a month. This as the company's fiscal fourth quarter earnings, sales, new orders, all of that coming in above estimates. Dave Wilson jumping here right now. Tell us a little. You know what, Dave? I found out today, I didn't know this, that Lennar, the name Lennar, is a mashup of the two first names of the founders.
Well, there you go. You learn something new every day. And what we really learned out of Lennar late yesterday when they came out with the results is that they're benefiting from broader trends in the housing industry as much as anything. Think about record low mortgage rates working in their favor. You've got millennials that are moving out of apartments and buying homes. And, you have demand from families that have been stuck at home. They're looking for more space, especially in the suburbs. And you put that all together, Lennar talked about robust market conditions in the press release announcing its results. And so, they benefited from all these trends. And, they really carried through in the fiscal fourth quarter. Earnings beating analyst average estimate in the Bloomberg survey for the 7th straight quarter, holding up better than projections. Similar story in terms of revenue, housing sales. And beyond that, it's this company's ability to become more profitable at a time when, costs of building products are going up. We've seen lumber rise, we've seen copper rise, and nonetheless, the profit margins are higher than analysts are anticipating. Plus, this company's positive going forward in terms of their fiscal first quarter and year. I mean, they're looking for home deliveries to be up something like 20% from a year ago. So business is doing well. I mean, the biggest challenge they have, arguably, is just keeping up with the demand, because they've seen their backlog increase. It was up, 21%. So, put it all together. I mean, Lennar's in a good position, and it's lifting its peers as well, because people look at this company and saying, the housing market's in great shape. So when you consider the D.R. Hortons and the NVRs of the world, things are just fine.
They're just fine? So is the cake, the pie getting big enough for all, or is some eating more than others?
Yeah, I mean, it really looks like it's big enough at this point. Lennar talked about not just the market being robust, but they talked about really an undersupply of homes. It's just the builders can't keep up with demand. And so, that's why you're seeing sort of the gains across the group. I mentioned D.R. Horton and NVR. You can throw Pulte Group in that. I mean, they're all home builders in the S&P 500, and they're some of the day's best performers in that index. So, you put it all together. I mean, Lennar's done relatively well compared with its peers. Nonetheless, we have seen some broad-based strength in the home builders, no question.
Yeah, Lennar up 7% here. Top Build, Installed, Pulte, all those names also moving higher on the day. Dave Wilson here with our stock of the hour, Lennar shares. From New York and from London, we'll be back in a moment. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy. What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
All right, time now for our top calls. This is a look at some of the movers on the back of analyst recommendations. First up, Chewy getting a street high price target today, 113 over at RBC. The analyst citing a recent roadshow with management that showcased what he said is a post-COVID growth sustainability here. Shares here right now up 6% near a record high. Next up, let's take a look at Yum Brands, upgraded to overweight from equal weight over at Wells Fargo. A lot of restaurant names also under coverage getting an upgrade as well. The analysts expecting these casual dining chains to rebound once we get to the other side of COVID. Free cash flow and dividend. AT&T shares pulling back about 2%.
There's not much the Bank of England can do to support the UK economy right now. That is why they're working in tandem with fiscal policy. Unlike perhaps in the United States, we're actually starting to see more support for the UK economy coming from the government, and of course some more lending coming from the monetary policy situation as well, Kayleigh.
Yeah, well, and of course, we are in the middle of a recession, Caroline, and I just wanted to point to one chart, just how unusual this recession is, in that usually in a recession, you would expect defensives to be outperforming cyclicals. At least that's what happened back in 2008. Today, though, we are seeing the opposite. It just goes to show you, Romaine, that we're not living in this recession. The market is living all the way out in the back half of 2021.
Yeah, let's take a look at the broader markets here as we get ready to count you down to the close. Final hour of trading here in the U.S. The S&P 500 camped out right now near those record highs. From New York and London, this is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Mark Crumpton with Bloomberg's First Word News. United Nations Secretary General Antonio Guterres today appealed to rich nations to support the purchase of coronavirus vaccines for poor countries and to refrain from hoarding doses for themselves. Speaking in Berlin, Guterres said that the UN-backed COVAX program needs critical funding until the end of January.
We need to be able to make a vaccine available to everybody, everywhere, and affordable by everybody, everywhere. Now, to reach that, there are two things that are essential. First, to fully fund the COVAX, we have a gap of $5 billion. At the present moment, the activities are going on, but we have a gap of $5 billion until the end of January, and a global gap of more than $20 billion.
Secretary General Guterres warned that in all countries' interests to ensure broad immunization because, quote, nature always strikes back. President-elect Biden continues to round out his cabinet. Bloomberg has learned he has chosen Deb Haaland to lead the Interior Department. The New Mexico Congresswoman would be the first American Indian cabinet secretary in U.S. history. The hacking spree that hit U.S. government agencies posed what officials are calling a grave risk to federal, state, and local governments, as well as critical infrastructure in the private sector. The Homeland Security Department agency investigating the attack says removing the hackers from the compromised networks will be, quote, highly complex and challenging. Hackers tied to the Russian government are suspected in that attack. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
We are counting down to the close. With just 1 hour left in trading, I'm Caroline Hyde.
Stocks right now at their record highs. I'm Romaine Bostick.
And I'm Kaylee Lyons. Taylor Riggs is off today. And record highs, Romaine, no surprise. That means a lot of things are greener beneath the surface. Nearly every sector is higher in the S&P 500. But take note at what's at the bottom. Communication services, that's where Alphabet lives. And Alphabet is lower by about 1% today. Third antitrust case in just 2 months filed against the company. It is the biggest point drag on that sector. You have energy lower as well, while up top you have some more defensives, utilities and healthcare up there, and materials leading the pack today. Of course, that has a lot to do with Dr. Copper, which had a pretty good day, signals some optimism on that fiscal stimulus front, Romaine.
And when you talk about some of the volume in this market, let's take a look at some of the biggest volume movers here. Accenture, of course, the big consulting company, they came out with earnings and forecasts that seemed to please the street. Those shares, record high. Context Logic, that's the parent company of Wish. Remember, they went public yesterday, dropped 16% right out of the gate, gaining 12% here on the day. Call it whatever you want. Roku actually getting an interesting upgrade here today. Of course, HBO Max finally going to be added to the service. A lot of analysts bullish on this. Basically, that means if you want to watch Wonder Woman on Christmas Day, you can. I mean, what else are you going to do on Christmas Day? Those shares were actually above 330, actually as high as 352 at one point on the day. If it gets to 331, that'll basically be a record high. And Twitter, this has kind of been flying under the radar here, but those shares actually up for 6 straight days now. No real news here, but there has been a lot of positive commentary coming out of Wall Street right now with regards to the way the company has been able to sort of not only boost its user base, Caroline, but monetize those users as well.
Yeah, all eyes on those sorts of companies. Meanwhile, I go broader and I take it back to where Kaylee left it, that stimulus has been supporting this market today. And stimulus hope's still there. Nancy Pelosi saying we could get headlines today. And, well, the most senior, of course, Republican in Congress saying they're going to work very hard, even if it takes over the weekend.
We're going to stay right here, until we're finished, even if that means working through the weekend, which is highly likely.
So we're left on tenterhooks once again. Will the stimulus get through as soon as this week? And indeed, how much support will there be for individuals? How much is it going to support the economy when we get that woeful jobless claims number coming out? And indeed, the amount of money, that disposable cash that people have, really eroding at the moment, Romaine.
Yeah, let's bring into this conversation Jimmy Chang. Always great to have him on. He's at Rockefeller Global Family Office, the Chief Investment Officer over there. Jimmy, great to have you here. Let's start with stimulus here. And I guess just your general longer-term view here for the economy and how much fiscal stimulus, whether it's this package or any subsequent package, factors into that outlook.
Yeah, good to be here. The package that's currently under discussion in Washington is a Band-Aid. It's going to buy some time. We're facing a very difficult winter, and this package potentially can offer some assistance between now through perhaps early April. And the hope is that by springtime, given that the COVID-19 crisis is likely to peak out in January following the holiday gatherings, we'll be by springtime on our way to recovery with more people getting vaccinated. So hopefully we'll see pickup with the economy reopening, and that will take up to a more sustained recovery by second half next year. But beyond April, I do suspect that the economy will still need some assistance on the fiscal side.
And at the moment, though, the market bakes in that assistance, and the market bakes in, well, a real recovery going into 2021. With these valuations at record highs, how much appetite do you have to get into equities yet further, Jimmy?
Valuations are indeed high by historical standard. So the hope is that in the coming years for long-term investors, we'll see earnings appreciating, growing at a faster pace than market appreciation, so that we can gradually bring down the elevated valuation. And also at this point, the Fed has delivered a Christmas present yesterday by sounding very dovish. They're going to stay, keep the current monetary policy, low interest rates through 2023. And think about it. The 2-year break-even rate is now above 1.9%. 30-year break-even is at 2%. These are higher levels than where we were pre-pandemic early this year. So the market is starting to factor in potentially higher inflation, better recovery, and yet the Fed is still highly accommodated. So that is a signal, for the market to go risk on.
Well, Jimmy, you speak about the Fed, and Jerome Powell yesterday in his press conference talked about PE ratios and how, yeah, they're pretty high, but rates are relatively low compared to history, so therefore it doesn't matter as much. Do you agree with that view?
Well, I really don't want to rely on Chairman Powell to be the judge on equity valuations. Valuation reflects the collective tolerance of the market, the risk appetite, for risk. And at this point, given the Fed's signal to the market to go risk on, I can understand why investors are more optimistic than usual. And in fact, that's a caution right now. At least in the very near term, you're seeing signs of euphoria as seen in the IPO market, in SPAC offerings. So I wouldn't be surprised if the market takes a breather, a little bit of pullback, which would be healthy. And indeed, with the stimulus bill potentially to be agreed upon, say by this weekend, beyond that, I don't see, many positive catalysts in the near term. So the market may be ripe for a breather, in the near term.
Yeah, a lot of euphoria here. I mean, we've been talking a lot about, of course, those IPOs, those SPACs, of course, all of the talk around cryptocurrency as well, Jimmy. I am curious as to, for investors who are looking at this market and looking at these record highs in some areas and thinking to themselves, I want to get in on this or I want to be a part of this. What do you recommend to them? Do you recommend that they sort of look for something that maybe offers a little bit more of a better ratio with regards to value, or do you just tell them to maybe wait this out and wait for that pullback?
Well, we're staying fully invested, and I'm kind of a value person I'm still valuation sensitive. I do think that there is a portion of the market that is still relatively attractive. If you look at some of the blue chip companies, high free cash flow generators, some of them are still down for the year. They have dividend yields north of 3%, and they're trading at valuations in the low to mid-teens, well below the market PE. So I think that's a space, these dividend payers, good free cash flow generators, could be potential opportunities.
Potential opportunity. I'm interested when you're looking at the regulatory risks that are currently facing, for example, big tech. You're a man who's often steered the technology investments at your firm. Are you looking at the way in which regulators finally in the US seem to have got with the program, but also over in China as well, regulators really bearing down on the likes of Alibaba and Tencent? Does it mean these lofty valuations for big tech can't be substantiated?
It is a risk. If you take a very long-term view, the massive outperformers, in each decade tend not to outperform in the following decade. So big tech, was clearly the massive outperformers in the last decade and coming into the first year of this current decade. But the valuations are high, regulatory risk is rising. So I think it's prudent to take some profit, and I would expect some of the laggards in the market, in the cyclical end, in the value end, could wind up surprising on the upside for the remaining of this decade. I think commodities could be interesting, even when inflation makes a comeback a few years down the road.
Commodities already pretty interesting on a day like today. Jimmy Chang, we thank you so much, of course, of the Rockefeller Global Family Office. So much more coming up, and we're going to be discussing why the baht is rallying. The Thai currency, of course, was at the strongest level against the dollar since January, digging into emerging markets for you. Plus, another legal hit for Google by a bipartisan group of 38 states are suing the tech giant, making it the third US case against it in 2 months. And Robinhood pays up. We'll discuss the somewhat rather enormous fine the firm had to pay to settle a key probe on its controversial practices. All that and so much more coming up. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
There's a need and a clear need for me to spend money. I need to spend money to boost the economy, the necessary push, and therefore today, as of now, and for this fiscal, I shall not worry about the deficit number.
All right, welcome back to Bloomberg Markets. The close, 47 minutes to the close, counting you down. You take a look at the S&P 500 right now, camped out around that record high. The Russell 2000 getting a bid as well. That outperformance continuing. That dollar, that trend line continues to be lower. Keep an eye on 1113. That could be the decisive line in the Bloomberg Commodity Index. Pretty much every commodity of note right now is higher, with the exception of natural gas. We'll flip up the board, and we got to talk about, of course, Bitcoin. You take a look at the Grayscale Bitcoin Trust, which of course has become one of the main proxies for folks who want exposure to it without actually buying the Bitcoin, up 11%. And how's this for euphoria here? Scopus Biopharma here. We're talking about an IPO here. 530%. Actually debuted yesterday. Didn't really do much. Was up about 8%. But today, for some reason, investors have found it out. And then two other interesting IPOs. These are two Chinese companies that actually debuted here in New York on Tuesday. Again, kind of flew under the radar, particularly Oriental Culture. They kind of got a little bit of a bid. But this stock you're looking at, Wunong Net Technologies. Don't ask me what it does. But it sold shares at $5 on Tuesday. And today at 60. 92% on the day right now, Caroline.
Nothing flies under the radar with you, Romain. Thanks for bringing those to light. Meanwhile, the Federal Reserve is striking a pretty upbeat tone on the trajectory of the recovery yesterday, reiterating, a low interest rate environment is here to stay, but that much is still up to fiscal policy, of course. David Weston spoke with Rick Reeder, his BlackRock CIO of Global Fixed Income and head of Global Asset Allocation. Take a listen.
There was a lot of analysis yesterday that said that the Fed was hawkish because they didn't increase the weighted average maturity, or they didn't actually increase the asset purchase program. Anybody who describes this Fed as hawkish is so misguided. This is a Fed that is just going to continue to be there and be as accommodative. They said they're going to continue the asset purchase program at least as large, both in treasuries and mortgages. By the way, I don't even think they need to increase mortgages at all. In fact, I think they could shrink them. But they're going to keep going, and they're going to be incredibly supportive of the new administration and fiscal stimulus from here.
So Rick, as I say, the message out of the Fed, I thought yesterday, was we think in 2021 it's going to start getting better, presumably in large part because of the vaccine, which we're hoping for so much. At the same time, there's a real divergence, maybe even a bifurcation in the marketplace, whether it's individuals or it's companies, between some people who are doing very, very well and some people who are doing very, very badly.
Yeah, I mean, David, you hit the nail on the head. Listen, but I think this is, what the central bank does is, its tools are blunt, and a lot of what happens is it lifts financial assets and it creates this bifurcation as you described. And it doesn't, what the Fed can do is it sort of paves the runway for other policy to come in. Now you really need the fiscal, and the fiscal is where you can direct tax policy, where you can direct where the stimulus gets to, things like state and local, things like healthcare spending, education spending, et cetera, things that can actually close that gap. I mean, now we actually are going to get what I think, particularly when you think about Chair Yellen, I still call her Chair Yellen, the Treasury Secretary, and now you've got functionally two Fed chairs that are going to operate in concert with one another, and that's where you get really effective policy, when fiscal and monetary work hand in glove with one another.
So is that constructive, or does that undermine the independence of the Fed? I mean, how closely do you want the two of them to operate together? You've called it sort of pilot and co-pilot.
Yeah, it's a great question. I do believe in the independence, and I certainly know that people at the Fed really believe in the independence of the Fed. However, you do create some coordination. By the way, having where they're not talking, that is a problem. But having some coordination makes sense, particularly as you described earlier. We've got a problem in the country today. We need to put more people to work. Until vaccine starts to really get implemented, we need to put more people to work, and we need to stabilize an economy and employment dynamic that is real. And so, that idea that the Fed's going to neutralize the debt that the fiscal is going to put on. And by the way, I think Larry Summers is going to talk about this. Their paper that they wrote on the system can actually withstand more debt is 100% right. And as long as, and a big part of it is the Fed is keeping rates low, so the interest burden on the economy is not onerous.
So, Rick, you have two hats at BlackRock, both Chief Investment Officer for Global Fixed Income, but also asset allocation. Where are the investment opportunities? Where is it smart to put money right now?
So it gets harder every day, but I don't know. I feel like coming in every year, it's always hard. So, but I think the equity market's going higher. I think when people look at, when the Fed says we'll keep interest rates down and we're going to leave them down for a long period of time, it makes, where rates have gotten to, it doesn't make the Treasury market interesting, doesn't make, as we said, the mortgage market interesting. When rates stay where they are, that is a direct injection of value into equities and allows companies to finance for M&A, for CapEx, for R&D, et cetera. So the equity market's going to go higher. I'm pretty convinced of that. And then how do you create balance in the portfolio? I would argue hold some cash, hold some of your government rate risk, your government, the government debt you own in TIPS to get some inflation protection, and then get yield into the portfolio. It's getting harder and harder to get yield, but the credit market, parts of the emerging markets, parts of the securitized market, get some yield, run a bit more cash because it's harder to hedge today given where rates are. And then own the equity market, because I think equities are going higher. I don't think you want to hear the story of why equities are fully valued. I think people who just do equities don't see fixed income and don't see the benefit getting to the equity. And I think equities have got some upside to them. Doesn't say we can't trade down for a period of time, but I think they're going higher.
Rick Reeder of BlackRock speaking earlier on Bloomberg Television. Let's get to options insight now. Markets are continuing to climb toward record high levels after that Fed decision we just heard Rick talking about. Here for his takeaway from a derivative standpoint is Tribeca Trade Group's Christian Fromhurst. Christian, what's your take? Did anything at all change for you yesterday?
Well, thank you. Great to be here. Yeah, I mean, really not much. I mean, we're kind of looking for some signals from Chairman Powell yesterday, and pretty much said that inflation isn't a top concern, as well as equity valuation. So, from a trader investor standpoint, that's kind of music to your ears right now. I mean, you want to hear that, that they're not looking to tighten or anything like that right now, and hopefully we'll get a stimulus package too, which is could be another tailwind for the market. So I think overall pretty bullish.
So speaking of bullish, I want to ask you about the frenzy in the options market. The put-call ratio is around its lowest since all the way back in 2000. Does that speculative frenzy start to concern you here?
It does, and I think as always, as a trader, you want to manage a risk appropriately and realize that from time to time we're going to get little dips. And when the equity put call ratio gets like this, it's one of those things that you want to keep in the back of your mind. And again, just making sure that you're watching your risk appropriately and not getting over the tips of your skis, in terms of that risk. So absolutely, it's a concern.
All right, let's get a little more micro here. I want to get to your trade on Shopify. What's your idea?
So what's interesting about Shopify is it's really been going sideways, in a back and forth consolidation period for the last 4 to 5 months. So it's finally popping out of that consolidation and onto new highs. So I like sticking with the trend here, and I think an easy way to play, a stock that's around $1,200 is to use a call spread here. So I like going out, pretty near-term call option. Call spread option. January 8th, 1,200, 1,220 call spread. You can get in that for around like $7.50. And I think it's good risk to reward on a breakout.
All right, Shopify up about 200% this year. Thanks so much to Tribeca Trade Group's Christian Fromhurst for joining Options Insight today. From New York, this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Let's talk FX. Yesterday, the Treasury Department put out its latest currency monitoring list, and on that list was Thailand's baht. On the back of that decision, though, the baht continuing its string of gains for a fourth day, now at the strongest level against the dollar in about a year. The thinking being, according to some strategists who've spoken to Bloomberg, that there will be pressure on the Bank of Thailand to ease back on FX intervention, and that will allow the baht to continue to appreciate even more. It is the second best performer in Asia this quarter, I should mention. For more on the latest on all of the emerging action, joining us now is Daybreak Asia anchor Sherry On. Sherry, what have Thai authorities said about this?
Yeah, they're insisting that they're not intervening in order to gain an unfair advantage, but they're doing it in order to ride out the Thai baht volatility. This is what they had to say. The BOT has ensured that Thailand has no intention to use the exchange rate as a tool to gain an unfair trade advantage, competitiveness over trading partners. They're saying that they're continuing to talk with the U.S. and that this action of being put in the monitoring list will not materially impact their international trade or foreign direct investment. And as you said it, yes, we have seen that rally of 10% from this year's low in April already for the Thai baht.
And so she mentioned Kaylee mentioned at the top here about that new Bloomberg study that kind of has put Thailand in focus on the radars of a lot of investors. It's been on the radar of a lot of EM investors now for a while. What's changed here? What's making it more attractive or at least getting more attention right now?
It's just a global macro environment, right? Not to mention that they've suffered a lot from this coronavirus pandemic. Thailand is a very tourism-oriented economy, so we've seen this huge sell-off during this COVID shutdown. But this Bloomberg study of 17 developing nations putting Thailand at the top of the beneficiaries in 2021. Thailand, Russia, South Korea. And look at the laggard China coming in number 17 because, okay, their GDP growth prospects are great, but all of those high expectations for China already baked in. Thailand topping the list, they do have solid reserves, high potential for portfolio inflows, and Russia also scoring high because of their strength in their external accounts and fiscal profile.
Sherry, let's talk inflation, particularly across Latin America, an area you know well. I mean, we just had the, lack of movement coming from the Central Bank of Mexico, but what else are we looking out for?
Yeah, Mexico really was split on that decision because they have the problem of inflation rising and staying above their inflation target of 3%. But they also have the worst economic growth prospects in about a century. So today they had to hold at that record low of 4.25%. But we'll be watching closely what happens to those prices in Mexico from now on.
We want to thank Sherry Ann, of course, host of Bloomberg Daybreak Australia, Daybreak Asia, and knows all things emerging markets. Meanwhile, markets push higher. In the US, we're back at record levels. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
I feel really lucky, having stared into what felt like an abyss for travel, and then to kind of rally together with thousands of people and rebuild the company from the ground up, something that I think is stronger than it ever was before the pandemic.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I'm Mark Crumpton with Bloomberg's First Word News. It looks like talks between the UK and the EU aren't going as well as hoped. British Prime Minister Boris Johnson said today the negotiations are in a, quote, serious situation. He warned that a deal will be impossible unless the bloc softens its demands over fisheries. European Commission President Ursula von der Leyen said the big differences remain between the two sides. Here in the United States, a coronavirus relief bill appears to be at hand. Senate Majority Leader Mitch McConnell says he's hoping an agreement can be reached today as lawmakers put the finishing touches on a nearly $900 billion agreement. Leader McConnell says it's highly likely the Senate will need to work this weekend and pass a very short stopgap funding bill. Parts of the U.S. Northeast are digging out of the first major snowstorm of the season. The system dumped a foot or more in some areas. More than 10 inches of snow fell here in New York City. Parts of western New York were buried under more than 3 feet of snow. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Just about half an hour left in the trading day. This is Countdown to the Close. I'm Caroline Hyde.
I'm Romaine Bostick.
And I'm Kaylee Lyons in for Taylor Riggs. And we are heading for record highs. No surprise then that most sectors in the S&P 500 are higher. Leading the charge, you have real estate, materials. Thanks a lot to Dr. Copper. Utilities higher as well. At the bottom of the pile, you do have energy, a bit of that cyclical trade unwinding today. And communication services is down by more than 0.5%. That is thanks a lot to Google and the third antitrust suit filed against the company in 2 months. We're going to have more on that in just a second, Romaine.
And some of the most talked about stocks right now at this hour, J-Bill Circuit. We don't talk about them much. They came out with earnings and forecasts that pleased the street. Horizon Pharma taking a leg down. Interesting. Their thyroid eye medicine actually going to have to be disrupted for some time because of the COVID crisis. Essentially, the contractor that was making that drug for them has been diverted has had to divert their attention to helping produce these COVID-19 vaccines. Rite Aid taking a leg higher here on a good forecast. And keep an eye on Tesla. Of course, that big reshuffle, that takes effect effectively on Monday. But remember, a lot of the trading is going to be tomorrow. Tomorrow's also quadruple witching. So a lot of volume we're going to see not only in Tesla, but a lot of the other stocks out there, Caroline.
All eyes on that options trading. Meanwhile, all eyes on these record highs. We just heard Kaylee mention it, but we're getting it across the S&P 500, across the Russell 2000. You're getting it on the NASDAQ as well. But I also want to shine a light that global stocks are at record highs. The All Country World Index, the MSCI Index, also at a record high. The one excluding the US, tantalizingly close to a record high too, but it really is notable that this is risk on and game on across the world. Meanwhile, we've also got plenty of breaking headlines, and I want to talk stimulus right here, right now, because we do have some breaking news that, of course, Senator Warren, Elizabeth Warren, saying it does look like we'll get stimulus checks into the stimulus deal, the relief package that we could have as soon as today, but she says those direct checks aren't large enough, Kaylee.
More breaking news crossing the wire as well, Caroline, relating to that hack that we know has affected a number of large government agencies. The U.S. saying now that states were affected as part of that suspected Russian hack. At least 3 states were part of that hack, according that breached several government agencies. This is according to people familiar with the matter. Of course, earlier today, the Cybersecurity and Infrastructure Security Agency said that the hackers posed a grave risk to federal, state, and local governments, and it does indeed look like state governments were impacted by that hack. Romain.
All right, the other big news of the day, of course, a bipartisan coalition of states out there suing Alphabet's Google for antitrust violations in the online search market. Several states joining this, and it is a bipartisan effort. And I'm pleased to say joining us right now is the Attorney General of the state of Connecticut, William Tong, here to talk a little bit more about it. Attorney General, we saw a response already by Google, basically laying out a case that the way that it sort of created its search business is not much different than the way Microsoft or other companies have also sort of built their search business. What is it about Google and its search business that is so unique that it rises to the level of antitrust violations?
Thanks for having me this afternoon. What's different about Google from everybody else is that they're dominant. It almost seems quaint to say that Google has monopoly power and that it's a dominant force, not just in search, in web browsers through Chrome, but also through the technology, you know, the Android operating system. Google is everywhere. To Google is a word. And it's because Google is so dominant, it has so much market power that it has an obligation under our nation's antitrust laws not to abuse that monopoly power. And we believe that it has.
How is it abusing? How is its monopoly power hurting me as a consumer or a small business that wants to be found using search?
So as a consumer, you have very limited choice because Google is dominant through the Google search engine, through the Chrome browser, which is ubiquitous, and through the Android operating system on phones, tablets, televisions, computers, Chromebooks. Because Google is everywhere, you have very limited choice, and we're at the mercy of one huge market actor. So as a consumer, you have some choice, I guess, but because Google crowds out other browsers and other search engines, your choice is very limited. That's number one. Number two is, you know, Google collects so much information about us that they have a lot of control over our personal information and our privacy. And because there's no real effective competition challenging them and holding them accountable and developing better privacy protections, we are at their mercy and it impairs our privacy. If you're looking to advertise online and you're trying to do so either on Google and its many platforms or using its SA360 advertising tool and technology, you're at their mercy. You got to play by their rules, pay their prices. And if you're looking to do business with Google, you're often forced to enter into exclusive arrangements, direct contracts that crowd out competitors and your ability to do business elsewhere.
But Mr. Attorney General, Google is free, and there are some on the other side of this argument who would say that consumers prefer it, and it isn't illegal to offer a service that's better and gain a monopoly by just doing that. What is your answer to that?
Just because the search functionality, if you bring it up through Google, is free, doesn't mean that Google is free. And it doesn't mean that Google doesn't make money off of basically every way in which we interface with the internet and technology today. Google has a hand in so much. So to suggest that Google is free or that Google doesn't make money is a gross understatement, of course. Google is an incredibly successful and powerful company.
So maybe, William, if you can kind of explain here, I guess, the legal parameters here, and I guess do so in layman's terms. Obviously, we're not lawyers here, but there's a general concern here that antitrust law, as it's written right now, does not really address a lot of the issues that you seem to be trying to address with what these social media companies are doing. And I'm wondering, what provisions are you specifically looking at in current antitrust law that you think will be successful in carrying out this case?
Well, you know, in lay terms, the antitrust laws are broad. The Sherman Act, which is a key foundation of our nation's antitrust laws, is broad. And the bottom line is this: it's not illegal per se to be a monopoly or to have monopoly power, but it is illegal to abuse that power, to basically shut out competitors, to prejudice customers and businesses looking to do business with a monopoly actor, and to prejudice consumers. And so, you know, in that way, you suggest that we're breaking new ground, but frankly, we've always had this authority under federal law and state law to make sure that we provide for competition in the marketplace and to protect consumers and the marketplace from monopoly actors, going back to the trust busting more than 100 years ago and the big oil companies. You know, the one really important thing to note is that more than 20 years ago, the federal government took action against Microsoft and Internet Explorer. And at that time, people asked a lot of the same questions about whether it made sense to go after Microsoft at that time, and it did. And what I would note is, if we hadn't taken action against Microsoft so many years ago, there probably wouldn't be a Google.
Interesting. And maybe it was just the years of fighting lawsuits that stopped Microsoft perhaps being quite as innovative as many might have thought it would be. What do you're also, of course, part of the Facebook litigation as well, looking, and in that respect, we've heard of what some of the solutions might be, a proposal that we actually break up Facebook. What are those solutions to Google? What sort of do you want regulation to actually look like to ensure that they don't have this omniscience, this omnipresence that you think is detrimental to the consumer and businesses?
Well, let me just say on the Microsoft point, but I don't think that Microsoft is really worse for wear. It is still arguably the most valuable company on earth and is still dominant in many ways. And that we took action to free up the marketplace and the marketplace of ideas and technology, I think enabled companies like Google and Facebook to start and to grow. But yes, all remedies with respect to Google, as they are with Facebook, are on the table. And we have to look at all the ways in which they use search and their technology to prejudice their competitors and consumers and people looking to do business with them. And so it could include fines and penalties. It could include divestitures. It could include a lot of changes to the way that they do business.
All right, our many thanks to Connecticut Attorney General William Tong for joining us for more on that Google suit that was filed earlier today. We do just want to reiterate the breaking news we brought just moments ago. Several U.S. states were apparently breached in that hack, suspected to be acted on by Russians, at least 3 states, according to people familiar with the matter. I should note that SolarWinds, a company whose service software was involved in those hacks, is down 2% in today's session as we head toward the close. It's down more than 26% so far this week, Caroline.
In the crossfire, certainly SolarWinds. Meanwhile, let's talk about ETFs. It's time for ETF intelligence. And Bitcoin's boom, it sent investors searching for all things crypto, from digital tokens themselves, of course, to equities that profit from them, and funds that try to track them. For more on the funds, that's where we're likely to see the focus. We're going to be joined by Bloomberg Intelligence's James Seifert. James, where are these products? What are these products, and how much demand is there for them?
Yeah, so there's definitely immense demand. The 3 we're going to talk about are 2 are from Grayscale, GBTC, which you guys have spoken about on TV today. $18 billion market cap. It does nothing but hold Bitcoin. ETHE, also from Grayscale, is about $6.5 billion and holds Ethereum. And the newest one is from Bitwise. It's BitW. It's a crypto index fund, essentially, holds 10 different cryptos, and it has roughly a $920 million market cap right now. So these are large funds. And you've spoken about Bitcoin and the price moves all day. These funds are moving alongside the underlying, but at an even faster, more aggressive, almost like a leverage play. GBTC is trading with more than a 30% premium over the underlying value of the Bitcoin it holds. Ethereum, 200% premium, and BitW is the winner at 650% premium. The worst I saw today, 100 shares of BitW traded for $197. That's $197 for a basket of securities that's worth $20. It's crazy.
Yeah, crazy. And the structure of these is interesting, too. I mean, we've seen a lot of companies sort of try to get into the crypto ETF space and only to sort of be rebuffed by the SEC. What's going on there?
Yeah, so, I mean, this, as I said, this is caused by retail investors, but part of this is caused by the SEC. I mean, as far as I'm concerned, the SEC not allowing Bitcoin ETFs is the reason that these products are on the market. Bitwise and Grayscale have both tried to launch a Bitcoin ETF among many other issuers. There's been 29 total filings to launch one, and SEC has shot each one of them down. So in this instance, the SEC has given essentially accredited investors the ability to create shares at NAV and then sell those shares on the open market to retail investors at massive premiums. So PE, hedge funds, high net worth individuals are creating shares and then selling them. So the solution here really is just to allow a Bitcoin ETF, but who knows when that's going to happen.
Yeah, no idea. Whose fault is it, other than the SEC, that all of this is happening, James?
Yeah, I mean, it's definitely retail traders. I mean, undoubtedly, they don't. There's probably a lot of people out there that don't understand what they're buying. They think they're just buying an index fund. They don't realize they're paying $197 for $20 worth of things. But as far as like when an ETF is going to get launched, we really just don't know. There's a lot of things up in the air. Clayton is on his way out at the SEC. There's a lot of other leadership changes happening as the Biden admin comes in. But it's possible that we could see something this summer. That said, if and when the SEC approves an ETF, look for these products, GBTC, ETHE, BitW, to actually work on converting to an ETF. So we think that's what's going to happen eventually, if or when the SEC approves the Bitcoin ETF.
Yeah, GBTC has definitely been the vehicle of choice, up 6% today. Of course, Bitcoin still on fire as we track it here, above 23,000 at one point on the day. Bloomberg Intelligence's James Seifert covering all things crypto for us. All things markets still going on here, guys. Counting you down to the close of trading here in New York. And look at that. S&P 500 not really going anywhere, but 37.19, Kelly. That's going to be good enough for a record high.
Yeah, record high on the NASDAQ, too. I should note that it is big tech to some extent that is leading the charge within the S&P 500 as well. Apple, the biggest points contributor to the index on the day. The biggest drag, of course, being Alphabet, as we were just discussing that antitrust suit. Notably, though, Amazon is lower as well, and the dollar continues to weaken, Caroline.
It does continue to weaken, and that's notable, particularly post the Fed, and that's giving gold a push higher. We're seeing actually commodities on fire across the board, but it's basically everything's at a record high. I'm looking at the Russell 2000 as well, small caps in vogue, so even though you've got big tech winning out, you're also seeing record highs being hit by that index. It feels like an everything rally, Romain.
Yeah, this is an everything rally, and I mean, some people would say that's actually a good thing. Market breadth, we haven't talked about this. First time we've seen, basically since going back to 2009, that we've had 90% or more of the NYSE stocks above their 200-day moving averages. We'll be back in a moment. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Countdown to the close. I'm Caroline High.
I'm Kaylee Lyons.
I'm Romaine Bostick.
Let's get to your benchmark indices. Record highs, the S&P 500, the Nasdaq, the Dow Jones Industrial Average not playing ball, up 0.4%, volume down about 11% versus your usual average for that particular index. But small caps are also where it's at, and we're seeing the outperformance there and a record high for the Russell 2002 remain.
Yeah, small caps are definitely doing their part. Part of that small cap rally involves the banks. You're actually seeing the KBW Bank Index, which of course includes a lot of the big bank indexes, had been higher in the day, actually moving a little bit lower here as we move towards the close. Of course, being batted around, of course, by the rate environment. We've been talking a lot about Bitcoin. You see the main vehicle for a lot of folks here, GBTC, the Grayscale Bitcoin Trust, up 8% here on the day. The ITB also rallying, of course, up 4% here on the day. Lennar seems to be the catalyst there. And keep an eye on the transports, because that's been kind of a sneaky move higher here. You're seeing UPS higher, FedEx, remember, their shares up 1%. Those earnings expected after the bell. Double-digit revenue growth expectation on tap. We'll see once we get the closing bell at 4 p.m.
All right, Romaine, well, let's get some more market analysis now. We're joined by Stephen Whiting. He is Global Chief Investment Strategist and Chief Economist at Citi Private Bank. Stephen, I'm looking at markets ready to close at record highs. On the same day, we got a disappointing print on initial jobless claims, 885,000. Just yesterday, a disappointing print on retail sales. Why, in your opinion, is the market so willing to look past weakness near term in the data?
Well, one part of it is the increasing likelihood that we'll see additional bridging stimulus for the U.S. economy, a number along the lines of $700 billion to $1 trillion ought to be a sufficient bridge. It won't make everyone whole. It won't solve every business's problem, and it won't stop every state or local job cut. But that, along with, at this stage of our preparedness for this COVID emergency, and the fact that vaccines are ahead by mid-year, would certainly be sufficient to get us through this period of weakness. And so equity markets are very forward-looking. I'd expect a very strong year, particularly back half of 2021, as you heard from Jerome Powell, and a very strong 2022. So the returns we're having now are in anticipation of that.
As and when we get there? I mean, can we continue to reach new highs? Can we continue to foresee economic growth, profitability improving out to 2022, 2023? At what point do we catch our breath and think about the valuations and the record highs that we're at?
Well, let's think about this from two perspectives. We have about 4 million people in the United States who aren't participating in the labor force specifically because of COVID. We had a unemployment rate that says 6.7%. Well, if you augment for those people who are sidelines, the unemployment rate's about 10% in the United States. Now, that's down from 20, but it means we have the capacity in a new economic cycle to grow at an above-trend pace for a couple of years at minimum. Things are moving very fast here. This was an external shock to the economy. We perhaps didn't wipe off every particular problem, but you combine that with the other factor, and that is financial repression, that the Federal Reserve is not going to let government debt burdens prevent us from having a post-COVID economic recovery, that we're going to have negative real interest rates for a long period of time. Yeah. And the last time the U.S. government's debt burden was 100% of GDP, the size of the treasury stock compared to the size of the economy, was 1945. Well, we ended up with lower negative rates all the way to the 1970s. So we can have a very long period here of unattractive fixed income returns. Now, I think that the particular equity assets that are rebounding now, things that we position for, like small cap stocks, stocks in Latin America, some of these are just bounce backs. But there are other drivers of long-term growth. And some of those are more highly valued, but they're not highly valued compared to the bond market, which is particularly rich.
Yeah, some of this is a bounce back. I mean, I want to go back to time. I mean, you touched a little bit on the idea of where we are in the market cycle. And I guess how you view this market is going to be kind of dependent on how you view whether we're sort of at the beginning of the cycle, in the middle of the cycle, or at the end. What gives you confidence right now that the current cycle we're in right now is more towards the early stages rather than just sort of the fumes from the last cycle?
Well, it's the economy itself. And I think about this year, 2020 and 2021 are both distorted years from an exogenous shock. We came into 2020 without any particular overextended industries. There were no booms going on. Supply and demand in the U.S. or the world economy were not out of line. Inflation was low as a starting point. And savings rates, there were no real excesses there on consumption. So even if it was a 10-year-old expansion as COVID hit at the time and it ended it, we were in a position to grow for the next couple of years. This, again, is quite artificial to all of that. We have taken some really, really extraordinary steps in terms of fiscal and monetary policy. They're costly steps, but they will limit the long-term damage. And then when we think about our starting point for this, we've gotten back half of the jobs that were lost because of this COVID collapse. There's considerable fuel, even if we slow down, for a prolonged period of economic growth. All right, so I would say that, plus asset markets that are not priced like they were a decade ago for a deeply depressed, high-return environment when nobody wants to invest. Sure, we've got exuberance up a little bit, but many of these industries, the kind of dispersion we've seen, there are sectors that are down 20% this year just because of COVID. So I think there's a good opportunity here still for investors.
All right, Stephen, you're sticking with us. Stephen Whiting, of course, Global Chief Investment Strategist and Chief Economist over at Citi Private Bank, helping us count down to the close. About 4 minutes to go. We want to jump over to the big board. Katie Greifeld, what are you watching?
Well, it is just green across the board. All the major indexes are pointing higher towards the close. And it's new record highs, like you said, for the S&P 500, for the NASDAQ. But I'll just note that it's the little guys leading the way. The Russell 2000 index poised to close about 1% higher. And that's even though Congress is no closer to passing a fiscal aid bill with the end of the year in sight. But it's still the vaccine rollout and a dovish Jerome Powell yesterday just helped boost risk appetite today and just fuel that cyclical rally. And speaking of the Fed, I want to point to break-evens. They continued to rise today, those inflation expectations, with 5-year break-evens touching their highest level since 2019. And Bank of America's Mark Cabana made the point on Bloomberg Television earlier that this is what the Fed wants to see. They want to see those inflation expectations rising as they try to overshoot that 2% inflation target that they failed to consistently hit for years. And meanwhile, Bitcoin had another big day. It briefly broke above $23,000 a coin. It's paired a little bit, but that brings me to our stock of the hour, which is Marathon Patent. It's one of the few publicly traded crypto miners, and it just surged today, up about 15% today as investors try to get their hands on anything crypto related in the equity markets. Kaylee.
All right, Katie, thank you. Still with us is Steve Whiting of Citi Private Bank. And Steve, I got to ask you, Bitcoin, what are your thoughts?
Well, the investments that we consider really worthy of core portfolio investments are income-producing assets, or they're assets that can be sold, that are tangible. There could be intangible assets that can create incomes. So things that create goods and services that are consumed in the economy. So we're talking about corporate equities, we're talking about loans and bonds. What is Bitcoin? Well, perhaps there are some utilities out there in the future, but it's a secret code that you can sell to somebody else so they can have a secret code to sell to someone else. And until there are a lot of utilities for that, you have something that is really worth what the next guy's willing to pay, and that attracts a lot more buyers when the price is going up. So that's a very bubble-like dynamic.
Why do you...
And I think in terms of the ability to have a limited finite supply and the ability to have the creation of new secret codes, in other words, other cryptocurrencies, that can also, again, it can get very big. I mean, the market for cryptocurrencies is pretty small relative to the market cap of any large asset class. But there really is nothing inside of Bitcoin that really is a claim on real assets. So for us, that's not a core investment.
All right, we're speaking here with Stephen Whiting, Global Chief Investment Strategist and Chief Economist at Citi Private Bank, helping us count you down to the close, setting up here for the closing bells in New York. You're going to take a look pretty soon here at a Dow Jones Industrial Average trading at a record high, an S&P 500 trading at a record high, and a NASDAQ Composite looking like it's going to close also at a record high. Kaylee, this is a day, and frankly, this week that I think a lot of folks, if you had gone back a year ago and asked them how 2020 would end, I don't think this is how they would have predicted.
Yeah, I think the average strategist target 12 months ago was something like 32.80. We're setting up here to close at 37.22. Romaine, I mean, no one saw this rally coming. I think also if you went back 12 years ago, people would probably, or 12 months ago, excuse me, probably told you yields were going to be higher on the year. We know that did not happen. The 10-year yield remains below 1% at this point, Romaine.
Yeah, and we talk about, you know, some of the other indices that had moved. I mean, we saw the transports really get a bit, a lot of the materials, the utilities as well. So this isn't really just a tech rally. You had pretty strong market breadth here, about 90% of the NYSE composite above that 200-day moving average. This is the first time, believe it or not, that that's actually happened since 2009, according to the data out there. And so you're talking about a certain euphoria here and a certain confidence, I guess, if you will, not only in an economic recovery, but in the idea here, Kaylee, that at current valuations, this market might have a lot more room to go.
Yeah, it's a fair point, Romaine. But if you were going to tell me that it was confidence in an economic recovery that we were looking at in the market, I might expect yields to be a little bit higher. But nonetheless, the 10-year yield remains down around 93 basis points. It climbed just a basis point today. A little bit more movement on the farther end of the curve. The 30-year yield, excuse me, up about 2 basis points. But you still have the Fed as that anchor. Maybe they didn't extend maturities yesterday, but they still could. And that means yields are staying relatively low based on historic relativity.
All right, let's bring Stephen Whiting back into this conversation, Global Chief Investment Strategist and Chief Economist over at Citi Private Bank. I mean, Stephen, obviously markets don't go in a straight line. There's going to be pullbacks along the way.
Thank you.
When you get to, I guess, when you're sort of looking out a little bit longer term here, what do you think would be sort of the catalyst for any sort of significant pullback?
Well, look, we've just had a lot of extremely good news fundamentally on the virus. I mean, we can talk about fiscal stimulus all you want, but the vaccine is clearly the greatest fiscal stimulus. It will save treasuries enormous sums. It'll allow a large part of the economy to reopen, creating livelihoods for a lot of people on the sidelines. And the news that we had at the beginning of November, that we had in excess of 90% efficacy rates for a couple of the vaccines, was a lot better than anyone expected. So you have to think about it in terms of that changing the point of view for many investors. Some still don't accept it, but they're coming on board. And when that happens, again, it's difficult to sustain that kind of level of incremental new good news. Now, I think, again, how well we handle the next few months, really, again, when we're before the point at which we have widespread distribution of the vaccines, is in the hands of the U.S. Congress. And our government right now, again, could disappoint us. There's room for disappointment as well as room for a little bit further optimism on this. Positioning. Everyone's sentiment rating is through the roof. I think in terms of the amount of repositioning we've seen is small compared to that. If you look back at returns over the last 12 months, defensive assets, like you've said, in bonds, again, have been some of the best performing assets. So I think we've come a long way, the way we're measuring it, only about 35 or 1/3 of the dispersion we've seen driven specifically by the COVID shock has been unwound because of what's happened with the vaccines. I think we have further to go, but the world will not go back exactly as it was pre-COVID, and that especially is the case in the bond market, where the Fed is going to have a different point of view.
Well, let's pick it up with the bond market then, Stephen. Consensus says the 10-year yield is going to climb somewhere in the neighborhood of 30 basis points next year. It hasn't been able to breach 1% since March. Can it actually climb sustainably higher?
Well, look, if the Federal Reserve wanted to make a decision that it did from 1942 to 1951 and say, hey, we'll target long yields. We don't want long yields to go up, right? I don't think you should say, if they were to do that, that it would mean we couldn't have a recovery. It would just mean that we would do it without higher yields. And there's some notion that that may occur. I don't think that that's sort of really necessary, that the costs for the Fed, that doing that would provide a lot of incremental stimulus. I do think that the Fed is very concerned this time around that we don't go through another taper tantrum, that there's no confusion, that simply because we get past this shock, the Federal Reserve will be tightening right away. We've also, after two deep, severe shocks, that the public came to the rescue of the private sector with fiscal stimulus, with monetary stimulus, we now have a lot of Treasury debt outstanding. And they can't allow financial conditions to be the thing that prevents us from having a recovery from the coronavirus shock. So they're going to be easy for a long time. And the question is, what exact tactics do we do there? I certainly think that if we started the year at a 1.9% Treasury yield, we can get above 1%. I have no problem with us getting there, maybe 1.5% at the end of next year. And if you think about it, if we are indeed early in a cycle, this stage, we should see a steepening yield curve and perhaps longer, higher yields than that. But the Federal Reserve is going to resist that a lot. It's going to work very, very hard to prevent yields from rising. And that's going to benefit other asset classes.
All right, always smart, always measured, Stephen. Always great to get your thoughts. That's Stephen Whiting, Global Chief Investment Strategist and Chief Economist over at Citi Private Bank. And we have some breaking news now. FedEx earnings are crossing the wire right now. 2Q adjusted numbers coming in, 483. That's your EPS. The estimate the street was looking for, consensus 401. Here's your revenue number. 2Q revenue, 20.68 billion. Street was looking for 19.43 billion. Not really seeing a forecast yet in here, but we are seeing operating margins come in pretty much in line with what the street was expecting. And FedEx is saying that it will not provide any earnings forecast for fiscal 2021.
Who can provide forecasts right now, Romain? We still have a pandemic going on, even though the broader market seems to have forgotten that. We'll have much more coverage coming up on Bloomberg Markets The Close. We're going to talk about Bitcoin and its massive rise next. This is Bloomberg. This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Let's get you up to speed with where we closed. It was a hat trick. In fact, it was nearly every major index that you look at a record high. The S&P 500, the Dow Jones Industrial Average, the NASDAQ, and indeed the small caps as well, the Russell 2000, all at record highs. Some euphoria in the market remain.
Yeah, a little euphoria, if you want to call it that, Caroline. Bitcoin, something I know is close to your heart, topping 23,000 at one point on the day, having only, of course, surpassed that 20,000 milestone for the first time on Wednesday. Scott Minerd, a big waiter over at Guggenheim Investments, believes the world's largest cryptocurrency's fair value has a ways to go.
We made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
All right, joining us right now to discuss that and a whole lot more, Ryan Selkis, co-founder and CEO of Messari, which, of course, provides a lot of data and pricing and research insights into the crypto world. Ryan, let's start off with, I guess, what a lot of people are talking about, which, of course, is the forecast by Scott Minerd over at Guggenheim. We could set aside the 400K number for a moment. What a lot of people zeroed in on there was what he said basically was his own fundamental research. And there are a lot of people who say, well, what fundamental research can you really do in the crypto space right now? What's the valuation proposition right now? For folks looking at this, is there a way to sort of create a fundamental model?
Well, first of all, happy anniversary. It's 2 years since I came on for the bull-bear debate. Bear market, and we've come a long way since then. I think when we talk about fundamentals for cryptocurrencies, particularly assets like Bitcoin, it's not a capital asset. There's no claim on cash flows. It's not a company. So you have to look at it as part of a basket between gold and digital gold. And what we've seen, particularly with younger investors, and now as part of a institutional narrative, is that the digital gold portion of a portfolio may be stronger and better to hold because it has proven to be uncorrelated and it's been a historically high performer in Bitcoin. I think 400,000, I don't know about fundamentals behind that number, but if you look at it as a percentage of the gold market, that would imply that Bitcoin has basically pulled to parity with gold in institutional investors' portfolio. And in fact, we've started to see that with the likes of Square, MicroStrategy, Mass Mutual, and now I expect many other companies as they put some of their treasuries into Bitcoin in the new year.
Ryan, you mentioned institutional investors, and we all know that Bitcoin is moving with a lot of velocity, 20 to 23,000 in 24 hours, but it also historically has moved with a lot of volatility. Do you think the entrance of more institutional investors into this market damps that down a little bit?
I think there's a lot of things that damp it down over time. One, as the asset gets much larger and more liquid, its volatility is naturally going to come down. It can't go in a straight line up forever. At some point, just like with any startup versus any public company versus any mega cap company, the volatility will come down as this becomes an asset that is held by investors with much, much longer time horizons. If you look at this cycle versus the last time that we were at 20,000, we have healthy lending markets, healthy derivatives markets, and an unprecedented amount of institutional interest where they're going to be holding for 5 to 10 year periods versus retail investors that in prior cycles may have gotten skittish, bought, sold, flipped, and generally danced around the volatility. So I do expect that volatility long-term will come down. It has come down cycle to cycle. But many investors look at this in terms of the Sharpe ratio that adding Bitcoin to a portfolio can bring. And that has been very attractive and sustainably high now for several years.
I want to continue on that point and then tie it back to the point you were making here about gold. And I want to come into my terminal here for our viewers. And we're going to put a chart on the screen which shows you that ratio of Bitcoin to gold. And right now, that ratio is kind of back to the level of where it was back in 2017 when we saw that massive run up here. And there's been a lot of jokes today out there on Twitter of folks basically selling their gold bars, selling their gold coins and using that to invest in Bitcoin. But there is some seriousness behind this here that a lot of the types of folks that would have used gold as their hedge, gold as sort of a way to sort of manipulate the ratios in their portfolio, can now feel like they can use Bitcoin or any sort of crypto for that, now that you have more institutional participation there. Are we sure that that's going to last, Ryan?
I think so. If you look at the split between millennial investors and younger investors in general and older investors that have traditionally gravitated towards gold, that is a generational shift in mindset. And many younger investors are going to be much more comfortable with the same investment pitch that has historically worked with gold in choosing the digital gold equivalent. That's been borne out. We've seen GBTC, the Grayscale Trust, as the most popular, one of the most popular investments for younger investors in the cycle. And I think more institutional investors are looking at the outsized potential performance of Bitcoin versus gold, and they're saying, I can have a digital gold equivalent with lottery-like upside, or I can pick the historical analog. And I think many are going to start to overweight digital gold versus gold in that basket, even if they do hold both as an inflation hedge.
Ryan, we're getting a question from a Bloomberg terminal user who's asking what proof you have that Bitcoin is an uncorrelated asset, making the point that Bitcoin seems to be doing better on risk-on days. What do you say to that?
Well, I think if you look on any short-term horizon, like earlier in March when there was basically a correlation of 1 for every non-cash asset, yes, Bitcoin is not going to be a disaster hedge. It's going to move in lockstep with other risk assets. But over any other time frame, it has been uncorrelated and up and to the right pretty significantly. This has been borne out in our research. Many other independent research firms have borne this out. And it's really become one of the linchpins to the institutional investment thesis that I think has attracted so many so far this year.
So part of that thesis, and we have to kind of talk about the other news of the day, Ryan, was the crossing the wire here. We had Coinbase Global, of course, that mega cryptocurrency exchange, saying that it had filed confidentially here for potential IPO filing. Of course, we don't know the date or how much that filing would be, should it would pursue it. But just the filing of it alone, there's a pretty major deal here, and it seems to add some more legitimacy to a space that, as you sort of joked at the start, maybe a couple years ago, a lot of people weren't taking seriously.
Coinbase is the blue chip in the industry. It is a tightly regulated, buttoned-up, excellent technology company that has a reputation for security, for innovation, and one of the best teams in the industry. So I think it is a fantastic representative for the rest of the industry to be our first public company. I expect to see many others in 2021 and beyond as well. But I think this will be one of the most exciting IPOs of the new year.
Yeah, looking potentially to capitalize on the boom we're seeing in crypto and the boom we're seeing in appetite in IPOs. Ryan Selkis of Mazzari, thank you so much for joining us today. Now let's get a check on the First Word News. Here's Mark Crumpton. Mark.
Kaylee, thank you. A coronavirus relief deal appears close at hand. Senate Majority Leader Mitch McConnell says he's hoping an agreement can be reached today as lawmakers put the finishing touches on a nearly $900 billion agreement. Leader McConnell says it's highly likely the Senate will need to work this weekend and pass a very short stopgap funding bill. President-elect Biden continues to round out his cabinet. Bloomberg has learned that he has chosen Deb Haaland to lead the Interior Department. The New Mexico Congresswoman would be the first American Indian cabinet secretary in U.S. history. And Bloomberg has learned that Mr. Biden has chosen North Carolina environment regulator Michael Regan to lead the EPA. Regan, who is African-American, would add to the diversity of a cabinet that the president-elect said he wants to look like the U.S. His early picks for the top jobs have drawn criticism for not featuring enough people of color. It looks like talks between the UK and the EU aren't going as well as had been hoped. British Prime Minister Boris Johnson said today the negotiations are in a, quote, serious situation. He warned that a deal will be impossible unless the bloc softens its demands over fisheries. European Commission President Ursula von der Leyen said big differences remain between the two sides. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Hiyo mkokoteni ya stima nikaipata naweza sikia vizuri sana kwa sababu inatumia nguvu sana.
The advantage of the electric handcut over the manual conventional handcut is that one, it increases the productivity level of the users. Two, it is eco-friendly in that it does not pollute the environment. Three, it increases the income level for their users in terms of loading capacity and also in terms of productivity.
Not only do we have the capital required, we have the long-term vision, the ability to focus and execute. And this is really about reimagining transportation, really. And so it gives us a baseline to build from and then expand on.
So the suspected Russian hacking spree that roiled US government departments and agencies, we now have learned has also impacted United States states. Joining us now is Lior Div, CEO and co-founder of Cybereason, a Boston-based cybersecurity firm. Lior, your expertise needed here. What is it that we don't know about this yet?
So first, I believe that it's called basically the attack that we're talking about. This is a supply chain attack, meaning that instead of going after the specific customer that you want to hack, what you're doing, you're basically hacking somebody that supplies services or software to this company. And by hacking them, you leverage and get access to the target customer. This is usually give you the ability to hack not just one customer, to hack one place and then gain access to multiple customers that you want to hack.
So that seems to be the real concern here, is that we are at a stage right now where we don't really know how widespread this is. I mean, we've gotten some disclosures from some of the various federal agencies, Lior, but do we get a sense here that this is something that can be, I guess, effectively stopped in its tracks, or is it now just gotten too far?
Yes, so basically we at Cybereason, we track kind of exactly what's going on across our customer base, but outside of the customer base. So basically, every customer of SolarWinds that got kind of the Orion version with the backdoor can be a potential victim of this type of attack. There is a multiple way to mitigate this situation, and I believe that right now we are in a situation that we can contain the situation and not just think that it's going to spread and spread and spread. Of course, this is not the only supply chain attack that exists in the wild, and this is something that nation-state hackers are using almost on a daily basis, in a sense.
Lior, we're also getting news now that the Energy Department and the Nuclear Security Administration within it also was victim to this hack. How hard is this kind of hack to defend against? It's one thing to fix it on the back end and stop it from spreading, but initially, what needs to happen to block this kind of thing?
Yeah, so the uniqueness of this hack is when you think about it, usually people think about it is protecting against something that it's malicious. But basically what the hackers did, they install their backdoor or their access through a legit software. So if you're looking for something strange, it's not going to be strange because it's going to be signed and it's going to be a legit software in your environment. So the way to deal with it preemptively is basically to look for behaviorals and indication of attack. With cyber reason, call it behavioral analytics and the ability to adopt the post-breach mindset, meaning you have to assume that somebody will be able to do something like this and to look for indication that something malicious is happening on a legitimate software. When something like this is happening, then you can just block the software and basically protect your, protect your organization.
Leo, some theorize that perhaps so much focus was made on the US election that eyes were taken off the ball elsewhere. Some theorize that perhaps the US has been lagging in its cybersecurity defenses for years now, and the threat of punishment isn't strong enough. Is there a way to break this cycle, to stop the likes of, I mean, this time we accuse Russia, but there's been North Korea, Iran, different type, US plays at this game too, of course, of cyber defense and cyber espionage. But at what point can we put an end to it, do you think?
Yeah, so I believe that we have to understand that cyber become a new dimension in a warfare between different governments all over the world. We believe that this is not something that's gonna go away. It's a quiet war that's going on between different, basically, countries. We believe as well that the situation in the US, specifically between two presidents, give kind of the opening to Russia to basically do whatever they want without being punished by this regime or that regime. So the geopolitics with cyber, this is something that we believe that not gonna go away. But I believe that as technology is accelerate, there is many opportunity to use and leverage new technology in order to prevent this type of hacks.
Well, so preventing the type of hacks, so I mean, one of the reasons why a lot of companies and countries, for that matter, are finding themselves in this position is because sort of the interdependence globally on various softwares and various forms of hardware that come from a lot of different countries and a lot of different areas, and you piece those all together, it's hard to know where the vulnerabilities are. What's the solution?
Yeah, so I don't believe that if we will block and stop using other people's software, we're going to be protected, because in this case, basically the Russian thought very methodically what will be the choke point, what will be the one place that they're gonna hit, and that will give them access to many places, and they probably use a lot of resources in order to leverage and gain access to this software. It's important to understand that this type of hack is not happening in a day or two. This is something that you plan and you take your time and you execute. So by preventing us or to say to the general population, don't use software from company X or Y, that's not gonna solve the problem, because hackers that know what they are doing basically will gain this access and will be able to manipulate and hack to the relevant places that they want.
It's a scary thought. All right, many thanks to Lior Div. He is CEO and co-founder of Cyber Reason. And that's going to do it for us on Bloomberg Markets to Close. But guys, this talk about hacking really makes me think. I mean, my entire life is on digital devices. Literally my entire life.
Yeah, what do you think of that, Caroline?
I think double authentication. You heard it here first, peeps. But mainly get yourself an authentication app and rely on it religiously, Kaylee.
Fair enough. Fair enough.
All right.
I'm going to go change my settings now.
Change your settings. You got it. Yeah, me too. Because I think I'm on like a 0.5 authentication. So, did Caroline tell you, Kaylee, that she and I were actually hosting a Christmas spectacular?
I think she did. I think it's called Holly Jolly. When is that airing, guys?
It begins airing tomorrow, right here on Bloomberg Television, and wherever you get your.
Well, that'll get you in the spirit.
All right.
I'll look forward to that one. What'd you miss is coming up next. Thanks for joining us. This is Bloomberg.
once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
With a new administration coming to Washington, changes are undoubtedly in store, from the economy to foreign policy to public health. I'm David Weston. Join me for a Balance of Power special report, a look ahead to the next 4 years, this weekend on Bloomberg Television.
From Bloomberg's world headquarters and from right here in London, this is, of course, What'd You Miss? I'm Caroline Hyde.
I'm Joe Weisenthal. I'm Romaine Bostic. Let's get you caught up on where U.S. markets finished the day here. You're taking a look at an S&P 500 that closed at a record high, and Bitcoin continues its march higher.
The question is, what'd you miss?
Another day, another set of records. I mean, there certainly has been mania in the markets across equities, across indices, across assets. Even as we saw, guys, US jobless claims unexpectedly jumping to the highest level in 3 months. Maybe the bad news becomes good news. It couldn't slow down investor optimism as we bet on fiscal stimulus. And it isn't just big names we hear about all the time. Small caps also hitting a record high as well, with names like, I don't know, Penn Gaming helping to lead the charge. So the question is today, will this enthusiasm ever wane? Today we talked to a behaviorist about, well, this market mania. He says small caps are just getting started. Joe, we talk about US stimulus. It's a big reason why investors have faith right now in almost, well, everything. But talks, they're just inching along, right?
Yeah, they're coming any second now. They're going to get a deal. Any moment now, they're this close. No, who knows? They still don't have a deal yet, but, you know, the reports are that they're still close. McConnell's saying a deal is close at hand. They might have to work the weekend, though. Less than $900 billion, but it would include payments to individuals. And a key issue, and this could be interesting, 2 GOP lawmakers say they want the law to stipulate that some of these Fed facilities under CARES officially come to an end, potentially sort of kneecapping some of the response under a theoretical Biden administration. So watch that particular detail to see if that throws a spanner in the works here at all.
Yeah, and then even if you do get this done, Caroline, you just kind of wonder what the actual impact is going to be, the economic impact, and whether it's going to be able to make up some of the lost ground that we've had over the last few months.
So much to be made up for at the moment. Let's get the latest. We're going to go to Bloomberg Government Emily Wilkins. Joe outlined some of the stumbling blocks at the moment, what Republicans are wanting to shoehorn in. What really is holding it up right now? Why work the weekend?
Well, it's 2 things at this point. Number one, as you guys just mentioned, Republicans are asking to terminate the Federal Reserve's pandemic lending facilities. Democrats, meanwhile, are pushing to match FEMA payouts for COVID-driven relief disasters. And those have sort of been the last 2 sticking points that we've seen come up in these discussions. However, there are other sort of smaller issues swirling around, so these might not be the last hurdles that lawmakers need to jump.
So it's always hard to tell. I mean, what should we be watching for in your view? Are the details the key thing, or is it more the mood music that it seems like all the leaders on all the sides, or at least both sides, I guess, seem to actually want to make a deal?
It's a little bit of both. I think we have finally gotten to the point where we can safely say that all leaders want to make a deal. They've all said that if they will not be leaving the Capitol until an agreement gets done. I think at this point, it's a bit of the devil in the details and how much of a push they all feel from their respective constituencies. The upcoming Christmas break is usually a very strong motivator for Congress to get its work done.
Okay. Well, Emily, how much is the White House involved in this? I mean, the last time we had a big bill like this, the CARES Act, Steve Mnuchin was pretty involved in the negotiations. It doesn't really seem like we've heard from them much.
Yeah, Mnuchin has really stepped back here. He said that he was going to let Senate Majority Leader Mitch McConnell sort of take over his spot. And to be frank, that makes a lot more sense. McConnell's going to ultimately be the person to decide whether or not this goes to the Senate floor. And so you have seen Republicans and Democrats in both chambers work together. You've seen ongoing discussions. They were late last night. They're today. And so it seems that in that regard, that group is beginning to make progress.
All right. Keep an eye here on the progress of that fiscal stimulus bill. Of course, if we get any news, we'll bring it to you live right here on Bloomberg Government's Emily Wilkins there with the update. Now, stick with us. Coming up, still without aid, our next guest says even if we get a relief package ahead of the holidays, it may be too timid to heal the economy. I think I just said that. Nir Kassir, who I'm sure actually has some rationale for what he says, coming up next after the break. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
All right, today we are focused on the enthusiasm out there in markets, indices, of course, hitting records, those stock indices. And of course, Joe, we're all sort of getting ready to print out our Bitcoin 400K hats.
You can't print
any
Bitcoin.
moment.
Oh, hats.
Oh, the hats.
So
I can't print the Bitcoin?
You can't just print the Bitcoin.
I thought so. Well,
yeah,
you
it's
know,
a bummer.
Okay. Well, in all seriousness, though, I mean, when we talk about the euphoria in the markets, there's still economic data, hard economic data out there that still shows a lot of pain and a lot of progress that we still need to make.
Yeah, it really is striking. I mean, we talk about this gap between markets and the real economy a lot. The real economy has improved a lot since the worst of the crisis, but it's not at a sort of euphoric state like we seem to be seeing in markets. More confirmation of some of that weakness today. Initial jobless claims rising to 885K. Remember, pre-crisis, we were in the low 200K. So this is a massive increase, a rise from last week, worse than expected, a sign that this sort of winter COVID wave slowdown is very much here. So ongoing problems. Let's bring in Nir Kaysar, who co-authored a Bloomberg opinion piece on this topic. Nir, I mean, how much, in your view, is what we're seeing right now in the economic data, the failure to get stimulus, sort of like already evidence of a policy failure from D.C.?
Well, I think the markets have pretty well digested the reality, which is, it looks like we're going to get something. It's not going to be a lot. It's not going to help everyone. And the people that it does help, namely, workers, ordinary Americans, hopefully it'll get them through the next several months. The vaccine goes well and we can move on with our lives. But it's certainly not the type of robust and thoughtful package that you would ideally want a Congress to be able to pass in the middle of a crisis. Something that is sort of muscular fiscal stimulus. But it'll have to do, I suppose. And I think, we've known this was going to be the reality for some time because they've had months to work on this, and this is all we're going to get. And so I think markets have digested all of this by now.
They've digested. What is priced in and why? I mean, of course, today bad news was good news, yet more hope on stimulus. But if it's a skinny stimulus, what hope does the market have that this really drives us that much higher?
Well, I think it all hangs on the vaccine. I think the base case at this point is that we're going to get a widely distributed vaccine in the next several months. Maybe that's, the middle of next year. And then we can move on and people start resuming their life, and you get companies basically going back to normal. The reason I say that is because in November, as you know, we had a huge rally across the market, and it was the most beaten down quarters of the market that actually did the best. And that looked very much to me like a reflation. It was markets basically saying, okay, it's time to treat these beaten down companies as if they're going to go back to normal operations sometime soon. And the market tends to do that historically, roughly 6 to 9 months before the event actually happens. We saw that in the financial crisis. We've seen that in previous crises. And so around roughly summer, I think, is what the market is telling us. If that turns out to be not the case, I think we're going to be in for some bumps.
Well, then that brings us back, I guess, to the stimulus package or whatever packages we get out of Congress, and how critical, if at all, that would be to maybe fulfilling some of these bets that have already been made in the market. Nir, I mean, your column today that you wrote basically seems to suggest that Congress isn't really willing to use their full fiscal powers, and the fact that we're talking about a bill that is less than $1 trillion seems to suggest that's true.
Yeah, and that's, I think, problematic in two respects. One, longer term. I think as Tim and I say in the piece, I think we have all kinds of sort of deeper problems that we need to deal with. And we had an opportunity, at the end of this, we will have spent $4 trillion. $4 trillion would have done a lot for infrastructure, for education, for public health. We didn't get any of that. We did what we needed to do, but we didn't get any of that. And so, those problems will persist. And they were a drag, it seems to us, on the economy after the financial crisis. And they will be going forward. The second problem is that, this is sort of, it looks to me anyway, that this is as good as we're going to do. It's hard for me to imagine any more fiscal stimulus coming down the pike. So now we're really at a point where if this isn't enough, there could be another inflection point where markets are spooked, where the economic reality is not great, where lots of Americans are understandably concerned. So I think we all have to hope now that this is going to go well, that this relief is going to be enough. Now we can at very least move on, and then we'll have to deal with a larger economic problem somewhere down the road.
So in your view, though, from a market's perspective, is a fiscal stimulus, what's baked in? Is it just a successful rollout of the vaccine and more or less return to normal sometime in Q2? Is that sort of like the key thing that, in your view, needs to happen to sort of vindicate the bulls here?
Yeah, Joe, I think two things. One is, yes, I think the base case is, I think the market is saying as long as the vaccine goes reasonably well and everything goes back to normal roughly around the summer, then there shouldn't be any surprises. But also that this latest round of stimulus is actually going to get people from here to there without really having too much of an impact on spending. As long as those two things are true, I think that's the base case that's priced in the markets. If we get any surprises, it's hard to imagine a positive surprise from there, right? But if we get any negative surprises from there, then I do think there's going to have to be a repricing.
Nir, you allocated to Bitcoin yet?
I am not. I am slightly embarrassed to say.
All right, well...
It's not too late.
Who knows?
Jump on the bandwagon.
I'm sure you get a lot of questions about that. Anyway, always great to talk to you, Nir Kaysar, Bloomberg opinion columnist and Unison Advisors founder. Now, coming up, with no end in sight for market enthusiasm, we speak with a small-cap behavioral investor, Fred Stansky of Fuller and Thaler Asset Management, all about this market mania. This is Bloomberg.
Saving for retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
I think we have a lot to be optimistic about in this country, but in the near term, even with these vaccines, Moderna and Pfizer, we just got to allow them to be given to the people who need them the most, but that's going to take more than 6 months.
So today we are focused on, well, the mania, what else we could call it, in the markets. One stock that has showcased this risk-on attitude is Tesla, up 684% in 2020. Yep, 684%. Joe.
It's a lot of Bitcoin.
We're going to see it actually hit the S&P 500 tomorrow, and that could roil things, hey?
Romaine isn't impressed with any move unless you price it in Bitcoin first and then establish that. I think Tesla is down in Bitcoin terms, so he's totally underwhelmed. Nonetheless, for the rest of us, They have had an extremely impressive year, and after the close tomorrow, it will be sort of graduating into the big league, so to speak, with its inclusion in the S&P 500, where it would be, looks like, to be the 6th biggest company.
Yeah, it's going to be a major event there. Of course, a lot of activity potentially tomorrow with the quadruple witching sort of coinciding with the introduction of Tesla to the indexes. So we'll see what happens. So a lot's going on in this market with the big caps, with the small caps, and everything in between. All the caps. Here to discuss the behavior of the markets and market participants, I should say, is Fuller & Thaler asset management partner and portfolio manager, Fred Stansky, who specializes in behavioral investing and small caps. Fred, thanks for being here.
Hi.
What's the behavior telling you right now?
Behavior's telling me that everything's pretty good, that investors are well aware of what's going on, and they're not making too many mistakes right now. They made a few mistakes earlier in the year, but I think things have corrected themselves.
Fred, what are you analyzing to get that gauge of sentiment? Are you looking at retail investment? Are you looking at, whose behavior are you studying?
Well, we study the insiders' behavior as well as the results that companies produce. And if you look back in March of this year, you'd see record amounts of insider activity by insiders. So they were buying up a lot of the stock that was being decimated in the market because of COVID. And that looks like it was a pretty good bet right now. And so that's the kind of behavior we're looking at, and the kind of behavior that is ignored by investors at points in time when you get extreme emotional reactions in the marketplace.
So, I mean, we were joking earlier about pricing Tesla in Bitcoin, and we said in the intro that, we used the word mania and exuberance. We're just throwing that word around, but maybe one day we'll look back at this and say this was not mania at all. Maybe it'll all get crazier. How do you know, what do you look for to see what looks like peak mania when it really is euphoria? What are the signs that show, wow, people are really, really going all in?
Well, what we would look back at is the behavior of the people that know more about the companies than anyone else. So if we saw record amounts of insider selling right now, we would be concerned, but we don't see that. Or if we saw record amounts of stock issuance, but we don't see that either right now. The period that's always talked about right now is 1999. And back in 1999, the indexes, the technology portion of the indexes was close to 60% in the small cap space. And we're nowhere near those type of levels. So, yeah, there's always frothiness in some parts of the market, but overall right now, it's still pretty solid.
So when we start talking about sort of the recovery, the economic recovery, I mean, the market is generally obviously trying to front run that and get ahead of the beneficiaries of that recovery. So if you're looking at the small caps, you're looking, or at least looking at some of those stocks that had been beaten down because of the pandemic and because of the recession, is there confidence out there right now that the rebound in earnings and revenue growth is actually going to come along once the actual economic recovery comes in?
Well, I think the insiders, like I said earlier, that were buying back in March, they had a lot of confidence in it too. And if you look at what the analysts are doing out in the marketplace right now, increasing their revenues, both on sales and earnings, I think there's a lot more confidence in overall in what's going on. There's different parts of the market, obviously, that are having difficulties, and that's always going to be the case. And so what we're trying to do is find those situations where we find good information or bad information, but we think people are creating bad behavior based on that information.
They're either overreacting or underreacting. Where are you seeing some mistakes being made by investors from your perspective at the moment?
Yeah, well, like you said, we think investors can be overreact or underreact in certain situations. Right now, it seems that there's not a lot of overreaction anymore, but there was earlier in the year. And there seems to be underreaction to earnings. A lot of the analysts earlier in the year had dropped their numbers way too much relative to COVID and the economy. And so those numbers are starting to come back up. And you've seen people react to that information. And people had underreacted to that information for a couple quarters now. And that's really impacted a lot of the stocks.
Fred, you say that you don't see a lot of equity issuance, you don't see a lot of insider selling, which in your view would be hallmarks of a mania or maybe a sign of caution. But we do see a huge amount of equitization, massive IPOs, anything that's not nailed down. It looks like people are trying to take public in a SPAC. Huge premiums in public market assets versus private market assets. If you look at, say, an Airbnb or DoorDash or some of these, why should we not consider these forms of de facto insider selling, people with assets recognizing that they can make a lot of money on public markets right now?
Yeah, I think you can recognize it that way, but you also can recognize that a lot of those pricing that went on, had those IPOs come out and not moved up as much as they had, I think you probably wouldn't have as much concern about that. And so what you're seeing, I think, is a lot of more retail investors getting involved in those IPOs, and that's probably not a good thing in the long term. But in the short term, it's a small part of the market right now. The dollar amounts might be very large, but to small cap investors like myself, it's not that big of an issue now.
With regards to the retail side of this, I mean, back during the tech bubble in 99, 2000, there was a lot of concern back then about the retail investors getting in. Of course, the vehicles that they were using to get into the market looked a little bit differently, but it was kind of the same sort of influx of folks to the market. And there were concerns then. Some of those concerns proved to be founded, while others didn't. Are there parallels that we can find between what happened back in the lead up to that 99, 2000 pop in that bubble and where we are today?
Yeah, like I mentioned earlier, you can look at what percentage of certain industries are, and technology is still, although in the large cap indexes it's much larger, in the small cap indexes it hasn't taken up a very large portion of anything unusual. Also, you could look at how individuals are reacting. I don't know if you remember, day trading was a very popular thing.
Yeah.
Maybe it's not quite as popular as it is now. And in fact, there's the Robinhood traders, et cetera, but it's still not nearly, and the number of companies that are being issued right now are much larger. Back in the other peak, it was a whole host of companies coming out every single day, and much smaller companies. So you're not seeing that same. You're seeing very solid large companies that are becoming public at this level.
Fred, of course, you focus in on the smaller caps, and to a larger degree, that's where it goes unanalyzed, some of the insider buying and selling. Do you think more analysis is needed to be done of the market? Do you think it ever will be?
I think people are always going to go back to what they're comfortable and familiar with, and sometimes that's not exactly the behavior that they're trying to accomplish. And so I think always people are going to make these mental mistakes that we're talking about, and it's just an opportunity to take advantage of those, that are what people should be trying to do at all times.
All right, interesting insights here, Fred. I really appreciate you coming on this program. Yeah. Fred Stansky, partner and portfolio manager at Fuller & Thaler Asset Management. Now, that is all, Joe, for What'd You Miss?
Bloomberg Technology up next in the U.S., and Daybreak Australia is up next in Asia.
Have a very good evening. This is Bloomberg. It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
Well, everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, multiple states hit Google with yet another lawsuit accusing the search giant of using its dominance to steal content and starve its competitors of traffic. One of the many attorneys general behind the suit, Maura Healey of Massachusetts, joins us this hour. Plus, the FDA is on the cusp of approving the second COVID-19 vaccine. Health regulators have been meeting with Moderna this hour as cases continue to surge and more deaths are being reported per day than ever. And it has been another busy week for tech IPOs. Longtime tech investor Hans Tung of GGV Capital is also an investor in the newly public e-tailer Wish. He will weigh in on the first big tech company to fall below its IPO price in weeks. All of that in a moment, but first, U.S. stocks notching a solid gain to close the year, and we are just getting some breaking news that a committee of independent experts at the FDA has voted to approve Moderna's vaccine. They've been meeting with Moderna executives all day long, and this committee of outside experts recommending that the FDA approve Moderna's vaccine candidate. This is not an official approval, but it is very likely given that these independent experts have given this the green light. This is huge. I want to bring in Bloomberg's Katie Greifeld. Katie, are we seeing any market moves on the back of this just yet?
Well, not yet. Futures aren't yet open, but I imagine they'll take that positively, especially because it was a risk-on day in markets, even though Congress is still locked in a stalemate over that stimulus bill and time is running out to pass something by year end. But still, all the majors closed higher, and it was small caps that led the charge, with the Russell 2000 closing 1.3% higher at a record high. But zooming out, even though the cyclical rally has been with us for over a month, tech is still your year-to-date winner. The NASDAQ 100 is 46% higher in 2020 after being fueled by that stay-at-home trade throughout the summer. And you're seeing small caps playing catch-up here, up almost 19% year-to-date. But tech has a big head start, and small caps would have to have a massive 2 weeks to catch up. And meanwhile, it was another big day for Bitcoin. It briefly broke above that $23,000 level, bringing its weekly gain to over 20%. And that boosted crypto miners like Marathon Patent and Bit Digital, but not every crypto exposed stock rallied. And you saw the likes of MicroStrategy and Riot Blockchain fade into the close as that Bitcoin rally paired just a little bit, Emily.
All right, Bloomberg's Katie Greifeld. Lots for the markets to digest, including news just broke that Poshmark, the secondhand clothing retailer, has also filed for IPO. Coinbase, of course, the cryptocurrency exchange, also filing to go public earlier today. So it's been a big week in tech IPOs. Tech companies filing for IPOs. We're going to get to all of that later this hour. Now I want to get back to yet another lawsuit against Google from a bipartisan coalition of 38 states. Colorado, Iowa, Massachusetts, and more, accusing the company of illegally monopolizing internet search and search advertising. This marking the third U.S. case against the tech giant in 2 months, and coming just a day after 10 Republican state attorneys general led by Texas sued the company for anti-competitive practices. Joining us now for more, Massachusetts Attorney General Maura Healey, who is part of this latest lawsuit. Attorney General Healey, great to have you back on the show. So make the case. Why did you decide to bring this suit?
Well,
basically our economy really revolves around this concept of free competition in the marketplace. And we know that through time, that competition, it breeds innovation. It helps consumers have more choices. It lowers prices. And unfortunately, what we've seen from these two big tech companies, Facebook and then more recently here, Google, is efforts to engage in anti-competitive conduct, monopolistic conduct that has had the effect of killing competition, of hurting consumers and hurting small businesses. And that's why you saw this really sweeping bipartisan action by state AGs and the Justice Department to bring lawsuits to stop this behavior once and for all.
Now, Google has made the case that the government's argument is flawed, that people don't use Google because they have to, but because they want to. In response to this particular suit, the company today saying this lawsuit seeks to redesign search in ways that would deprive Americans of helpful information and hurt businesses' ability to connect directly with customers. We look forward to making that case in court. The company is basically saying that this complaint would force Google to make search less useful. What's your response to that?
Well, it's just not true. I mean, I'm not surprised that that is a response from the company, but, you know, no way do we want people to have less ability to search. We, in fact, want people to have a greater ability to search. And what Google has done over time is essentially do all sorts of things that keep us, the public consumers, from being able to actually search as effectively as we could. I'll tell you what they do, for example, right? You know, sometimes when you buy a car or you buy a cell phone, you're going to see that Google is the dominant, right, search engine. And that's done because Google's forced and has entered into agreements with those entities that's made Google the dominant search engine. So that's one way they keep other search engines out of the mix, out of competition. The other thing they do is they are a search engine. And so, you know, they've used that power to basically make sure that when people conduct searches, our investigation showed it was Google-sponsored searches, Google-sponsored findings that were coming to the top, including, you know, Google-paid advertisements, meaning advertisements that were paid to Google. And so, you know, that's just not fair. That's playing games with the market. That's playing games with searching. They also protected their own profits, you know, by inflating their profits so that advertisers, you know, would favor advertising on the Google platform. And then we've seen time and time again them discriminate against other sites, whether it was TripAdvisor or Angie's List or Yelp, by basically depriving them of access to pretty valuable real estate on the search results page. So bottom line, Google's conduct has led to less privacy, less innovation, less choice for customers, and it's a problem. It also happens to be illegal, and that's why we've taken them to court.
It sounds like quite a case, but one of your peers, the Attorney General of Iowa, said antitrust law is really hard for plaintiffs. You know, do you think you face an uphill battle given that Google has deep pockets and can throw, you know, almost an unlimited amount of money at top lawyers to fight this?
Well, you know, Google does have a lot of money. Facebook does have a lot of money. But I know that our lawyers and our teams are more than up to the task, and we will do the job as we've done the job throughout pursuing this investigation. And look, I understand and appreciate the importance of technology. I'm here in Massachusetts, and we have had the benefit of a huge, vibrant technology, you know, ecosystem. I support that. But what I don't support is anti-competitive tactics. And, you know, we've heard too much time and time again about some of the tactics used by Google, used by Facebook, and we feel very confident about the evidence that we'll be presenting.
So what is the remedy that you would like to see?
Well, I think really you can look at a range of remedies. Certainly the first thing that needs to happen is these companies need to stop doing the things that they are doing. You know, Google needs to make right and be fair and square with its search engine policies and the way it does its contracting. You know, Facebook needs to stop and just end this buy or bury strategy, whether they either try to buy you up or if you don't want to be bought, they'll bury you by not letting you have access to the platform. These behaviors, this conduct needs to stop. That's the first remedy. The second remedy is that we need to look at what needs to happen to restore competition. See, our argument is they've done things that have reduced competition, eliminated competition. So in order to make that right, we have to consider a number of things, including potentially divestiture of assets or reformation of some of these contracts. It's too early to judge what is most appropriate here, except to say that the goal will be to preserve competition.
Now, I'm curious for your take on the case that was brought by the other attorneys general led by Texas yesterday. I presume you may have had access to the same documents that they did, showing some pretty egregious behavior by Google. Why didn't you sign on to that suit?
Well, that is a different case. It centers around practices involving the displaying of ads and the targeting and potential targeting of ads to viewers. I decided to invest resources and time in this case because I think fundamentally it goes to the structure and the underpinnings of Google and how they've built out their product and service, and in a way that we allege is anti-competitive, is monopolistic, and harms consumers and harms innovation. And so that's why I chose to bring this case. And again, I'm sure that that both cases will be pursued vigorously in court.
Now, Attorney General Peterson of Nebraska earlier talked about how his concern really started to, mount after a meeting in 2018, a national meeting of attorneys general on Google's data usage. And I wonder if there's anything you remember from that meeting. What was the sort of spark that led your own concerns to start to mount?
Well, I do recall any number of meetings of AGs, but this has been long the subject of discussion. I know for our office, we've been paying attention to this for years and have worked very, very intensely with a multi-state group on this. I think that, you'd have to be completely asleep at the switch if you didn't realize the extent to which platforms have come to dominate our lives. How news is delivered, how we access even healthcare, finance, school. And, what's important is that we celebrate and honor and incent innovation, right? But we have to, at the same time, make sure that we're looking out to see that others in the marketplace aren't engaged in any competitive conduct. And basically, the word on the street out there was if you didn't play with Facebook and if you didn't submit to or relent to Mark Zuckerberg's desires, then you were going to face the quote wrath of Mark and basically be buried. And in fact, that's what happened for those who, for example, tried to step on Facebook's turf. I mean, look at all the companies that have started up and gone by the boards because, Facebook was out there looking to kill competitors. And, it's not that we don't understand that healthy competition is part of our market economy, but the laws are very clear, including the Sherman Act and the Clayton Act, both federal laws that make clear that there are certain anti-competitive actions that are illegal. And that's what we're addressing here.
Since you mentioned Mark Zuckerberg, I'm curious, do you think Google is more egregious than certain other big tech giants like Facebook and Amazon? I mean, there is an irony in that, you've got the government scrutinizing all of these companies, and yet these companies citing each other as the competition.
Yeah, well, look, I'm not going to rank. What I will say is that we have some really big tech giants out there, two of whom we believe have engaged in for far too long illegal and anti-competitive practices. And so, we want to make sure we make that right for our economy, for innovation, and for the public.
One last question on a slightly different topic. We know now that Russian state actors are behind this massive hack attack through a company called SolarWinds on various U.S. government agencies. What is your take on what we know so far? There seems to be some indication that what exactly happened is quite alarming.
Well, yes, and I'm just learning more about this now. I will tell you, this points to the work that is absolutely imperative. For far too long, I think that we have been exposed, and my hope is that with the new administration, the Biden-Harris administration will do everything they can, as I'm sure they will, to lock down and make sure that we are protected from assaults, whether it's assaults that are, emanating from within our borders, or importantly, and as we've seen in the past, assaults that are emanating from foreign sources and foreign countries. It is absolutely imperative. As a state attorney general, I've understood and have handled cases where there have been these kinds of breaches and breaches of privacy and the misuse of information. This is incredibly harmful. It is a matter of homeland security. It is a matter of public safety, and all resources and coordination, local, state, and federal, need to be brought to bear on the issue of cybersecurity and protecting the United States.
All right. Attorney General Maura Healey of Massachusetts, thank you so much, Attorney General Healey, for joining us today. All right. Coming up, as FDA advisors now back Moderna's COVID-19 vaccine, we're going to hear from Salesforce about how the company is using its technology to help deliver shots all over the world. That is next. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Our generation's biggest problem.
Climate change is happening.
SAS and Microsoft are joining forces to further shape the future of AI. Now you can run workloads that work for you. It's time to reimagine analytics in the cloud.
Bloomberg Green has you covered.
Moderna's COVID-19 vaccine has won the backing of a panel of independent experts who advise U.S. regulators, including the FDA, setting the stage for its shot to be the second vaccine cleared in the United States following Pfizer. Meantime, the cloud giant Salesforce is angling to take an active role in vaccine distribution, the company partnering with Gavi, the Vaccine Alliance, and aims to distribute 2 billion doses of the vaccine by the end of next year. Salesforce will help Gavi and 190 participating countries equitably share information that is critical to the management of vaccine distribution. Joining me now is Salesforce's Chief Medical Officer, Dr. Ashvini Zanuz. Dr. Zanuz, thank you so much for joining us. Obviously, just want to get your reaction to the news that we heard just minutes ago that this committee of independent experts is telling the FDA that Moderna's vaccine should be officially approved. How significant is this?
This is very, very significant. I mean, the more vaccines we have on the market that are safe, that are available to use for our population, the faster it is that we get out of this darkness. I mean, this is definitely light at the end of the tunnel. I am even more it's even more emotional as a healthcare worker and an individual just to see the amount of toll this has taken on many of my colleagues in the healthcare industry. It is incredibly moving to see how quickly the FDA is moving and how, they're evaluating the safety of these vaccines and having them come to market.
From your vantage point, how are distribution efforts going so far? What have been the victories? What have been the hiccups?
Yeah, I mean, let me just start by saying that this is historic in the type of mobilization that's been required. We have not seen something like this in public health before. We're talking about delivering billions and billions of doses around the world. Just in the U.S. alone, we now need to deliver these vaccines to 21 million healthcare workers. And really, planning has been underway now for months with complex logistics, ultra-cold storage, all of the partnerships that are required. So I am actually incredibly amazed how well this is working and how the public-private partnerships are really leading the way and collaborating. From what I'm seeing, I think the hiccups are more in the communications. We need to take a much broader stance on clear, transparent communication as this gets rolled out, so that we don't continue to have vaccine hesitancy. But from a mobilization effort, I am incredibly impressed with where we are.
So what is Salesforce's role in this distribution going to be?
Yeah, I mean, for us, since the onset of this pandemic, we saw a need to step up, just from everything from getting PPEs to hospitals. We saw that this was a significant challenge that was developing in the world from what we faced, in modern times, really. So what we did a few months ago is launch something called Work.com, and it's a platform that really, when we got started, offers technology for governments and organizations to have their employees manage their employees, right? Looking for PPE management, contact tracing, testing, back to work resources, emergency response, et cetera. But we now have expanded it over the last few weeks to a comprehensive vaccine management solution. It's a technology that several states have already started using, and it essentially allows for inventory management, administration, appointment scheduling, notifications, and really importantly, managing and monitoring outcomes. So we are providing a reliable, agile technology that countries, governments, organizations really can use flexibly to monitor how they are managing and delivering these vaccines.
Now, at the same time that this vaccine is just starting to be distributed, it feels like COVID is closer than ever. If you haven't gotten it already, someone close to you has. People are spending the holidays separated. There is a lot of fear out there. The vaccine is going to take time. There are so many people who want it now who can't get it right now. Teachers, for example, who are still working in schools. Quickly, it's not too late, is it?
It's not too late. I mean, the vaccines are definitely very important, but I think we need to recognize that we're a long ways to getting the entire world vaccinated, and that is really important to have equitable vaccination globally. Of course, we're going to start with the people that are taking care of the sick, our frontline healthcare workers and the people in long-term nursing homes. And, from what I am hearing, they are prioritizing for the next wave people that are critical, like teachers, so that we can get them vaccinated before we move on. But just getting vaccinated does not mean that you can move around without masks and social distancing. We really still need to maintain all of the things that we're doing so that we stop the spread of this pandemic while the rest of the world gets vaccinated.
Absolutely. We just have to hold on for a few more months, hopefully. Dr. Ashvini Zanuz, Salesforce Chief Medical Officer. Dr. Zanuz, thank you so much for joining us. Coming up, Robinhood's relationship with the SEC has been a rocky one. About the company's $65 million settlement. Next, this is Bloomberg.
There's a need and a clear need for me to spend money. I need to spend money to boost the economy, the necessary push. And therefore today, as of now, and for this fiscal, I shall not worry about the deficit number.
Robinhood has agreed to pay $65 million to settle allegations by the SEC. The SEC accusing the broker of failing to inform clients that it sold their stock orders to high-frequency traders and other financial firms. In addition to the fine, Robinhood agreeing to have an outside consultant make sure it provides the best execution for trades. The company has gained notoriety by attracting a massive customer base of young investors. And Bitcoin rallying 20% this week. We're going to continue to cover the rapid rise of the cryptocurrency as the week continues. Coming up, we have Hans Tung, managing partner at GGV Capital, who just hit 6 IPOs this week with Wish's debut yesterday. He joins us next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. A hot market for tech IPOs as DoorDash, Airbnb, Wish, and Upstart all debuted over the last couple of weeks. Airbnb hitting the market with a very lofty valuation, while Wish's parent company Context Logic debuted with a less than stellar opening day. The bargain e-tailer, though, has since made up some of those losses, climbing just over 11% during the trade today. Joining me now to talk more about the tech IPO market and what's to come, longtime investor and managing partner at GGV Capital, Hans Tung. Hans, Wish was your 6th IPO of the year, so you've certainly had a lot of ups this year, and I'm curious what your take is on Wish's debut in particular, coming off of Airbnb and DoorDash doubling their valuations. Was that a disappointment, or is this just the beginning of a longer journey?
Yeah, you know as well. Yeah, we've been on this show several times many times this decade, and we talk about Alibaba, talk about Xiaomi, talk about a number of interesting companies from our portfolio, and with many of the e-commerce players, when they list initially, a lot of investors are going to have questions. How are you going to be different from the incumbents like Alibaba or Amazon and so forth? So it takes some time to establish credibility for the public investor to get to know them. So we know all along that for companies like a Wish, it's a milestone. And if you're bullish on long term on the opportunities going after, which we are going after the mass market, the underserved segment, lots of value conscious consumers out there who want a more fun shopping experience. It offers a lot of upside and a lot of growth ahead. So very happy and proud of the management team, and we thought that Peter and the team did an amazing job of taking the company public and continue to grow the business.
And we did speak to Peter yesterday, and he also discussed the fact that this was just the beginning of a longer journey. That said, there are some concerns that are specific to Wish, the quality of the goods received, the integrity of the platform, and the fact that they're competing with Amazon. How do you respond to those concerns?
Yeah, we see companies like Pinduoduo that have gone public the last 2 years to show that even in China, where it's already quite dominant with Alibaba, with JD, there's a huge market that's underserved in tier 3, 4, 5 cities. And Pinduoduo has shown amazing growth since they got public 2 years ago. But even the first year, once they got public, you see the stock price hovering around a bit over their IPO price, or sometimes even dip below. So it does take public investors time to get to know our story. But the fact that Pinduoduo has done so well, and you also look at the stocks of the dollar stores in the U.S., whether it's Dollar Tree or Dollar General, their price have continued to held up during COVID-19. There's a big market for Wish to go after, and as investors get to know them, they will see that there's been a lot of improvements in operation, improvements in user experience, improvements in functionality, and variety of shopping experience available on Wish. So I think once people get to know the story and the company continue to execute, it will be a story well received.
Now, on the other side of the coin, there's Airbnb, and I'm sure you've seen the clip by now of Brian Chesky learning on air that the price had doubled before the opening trade, and even he seemed shocked and at a loss for words at that valuation.
That was a great interview.
Is that
great
a
job.
Fair valuation? Thank you, Hans.
Very touching.
It was a human moment. It was a human moment.
Yes.
And it was clear that Brian didn't expect that. And so if he doesn't expect it, is it worth that?
Oh, that's the thing, right? The company have a pop. People wonder, is it a bubble? And the company, price it well and it dips a bit below. People are like, what's going on? You can't win with this market. I think with Airbnb, there were a lot of talk about them going public in 2018. The fact that it took more time, people was like, why are unicorns all delaying their IPO? Makes less possible for public investors to gain the upside. And then COVID-19 hits. You see how Brian and team react to that very responsibly, very thoughtfully, and it would have been much harder to manage that as a publicly traded company. But in a private market, they were able to make things happen and show that hey, they're actually quite resilient, and the model is quite flexible, and that they can manage it better than the existing hotel with lots of fixed costs to deal with shifting consumer interest to travel not internationally, but within a 100-200 mile radius of where they live, going again to more of a tier 2, tier 3, 4, tier 2, 3, 4 cities to the countryside, to the suburbs, and so forth. So you do see that in a moment of sort of trying times, certain model can show that it's resilience and therefore gets rewarded for it when they go public, even though it took more time to get there. And a lot of people are bullish on what's ahead. So it just takes time for a public investor to get to know the story. But once they do, you can see that there's a lot of enthusiasm for the right models.
Now, that said, I'm hearing from venture capitalists who are telling their entrepreneurs, raise now while the iron is hot, because we don't know what's going to happen next year. I mean, for so long, Dick Costolo was on the show earlier this week. He said he thinks the market is underpricing risk, but it has been now for years. I mean, are we in some sort of a bubble? Is there going to be a correction next year or somewhere in the near future where valuations are more in line with actual earnings?
It's just that you and I have both been doing this for a while. You see that as offline world gets shut down, it takes a while for it to ramp up. And even when it reopens, the adoption of digital technologies really have accelerated. This is true even for places like China, where COVID-19, they seem to have a good handle on it. Post COVID-19, you do see the big internet companies get bigger and grow fast. Pinduoduo is a good example of that. And Meituan too. And in the US, you do see that e-commerce penetration doubled in the last 9 months. And you see acceleration in edtech, you see acceleration of fintech, you see acceleration of digital health, telemedicine. So a number of factors are making it easier for digital economy companies to grow at a faster pace than the offline brethren. And as a result of that, investors are paying the right valuation for entry into those fast-growing companies that show that they have a superior business model during this time. And so no one can say it's really a bubble or not, but you do see that there's this underlying fundamentals that support more growth ahead. And we haven't even started talking about 5G yet. You see Apple stock price double in the last 12 months, and you see that there's the impact on Xiaomi as they continue to grow in India. You do see that as 5G comes out and there's more of that, computation will get cheaper and faster, and there will be more activities that you couldn't do before, now you can do on the go, and enable more services to be delivered. So there are factors to assume that there's further growth ahead over the next few years.
Another one of GGV's companies, Affirm, has postponed its IPO. We were expecting them to get out of the gate next week. On the other hand, another one of your portfolio companies, Opendoor, we're expecting them to go public next week via a SPAC. I mean, what are you watching in terms of these debuts? This is like normally a couple of weeks when Silicon Valley is phoning it in, but all the action is happening fast and furious.
There's one of our best IPO performance this year is probably BigCommerce in the e-commerce space, led by our partner Jeff Richards. And then you look at Xiaopeng Auto, led by my partner Jixing Fu. Both have done very well post-IPO and backed by interesting growth numbers. And Glenn Solomon led our investment in Opendoor back in Series B back in 2014, 2015. And you just see that these companies are growing at an interesting pace. So we really focus on the underlying business fundamentals and management team and support their growth. IPO or direct listing or SPAC really is just more of a milestone.
Did Affirm pull back because of concerns about all of this market, volatility or potential over exuberance?
I don't know the answer to that, so I'm going to speculate, but it's been very fun and enjoyable working with Max and working with all the shareholders in the company on capital to support the growth. It's a phenomenal business.
So where are you placing your bets for next year coming out of a pandemic? Obviously, how we work, where we work may be fundamentally changed for good, but I think some folks might be surprised how quickly things return to normal when there aren't health risks out there.
As I mentioned earlier, we do definitely see acceleration of digital technologies everywhere, including the U.S., the most developed country in the world. And so we are spending time on digital health / telemedicine, on edtech, on fintech. Increasingly, almost every company has developed a sort of fintech angle. You look at our portfolio, Square and Square Capital, its growth during this last nine months, it's incredible. So there's plenty of places where it's worth tracking adoption of digital technologies. And as a result, we launched our Digital Economy Index over the summer to track that. And these companies over the last 10 years have grown over 30% year on year consistently. And the next 5-10 years, you see more growth ahead with 5G and more adoption of cloud computing and cheaper bandwidth, faster bandwidth to allow more computation, faster computation to happen. And it's going to be quite exciting, right?
And given that you invest and spend a lot of time in China as well, I'm curious what your outlook is on the evolution of the Chinese tech scene as it relates to the U.S. tech scene under a new administration.
Yeah, as a fund, my colleagues do invest in China. I personally have not done that in the last 2 years. There's so much stuff to do in the U.S. and also increasingly India is becoming, and Southeast Asia is becoming interesting places for us to invest. Now, many founders we see from India and Southeast Asia and even Latin are eager to learn from Silicon Valley as well as from what they're seeing as interesting models that deal with mass market, urbanizing environment in China. So now we're more in a mode of shifting our knowledge to help founders elsewhere to grow. So we think that the new sort of age of going global is about sharing knowledge, sharing ideas. This is why we launched our podcast, Next Billion, a few years ago. And we have enjoyed the interaction and the community we're creating as a result of that.
Interesting. All right. Well, everybody can tune in for that. The Next Billion podcast by GGV. Hans Tung, GGV Capital, managing partner. Huge year for you. Thanks so much for taking the time to round it up for us. All right, coming up, digital mental health tools for workers are in high demand as employers are looking to better support their employees amidst the pandemic. We're going to hear from the founder and CEO of Modern Health, a company that just raised $50+ million in new funding. Next, this is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The pandemic has exacerbated a mental health crisis with employees working from home and suffering from loneliness, isolation, and burnout. Employers and venture capital firms are waking up to the fact that people need support more now than ever. With surging demand and venture attention, the mental health startup Modern Health has raised $51 million in its latest funding round, led by Battery Ventures, O1 Advisors, and more. The platform offers a suite of mental health solutions, including digital programs, virtual coaching, and clinical therapy. Joining us now for more, the founder and CEO of Modern Health, Allison Watson. Allison, thank you so much for joining us. So give us a picture of demand amidst the pandemic as we head into the holidays, when there are a lot of people who are alone out there, who are separated from loved ones. And even though we have a vaccine now, for many of us, it's a long ways away.
Thanks, Emily, so much for having me. I'm a huge fan of yours, so super excited to be here. And yeah, to share a little bit more about Modern Health. So we are a mental health benefits platform for employers. So we work with employers to make it easy for their employees to get access to the resources they need. And as you can imagine, have seen massive increase in the need in 2020. But really, we were seeing an increase in the need coming into this year. I mean, coming into 2020, mental health was the #1 cause of disability worldwide. So the #1 reason that people took off from work, even before this pandemic hit, was related to mental health. Now, this has just been a massive accelerant for the entire industry, and we're seeing that this isn't going away anytime soon. In fact, many are calling for the fourth wave of this pandemic to really be a mental health pandemic, and it's only going to increase the need from here.
So what are you hearing from employers in terms of what they need and how they want to support their workers? It's not, necessarily something that employers have obviously felt responsible before for, but in this unprecedented situation, we're seeing companies wanting to take a greater role in the emotional well-being of their workers.
It's a good question. So we think about mental health as the fourth pillar of benefits. So you've got medical, dental, vision, and now mental health has become that fourth pillar. And the reason behind that is because you can't get access through traditional medical benefits. If you try to access or find a therapist through your traditional health insurance, it's really difficult. And there's a number of reasons for that. Number one, most therapists don't accept health insurance these days. And they don't accept health insurance because the national average reimbursement rates are so low. Number two, there's a shortage of therapists. So with the ever increasing demand and a shortage of supply, it's increasing cost and making it even harder for people to get access. And employees are really struggling. I mean, at the end of the day, human capital is the #1 asset for every employer. So employers are now waking up to the fact that you can only be successful as an employer if you take care of your employees' mental health. And so it really has become a top priority. I mean, every single employer all around the world is prioritizing mental health. It's in every board meeting, it's in every discussion, and they're looking to invest in solutions like Modern Health to be able to support their employees.
Now, as we round the corner and get closer to more vaccinations, closer to eliminating the risk of COVID, are employers going to care about mental health long term? Are they going to care about offering this kind of benefit a year from now when, the risks aren't as high, many people are back at the office, and there are other priorities?
I'm so glad you asked that, because I think if there's one thing that we've learned from this year, it's that mental health needs to maintain a top priority for employers. We shouldn't have to wait until we're in crisis mode as a society to take care of employees' mental health. And in fact, mental health has always been a top priority. But I think if there's a silver lining to this year, it's shown that mental health is just like physical health. It falls on a spectrum. All of us fall on that spectrum from green to red. That's how we think about it at Modern Health. And it ebbs and flows at different points in our lives. I'm sure a lot of us are feeling a little bit closer to the red zone right now. But the reality is the way that the population breaks down is a typical bell curve. So you have about 15 to 20% of the population in the green, 50 to 60% of us in the yellow, 15 to 20% in the red. But we all have mental health, so we all can engage in it. And in order to build a really resilient and productive population, you need to invest in your employees' mental health. And so the reason that we built Modern Health was to make a solution that makes it easy for every single person to engage in their mental health, to not wait until they're in crisis mode, so we can meet everyone where they're at. And the way that we do that is through a very easy to use app. It's a best-in-class user experience where you download an app, you take a quick assessment, you tell us what you want to work on, and in a matter of seconds, you can get connected to a mental health coach who might help you with being home right now as a parent without childcare, or financial stress, or loss of a loved one. It might connect you to a therapist who can help you if you're struggling with anxiety or depression. Or it might direct you to a digital program like mindfulness and meditation so that you can, work on becoming more mindful during these times when we're all stuck at home.
Absolutely, and I know it's going to be touch and go for the next few weeks, especially as we go through the holidays. Modern Health founder and CEO Allison Watson, thank you so much for sharing the company with us and reminding us about some of these urgent issues out there. Still ahead, Amazon is transforming the logistics industry, but recent analysis by Bloomberg has found that America's second largest employer may be shortchanging its warehouse workers. That story is next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
I feel really lucky having stared into what felt like an abyss for travel, and then to kind of rally together with thousands of people and rebuild the company from the ground up. Something that I think is stronger than it ever was before the pandemic.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Amazon promises a quick start, $15 an hour, and health insurance to persuade potential warehouse recruits. But the reality may be less rosy. While labor tensions have simmered for years, the stakes have risen sharply amidst the pandemic. For more, I want to bring in Matt Day, who covers Amazon for us. So, Matt, you have a very wide-ranging piece out today where you draw the conclusion that even though Amazon is paying $15 an hour, which is more than others in the industry, they're actually bringing the average wage among warehouse workers in the industry down. How do you draw that conclusion?
So what we did is, the Department of Labor, or the Bureau of Labor Statistics, rather, is good about collecting data in every county where Amazon has operations, right? So we went and found every instance where they had set up one of their large warehouses in the last 20 years, and essentially just looked at what happened to wages. And it turns out that on average, wages fall when Amazon sets up shop in a big way. They eventually get back to par, that sort of pre-Amazon level, but it takes 5 years. And so at least from that little snapshot, it looks like Amazon is offering a lower wage than what prevails in the logistics industry where they employ most of their workers.
Now, Amazon has pushed back hard on your story. How have they responded?
Amazon has long invited comparisons to retail. They say, listen, we're a retailer, compare us to Macy's, compare us to Walmart. They really want to avoid the conversation entirely of how they compare to existing logistics firms. And I think part of the reason why is clearly that some of the comparisons aren't quite so favorable, right? Their $15 an hour minimum that they set a couple of years ago is indeed industry leading if you're looking at U.S. retail. That's not the case if you're looking at the firms that, move goods around the country and store them, which is a good deal of Amazon's business these days.
Now, what is your outlook on how Amazon handles these issues going into next year after, obviously an incredibly difficult year where the spotlight has certainly been on Amazon in terms of how they've treated their workers, but also we've needed Amazon more than ever. Do you expect that the company will change its position at all, raise wages at all after they've already done so?
Well, wages have been inching higher at Amazon, and I think we're going to see them be very careful in the new year. And part of this is they're facing an unprecedented union drive at one of their warehouses, in this case in Alabama. So for good reason, they're going to want to be very circumspect about how they talk about their workers. But I think we're going to hear a recitation of the same pitch from them, which is that they think they offer a better deal than most workers can find in most jobs.
And what is your outlook on the next couple weeks as we push through the holidays, and Amazon is a critical part of that?
Amazon says they've got enough capacity to get us through and get shoppers through the big holidays. It's with the weather throwing some wild cards in there and capacity already strained around the industry. There's some questions about whether Amazon and their logistics peers like UPS and FedEx are going to be able to pull that off. But for now, they seem to say that things are looking all right.
All right. Bloomberg's Matt Day, who covers Amazon. I urge you to read that story out today on Bloomberg. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Bloomberg Daybreak Asia is coming up next. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Good morning, I'm Paddy Stroud-Watts in Sydney. We are counting down to Asia's major market opens.
I'm Sherry-Ann in New York. Welcome to Daybreak Asia. Our top stories this hour. Still no relief in Washington. Stimulus talks roll on with the White House claiming a deal is close. But sticking points remain and the government may shut down if funding isn't agreed. Moderna's vaccine wins backing from FDA advisors, setting the stage for a second jab to be cleared in the U.S. in as many weeks. They say the benefits outweigh the risks. Asian markets head to the weekend as U.S. stocks see new all-time highs. The S&P 500 climbs for a third session. Bitcoin surges through $23,000.
All right, let's take a look at how we're setting up this Friday morning here in Asia. Sophie Cameron is in Hong Kong taking a look at the markets for us. Soph, what are you seeing?
Heidi, at the open in Sydney, we're seeing little moves for the ASX 200 after it rose more than 1% on Thursday on positive jobs data and the budget outlook. The Aussie trading above 76, headed for a seventh weekly gain, along with the Kiwi dollar, as both have outperformed G10 peers amid the dollar rout, which we are seeing the greenback continuing to falter. So Bloomberg Intelligence expecting more RBA easing next year to combat a rising Aussie. And we do have Kiwi stocks gaining ground here. This has the government approved more COVID funding that is to last until at least June 2022. And flipping the board to check in on what's going on with Japan ahead of the BOJ decision. We do have the yen staying at the strongest level since March at 103.13 this morning. Nikkei futures in Chicago opening to the downside this morning, while you do have S&P E-minis just a little changed after this session we saw overnight. And when it comes to the BOJ, I also want to highlight that we're expecting that they could see their COVID funding programs extended to support pandemic hit businesses. And in the gold corner of the commodities market, we are seeing it head towards $1,900 an ounce again, trading near a 1-month high. Credit Suisse forecasting that bullion will average $2,100 next year. This has really seen a pretty stellar year for the metal. Gold set for the best annual gain in a decade, Sherry.
Right, our top story, a second COVID shot has won the FDA's backing. The panel voted 20-0 with one abstention, saying the benefits of Moderna's vaccine outweigh any potential risks. The full FDA could give its final okay in the coming hours. Let's get more from Bloomberg healthcare reporter Robert Langreth. Robert, so this recommendation was pretty much expected. What's next?
What's next is we expect the FDA to grant emergency clearance, official final emergency clearance for this second vaccine in the U.S. Likely within 24 to 36 hours, and that's what's happened with the Pfizer vaccine. It got through the advisory committee on a Thursday, and by late Friday night, it was cleared. And something similar is likely to happen with this Moderna vaccine. They're both very similar vaccines using similar messenger RNA technology. It's a very new technology. Never until last week was never an approved product before, but it appears to, at least for COVID-19, it appears to work like gangbusters with 95% efficacy. So this is very good, anticipated, very good news because it'll significantly increase the supply of these vaccines. The Pfizer vaccine, the first 2.9 million doses went out this week in the United States. It's going to healthcare providers and nursing home residents and workers only. And then when and if this Moderna vaccine is cleared, 5.9 million doses will go out almost immediately around the country. So that'll significantly increase the supply and allow the U.S. to start vaccinating a much larger percentage of healthcare workers.
Because even though Pfizer says it hasn't experienced production issues, we have been hearing from some state governors saying that the allocation that they've received is much less than what they'd expected.
Yeah, there's lots of confusion and lots of complaints about the allocation. This is of the Pfizer vaccine, the allocation of the Pfizer vaccine that some states got. And it's really hard to parse the details of that, even to really tell exactly what's going on. There's no question that governors are complaining about it. Pfizer has said they're not having any production issues right now, but there were early on when they were ramping up some production earlier this fall, there were some delays in getting raw materials that slowed them down a bit and basically meant they couldn't make their original projections for this year in production, and they had to lower it, at least the early production. But now they've ramped up the production and they're producing full steam ahead. So what may have happened is that, there may have been shifting figures for how much some of the states would get, and the states just didn't have a lot of clarity of, what percentage of this original shipment they were going to get and thought they were going to get more. But it's not really totally clear what's going on, as Pfizer says, staunchly that it's not having any more production issues, and those issues that it had earlier on have been solved.
Robert, we're also hearing that even amongst the medical professional field, some of the younger doctors and nurses are concerned about the longer-term effects of the vaccine, particularly when you're talking about things like fertility, right, further on down the track. We're also hearing that the Vice President and the Second Lady, I should say, will be getting this at the end of the week. So how important is it to build up, public credibility and understanding and evidence-based understanding of these vaccines?
Well, exactly. Well, that's a very important issue, and that is one reason, building up visibility and credibility is one reason the U.S. Food and Drug Administration didn't just go right and approve these things like 2 days or 3 days after getting the application. It went, even though we're in the midst of a pandemic, it made sure to go through this kind of formal process, a standard process of bringing it before a public committee of leading doctors to vote on it. So all the data would be vetted in public. And the other thing the FDA does that not many regulators around the world do is it got the raw data from both these vaccines, both Pfizer and Moderna, and reanalyzed it themselves. They didn't take the company's word for it. They took the raw data and reanalyzed it with their own statisticians and basically came to the same numbers, 95% effective, 94% effective. So it's been taking steps to bolster confidence in the vaccine, that the shortcuts aren't being taken. But it is true that these are very new vaccines. The efficacy data we have are very short-term, so you don't know very much about the long-term efficacy, how long it'll last. We just don't know about that. So far, they seem very safe. There's been a few allergic reactions with the Pfizer vaccine, but not that many so far, given that in the U.S., the way I look at it, in the U.S., literally 2.9 million people are getting it this week. So your one severe allergic reaction, that's an uncommon event. That's what we've had so far. So there may be more of an issue that emerges. We'll just have to tell about some of these very rare serious adverse events. They do happen occasionally in the vaccines, and you shouldn't hearing about one or two severe reactions in a vaccine that's being rolled out at a faster scale than ever before. That's not a reason to panic. Some severe reactions, giving something to millions of people, are to be expected.
All right, Bloomberg healthcare reporter Robert Langroth there with us with the latest on the vaccine rollout and approval process. So close yet so far away. That's where Congress, though, stands as Democrats and Republicans push to have a stimulus package signed by the end of the week and to avoid a possible government shutdown. Our global economics and policy editor Kathleen Hayes has the latest. So, Kathleen, what are the hurdles that we see in the way of a deal now?
Well, a couple of unexpected ones, but let's start with the optimism, because Mitch McConnell himself, the Senate Majority Leader, said today that a deal is close at hand. Late in the day, he acknowledged, yes, we may have to work through the weekend, but he now is much more optimistic. Everyone's more optimistic. And in fact, the bipartisan plan, about $900 billion, is settled on some of the basics. $600 stimulus checks to individuals, unemployment benefits, $300 a week, aid to small business, about $17 billion for airlines. Everyone agrees to that, the easy things. And this is important because they plan to attach their virus relief bill, when it's passed, to a $1.4 trillion bill to keep funding the federal government till September of next year. And again, the stopgap bill that was passed last week expires tomorrow. So that's why this is so much more under pressure to be done. Now, what's interesting and important, Two leading Senate Republicans have spoken up, expressing a view of a lot of Republicans, apparently, that they want specific language in this virus relief bill that will end the Fed's emergency lending programs that are funded by the Treasury. You know, this has been a big story starting about 4 weeks ago when the Treasury Secretary Steve Mnuchin told the Fed Chair Jay Powell that, look, these wind down on December 31st. We want you to give the Treasury back the money that has not been used yet. That part's been done, but these senators want more done. They want specific language. In fact, Senator Mike Crapo, he's the head of the Senate Banking Committee, he says it's becoming a red line issue for Republicans. Pat Toomey of Pennsylvania, another influential GOP person, says it's a top issue. He says the crisis is past. The Fed's pandemic programs are meant to be temporary. It's time to explicitly stop them. Here's what he said today. It's not acceptable for anybody to decide that they're going to circumvent this law, restart these programs, and turn them into something they were never intended to be. Democrats say there's more leeway here. You know, this isn't necessary, but now apparently some Republicans are digging in their heels, and this is something that's going to be hammered out as well.
Yeah, tell us a little bit more about what needs to be hammered out then.
Yes, well, the hammer is still going to have to be pounded, that's for sure, Sherry. Well, let's start with something that a lot of people can relate to, and that's more mortgage assistance, more rental assistance for people who face foreclosure, who even face eviction. Democrats broadly want to extend the eviction moratorium that's been in place basically since last spring when this whole lockdown started hitting so many people so hard. Republicans are saying maybe just rental assistance is enough. Maybe it's better, and then we won't need this moratorium. Okay, that's one issue. Now there's another question on the stimulus plan plate, and that's aid to state and cities, putting it through Federal Emergency Management Agency, FEMA. That's contentious. And Bernie Sanders and some others, even Republican John Hawley from Missouri, want to have $1,200 stimulus checks. Sanders says $600 isn't enough. It's very, very tough. So this is why this is what it's come to. Some big issues left for the end.
Our global economics and policy editor Kathleen Hayes there. Still ahead, we'll hear from Lisa Kaplowitz, the co-founder and executive director of the Rutgers Center for Women in Business, about how working from home during the pandemic is setting millennial women in finance back. But up next, Jennison Associates EM portfolio manager Sarah Marino says emerging markets have an abundance of innovation and disruption, giving it a unique edge. We'll discuss. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Not only do we have the capital required, we have the long-term vision, the ability to focus and execute. And this is really about reimagining transportation, really. And so it gives us a baseline to build from and then expand on.
You're watching Daybreak Asia. I'm Karina Mitchell with the First Word headlines. The UK government says a chance of a Brexit deal is now less than 50%, with Boris Johnson denouncing the EU's stance on fishing rights as, quote, not reasonable. Brussels has set a new deadline of Sunday for an agreement, while admitting big differences still remain. Ursula von der Leyen says progress has been made, but bridging remaining gaps looks challenging. Negotiations will continue on Friday. In other news, the baht rose to a one-year high and its strongest against the dollar since January after Thailand was added to the U.S. currency watch list. The rise extended its string of gains to 4 days and adds pressure on the BOT to restrain from further intervention. The central bank insists it has acted only to mitigate volatility in the baht, and it's not using the currency to gain unfair trading advantages. And Fiji has imposed a nationwide curfew and urged people on the coast to move to higher ground as a major storm strikes. Cyclone Yasa is bringing sustained winds of 250 kilometers per hour, torrential rain, and a storm surge of possibly 16 meters. The capital, Suva, is already suffering power cuts. The last major cyclone to hit Fiji was Winston in 2016, which killed more than 40 people. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Sherry.
Emerging market stocks climbed back to the highest point since January 2018 as investors continue to be optimistic about the rollout of COVID vaccines and a U.S. stimulus package. Our next guest agrees, saying that there are still abundant opportunities in emerging markets. Joining us now is Jensen Associates Emerging Markets Portfolio Manager Sarah Moreno. Sarah, great to have you with us. You know, we all know that emerging markets are really not created equal. And given the massive rally that we've seen in March, where are you finding those opportunities?
Good evening. Thank you, Cheryl. Yeah, so the opportunities in emerging markets, what's interesting about it is the underpinning of the secular growth opportunity that exists within emerging markets. And what the COVID has actually done is open the floodgates in a lot of the disruptive and technologies that we've seen in DM, but in emerging markets, the penetration levels are still very low, be it e-commerce, financial services, online grocery. So the digitalization of the consumer and enterprise is still in the earlier stages in emerging markets. And COVID has sort of unopened and accelerated that opportunity. And so we see a structural shift that's occurred, creating many rich opportunities, investment opportunities across emerging markets.
And investors have really seemed to have liked the story that we're seeing in China, but we have rallied so much already in Chinese markets. There's GTV chart on the Bloomberg now showing that they're actually underperforming broader emerging markets, especially since the U.S. election. So where do we go from here?
Well, within China, there's still pockets we see of strength and sectors that are still, the penetration story is still low, even for China, where, things like e-commerce are more heavily penetrated in financial services online. Something that we're very excited about is in the healthcare space. So China is, yes, the second biggest, pharmaceutical market in the world, but it's still shifting out of a generic base to an innovation-based pharmaceutical industry. And it's really led by the investment levels that the Chinese government is trying to now bring to the fore. China only spends 5% of GDP in healthcare versus 17% in the US. So even just a doubling of that to 10% is going to open up many opportunities. And one of the subsectors where we see the most opportunity is within oncology, given that the Chinese population is getting older and sicker with chronic diseases such as cancer, but they're also getting wealthier. So they'll be able to afford some of the innovative drugs that we have coming from developed markets.
Do you worry about the US-China bifurcation story, particularly when it comes to the realm of tech? Or does that just mean that Western investors really need to allocate more to pure play Chinese equities in their portfolio?
Well, I think what we're seeing is a trend across EM where there's been a localization, innovation to meet the local needs of the population. You're seeing it not just in China, but in Southeast Asia and Latin America. It's because it's not a cut and paste of the developed market models into emerging markets. And so increasingly, yes, the fact that there has been a bit of a bifurcation, that does mean that you do have to access some of these opportunities directly.
Does that mean you also see, if China continues to be the EM anchor, if you will, for sentiment next year, assuming that we continue to see the weaker dollar story play out as well, do you see a broadening of the EM rally beyond just the highlight of North Asia?
Yeah, certainly, because I think the structural shift, the underpin, is that continued emergence of the emerging middle class across emerging markets, and a lot of that is coming out of Asia, but not just China. It's Southeast Asia, it's Indonesia and India, where we see that continued. You know, the next 1 billion emerging market consumers are going to come in the next 5 to 6 years. So there's plenty of investment opportunities for the types of companies that an active strategy can access by finding the companies that are serving these consumers.
Janison Associates Emerging Markets Portfolio Manager Sarah Moreno joining us there from Boston. Well, BlackRock says US equities will keep moving higher. Global Fixed Income CIO and Head of Global Asset Allocation, Rick Reeder, spoke with Bloomberg about portfolio diversification as well as his take on the Fed.
There was a lot of analysis yesterday that said that the Fed was hawkish because they didn't increase the weighted average maturity, or they didn't actually increase the asset purchase program. Anybody who describes this Fed as hawkish is so misguided. This is a Fed that is just going to continue to be there and be as accommodative. They said they're going to continue the asset purchase program at least as large, both in treasuries and mortgages. By the way, I don't even think they need to increase mortgages at all. In fact, I think they could shrink them. But they're going to keep going, and they're going to be incredibly supportive of the new administration and fiscal stimulus from here.
So Rick, as I say, the message out of the Fed, I thought yesterday, was we think in 2021 it's going to start getting better, presumably in large part because of the vaccine, which we're hoping for so much. At the same time, there's a real divergence, maybe even a bifurcation in the marketplace, whether it's individuals or it's companies, between some people who are doing very, very well and some people who are doing very, very badly.
Yeah, I mean, David, you hit the nail on the head. Listen, but I think this is, what the central bank does is, its tools are blunt. And a lot of what happens is it lifts financial assets and it creates this bifurcation, as you described. And it doesn't, what the Fed can do is it sort of paves the runway for other policy to come in. Now you really need the fiscal. And the fiscal is where you can direct tax policy, where you can direct where the stimulus gets to, things like state and local, things like healthcare spending, education spending, et cetera, things that can actually close that gap. I mean, now we actually are going to get what I think, particularly when you think about Chair Yellen, I still call her Chair Yellen, the Treasury Secretary, and now you've got functionally two Fed chairs that are going to operate in concert with one another, and that's where you get really effective policy, when fiscal and monetary work hand in glove with one another.
So is that constructive, or does that undermine the independence of the Fed? I mean, how closely do you want the two of them to operate together? You've called it sort of pilot and co-pilot.
Yeah, it's a great question. I do believe in the independence, and I certainly know that people at the Fed really believe in the independence of the Fed. However, you do create some coordination. By the way, having where they're not talking, that is a problem. But having some coordination makes sense, particularly as you described earlier. We've got a problem in the country today. We need to put more people to work. Until vaccine starts to really get implemented, we need to put more people to work, and we need to stabilize an economy, an employment dynamic that is real. And so, that idea that the Fed's going to neutralize the debt that the fiscal is going to put on. And by the way, I think Larry Summers is going to talk about this. Their paper that they wrote on the system can actually withstand more debt is 100% right. And as long as, and a big part of it is the Fed is keeping rates low, so the interest burden on the economy is not onerous.
So, Rick, you have two hats at BlackRock, both Chief Investment Officer for global fixed income, but also asset allocation. Where are the investment opportunities? Where is it smart to put money right now?
So it gets harder every day, but I don't know. I feel like coming in every year, it's always hard. So, but I think the equity market's going higher. I think when people look at, when the Fed says we'll keep interest rates down and we're going to leave them down for a long period of time, it makes, where rates have gotten to, it doesn't make the Treasury market interesting, doesn't make, as we said, the mortgage market interesting. When rates stay where they are, that is a direct injection of value into equities and allows companies to finance them for M&A, for CapEx, for R&D, et cetera. So the equity market's going to go higher. I'm pretty convinced of that. And then how do you create balance in the portfolio? I would argue hold some cash, hold some of your government rate risk, your government, the government debt you own in TIPS to get some inflation protection, and then get yield into the portfolio. It's getting harder and harder to get yield, but the credit market, parts of the emerging markets, parts of the securitized market, get some yield, run a bit more cash because it's harder to hedge today given where rates are. And then own the equity market, because I think equities are going higher. I don't think you want to hear the story of why equities are fully valued. I think people who just do equities don't see fixed income and don't see the benefit getting to the equity. And I think equities have got some upside to them. Doesn't say we can't trade down for a period of time, but I think they're going higher.
BlackRock Global Fixed Income CIO Rick Ryder speaking to our colleague David Weston. We'll have plenty more to come on Daybreak Asia. This is Bloomberg.
With a new administration coming to Washington, changes are undoubtedly in store, from the economy to foreign policy to public health. I'm David Weston. Join me for a Balance of Power special report, a look ahead to the next 4 years, this weekend on Bloomberg Television.
All right, we are looking at one decliner trading here in Sydney. The pharmaceutical developer Mesoblast shares dropping 40% after an update was received on its COVID-19 ARDS trial. Now, it's fallen the most in about 11 weeks. This after the company said that this trial, which was to treat patients with moderate to severe acute respiratory distress syndrome as a result of infection from COVID-19, they were saying that the trial isn't likely to meet a 30-day mortality reduction, that the trial has not yet accrued data on secondary endpoints, and that they would need to evaluate all of the patients through to 60 days, saying that it and Novartis will both analyse those results. So we've seen that disappointment play out when it comes to the investor reaction there, off by still a significant drop there. Well, coming up next, is it going to be so long? And thanks for all the fish. Brexit talks continue, but may stumble as both sides say big differences remain. We have the latest on these negotiations next. This is Bloomberg.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
I think we have a lot to be optimistic about in this country, but in the near term, even with these vaccines, Moderna and Pfizer, we just got to allow them to be given to the people who need them the most, but that's going to take more than 6 months.
Right, we have breaking news out of Japan. We are getting inflation numbers out of Japan. When it comes to the national CPI year on year, it's a contraction of 0.9%. It's a faster contraction than we were expecting for the month of November, and it's also accelerating from the previous month. But of course, we're keeping an eye on the core numbers. That's excluding fresh food, and that's what the BOJ follows. And we're seeing a contraction of 0.9%, which is again an acceleration from the previous month of October. It's in line with estimates. Core CPI exclude energy as well, and that's also in line with estimates, a contraction of 0.3%. But of course, it's all about Japan and really not being able to get out of that contraction territory and that deceleration for inflation numbers. And when it comes to the year-on-year numbers, it's a fourth consecutive month of negative territory. Although the BOJ has put its 2% inflation target aside for the moment, given that we have the coronavirus pandemic, we're still watching those numbers. And as you can see, the core CPI numbers year on year is a contraction of 0.9%. Right, let's turn to Sophie Kamarudin in Hong Kong for what to watch in the market. Sophie.
Well, taking a look at how trading is faring in Sydney, stocks are under pressure, stalling this Friday, along with the Aussie dollar, but both the currency and the ASX 200 are still set for a 7th weekly gain. And looking ahead, UBS penciling in the index at 7,600 points next year on improving earnings and vaccine rollout. And we are seeing gains for the index 50 up 0.6% this morning, while S&P E-minis are little change this Friday. Let's switch out the board. The BOJ decision very much in focus, waiting to see whether they will extend their support for pandemic hit businesses in the country. Nikkei futures in Singapore coming online to the downside, while the yen is trading near a March high, and gold stalling after we saw the overnight move towards $1,900. But the gold bulls, they're coming together amid this seasonal trade and dollar weakness. And pound in focus, testing a key resistance level, staying above 135, slightly under pressure though after hitting a 2.5-year high. Of course, Brexit talks very much in the limelight, Sherry.
Yeah, we'll continue discussing what's at stake here as UK's Brexit negotiator David Frost says that progress in trade talks with the EU seems blocked and time is running out. There are now less than 2 weeks until December 31st when the UK's transition period ends. Let's go to Bloomberg Opinion's John Authors. John, so are we really going to see a hard exit because of fisheries? How important is this?
Well, my best guess is no, we're not going to see a hard exit because of fisheries. It's obviously a difficult one to finesse because Britain has, as you can tell just from looking at a map, a very big area of sea which it could enforce as being its own exclusive territory. But first of all, the two sides aren't that far apart. It's simply a difference of whether the fisheries stay exclusive for 3 years or for 8. There are ways you can just meet in the middle on an issue like that. Secondly, I believe fisheries are something like 0.02% of the British GDP. It's really not a big enough deal to hold up everything else. It's obviously very symbolic. There are certain particular places that voted very strongly for Brexit that do care about fishing a lot, but it would surprise me a lot if that was truly the reason that ended us up with a hard Brexit. I think we can probably look at this. Judging by some of the mood music, some of the stories that the British negotiators have been giving in the press in the last few hours, I think this is a desperate final big bluff, final big attempt to talk tough and get as good a deal as they can.
So if this is gamesmanship, we know that part of the problem is how Boris Johnson can sell this to a domestic audience, right? What kind of, PR gymnastics are required to be able to get a deal over the next few days and to be able to sell it domestically, both in the EU but also to the UK public, that this is something that, somehow emerges with the idea of a UK sovereignty intact?
Well, I think on phishing, the chances, part of the reason that both sides are saying this is a big deal is because it's one where Britain is likely to, it's always looked more likely that the EU will concede further at the end. If you look at the way the British are talking about it, about how how phishing is the prime obstacle, that they're a long way apart. Boris has been saying apparently that Britain will be happily eating fish for breakfast, lunch, and dinner if we have to have a hard Brexit. I think that's part of the notion that.
Right, John. I think we just lost John Authors there. He's our Bloomberg opinion columnist, and of course, he was talking to us through what's happening on the Brexit front, Heidi.
Yeah, and of course, sticking with the EU, French President Emmanuel Macron is self-isolating now after becoming the latest world leader to test positive for the coronavirus. We spoke with Johns Hopkins University nursing professor Jason Farley about whether the public change their behaviour when they see high-profile figures catching COVID.
The short answer is no. In the United States, it actually emboldened people who said, oh, look, the virus is not really serious. The president bounced back quickly and ultimately received treatments that would not be available to the general public in doing so. So it's hard to say. I think with Boris Johnson, we saw the public pay close attention, particularly here in the United States. That caught everyone's attention. With Macron, it will be interesting to see what the French people feel after they see his recovery period.
How are the vaccines doing in the U.S., Jason? So we had a couple of people actually reacting badly because of previous allergies or even because they didn't have any allergies. Does it make it less people, or does it make it that less people will want to have a vaccine?
Yeah, so we're in the public health community, we're very concerned about what we call vaccine hesitancy, meaning people being fearful of taking the vaccine. As I've spoken for before on this program, in full disclosure, I am a vaccine candidate participant in a research study, but we are seeing, we just saw a case of anaphylaxis or allergic reaction in Alaska among a healthcare worker who received the first dose of vaccine. But importantly, there are safety measures in place. Once we give a dose of vaccine, we have the individual wait for at least 15 minutes to ensure that there is no anaphylaxis or allergic reaction. And if there is, we have clear protocols in place to address it. Importantly, we don't yet know exactly what component of the vaccine results in anaphylaxis. So the FDA recommended that individuals with a history of severe allergic reaction not receive the vaccine at this time.
Jason, some of the figures that you sent through are absolutely shocking. Approximately 1 death in the U.S. every 36 seconds at the moment. Is this a new strain? There was talk, at least in the U.K., that it could be a strain of something that's actually spreading quicker. Any truth in that?
So there have been several analyses and studies that have evaluated the mutation patterns of the virus. And all viruses, when they have this level of penetrance in the community or transmission, have some level of mutation. And there are a couple of genes that have demonstrated the potential for increased transmissibility. However, those same genes in the full genomic analysis of the virus have not shown increase in morbidity or mortality. So while there is some debate right now in the scientific community about whether or not these mutations are leading to potential super spreader events, they do not seem to be associated with greater morbidity or mortality at this time.
Can families safely gather for the holidays?
No. We've seen from the Thanksgiving holiday here in the United States that it has been a key driver of our increased cases since that time. Exactly as we predicted, 10 to 14 days after the holiday would be a huge surge of cases. And we are seeing exactly what the epidemiologists predicted, which is huge capacities not being able to meet the need and the load of patients at various sites. Here in Baltimore, we have opened our field hospital again and are needing to send patients from our emergency departments who don't seem like they need admission directly to our field hospital. So it is an extremely important issue, and I highly recommend all families consider strongly not traveling and not visiting for the holidays.
That is nursing professor Jason Farley speaking to Bloomberg's Francine Lacroix. The Johns Hopkins Bloomberg School of Public Health is supported by Michael Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Looking ahead, COVID has devastated the aviation industry. We'll assess the outlook for next year in an exclusive interview with Honeywell Aerospace APAC President Stephen Leon. Plus, how working from home during the pandemic is setting millennial women in finance back. We'll talk to Elisa Kaplowitz, the co-founder and executive director of the Rutgers Center for Women in Business. She joins us next. This is Bloomberg.
Such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
What we're trying to accomplish at Bumble is that you can drive profit and purpose, and they can coincide, they can coexist, and in fact, they fuel one another.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
All right, we're going to check in on Mesoblast. Of course, this is the big decliner of the Sydney session. The drug developer seeing a decline of as much as 45% after announcing an interim update on its COVID-19 ARDS trial. This is a trial that was looking at patients who experienced respiratory conditions as a result of a COVID-19 infection. Essentially, that trial finding that it's unlikely to meet the 30-day mortality reduction, that they haven't yet accrued enough data when it comes to meeting the secondary endpoints as well. So there's some concerns when it comes to the efficacy, but no concerns when it comes to safety, and that the trial is still recommended to be completed with follow-ups. So we are seeing that disappointing investor response, though, in today's trading. Let's get you to Karina Mitchell now with the First Word headlines. Karina.
Heidi, we'll turn to another vaccine. Moderna's COVID-19 vaccine has won initial backing from FDA advisors, setting the stage for a second shot to be cleared in the U.S. in as many weeks. The panel voted 20-0 with one abstention, saying the benefits outweigh any potential risks, and the full FDA could give its final okay in the coming hours. Moderna's shot is based on the same research as Pfizer and BioNTech, which was cleared for emergency use last week. Meanwhile, Pfizer and U.S. regulators are revising rules for the company's COVID-19 vaccine after a series of rare allergic reactions. Pfizer also says it shipped all 2.9 million doses the U.S. ordered, but several states say they'll receive fewer doses than first planned. And California set a fatality record for a second straight day. New York again topped 100 deaths in just 24 hours, and Arizona reported its highest death count since August. Over to Hong Kong, which has moved to allocate more than $800 million to support the economy as it struggles to contain a new virus wave. Bars, restaurants, gyms, and educational outlets will receive the bulk of the money, which may be rolled out next month. Businesses mostly affected by social distancing curbs will be given priority. Hong Kong had been showing signs of stability before the latest virus surge. And a cluster of COVID cases in Sydney is threatening to disrupt Christmas celebrations at the height of the holiday season. Australia's largest city reported 15 new cases on Thursday, centered on Sydney's northern beaches, bringing the two-day total to 17. About 250,000 people in the affected area have now been asked to stay at home, and other states may shut their borders yet again. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Heidi.
Karina, well, today on Bloomberg Equality, we're taking a look at the world of finance, more specifically how the pandemic is affecting millennial women in the industry. Our next guest says the work-from-home life could be detrimental to the career aspirations of a generation of women. Joining us now is Rutgers University finance reporter Lisa Kaplowitz. She's also the co-founder and the executive director of the Rutgers Center for Women in Business. Lisa, great to have you with us. And it's really fascinating as well as distressing looking at the different nuances of how this pandemic, the work from home kind of trend is impacting women across the board. You're saying that essentially for women at a certain level of I guess, a junior level across the finance industry, the lack of face time with their managers is really quite damaging?
That's correct. Thank you for having me. It is, because it's hard enough for a woman to be heard in a meeting in person. It's that much harder when we're on Zoom because it compounds the biases that many people already face and the imposter syndrome that a lot of women face about, do I belong? Am I supposed to be here? Again, that gets magnified along with the impact of senior managers not getting to have FaceTime with them.
And this really is just one aspect of looking at the way that this pandemic, downturn, this recession, a lot of people have been calling it, a pink recession, because it has, in a heavier way impacted women in the workplace.
That's absolutely true. In fact, here in the States, we call it a she session because more women are actually impacted than men, which is very, very different. So normally in recessions, the wage gap between women and men shrink because more men get out of work. But now with this she session, the wage gap, unfortunately, is increasing. And 2.2 million women in the States lost their jobs between February and November. 1 in 4 women are thinking about leaving the workforce. And as you mentioned, millennial women are hit really, really hard. The burnout's real, the emotional labor. A lot of millennial women are also moms, have younger children. And women historically during natural disasters, which I think we can call the pandemic into that category, take on the emotional labor in addition to the unpaid labor at home. And if you're a Black woman, that emotional labor is so much more compounded by everything else that's happening in the States with racial inequality.
At the same time, has there been a real realization in the plight of the working parent now that so many parts of the workforce are working from home? They've got their kids from home because schools are closed, because, daycare centres are not available. Is there a point of reckoning that out of the other end of this pandemic, there should be, policy changes or a better recognition that this is what working families deal with day in, day out, with or without a pandemic?
Absolutely. And we are really hopeful. So right now, there's no such thing as work-life balance. It is not integrated. We are experiencing work-life overlap. And that millennial woman in finance, she's experienced it the entire time because when you're 25 to 40 years old, you're in your peak career earnings, but you're also in your peak childbearing years. And there are a lot of assumptions that are made about whether or not you want to have children or not. And that happens well beforehand. However, in addition to the overlap that she's experiencing, men are also experiencing that overlap. We have now fully taken off the mask of what's happening in the home. You see kids going in and out of these Zooms. Through our research, we actually found that twice as many men are doing 5 or more hours of unpaid childcare at home. Now, women are still doing more, but the really interesting part of our research, the silver lining we're calling it, is the more men contribute to the unpaid labor at home, the greater, significantly greater, women believe and report that their productivity and satisfaction increases in their paid work, which shouldn't be surprising. And so we're actually really hopeful, because we're hopeful that the flexibility is not just desired by women anymore. The leave programs, the flexible work schedules are now going to be wanted by men. There's a weakening in traditional gender norms and a shift in what's really valued by everybody.
That's pretty encouraging. So do you expect businesses to actually start adopting this sort of mentality?
Well, I think you're seeing it. I know you're seeing it here in the States. Google even just announced that they're going to look at work from home, flexible work on a more permanent basis. And working from home 100% is not ideal, but we don't need to be in an office 5 days a week anymore. And we have found that people are really productive when they don't have to have a commute. And so I think there's going to be a lot of flexibility. I think a hybrid work model is going to become the norm. I think you see folks like the CEO of a fashion, of the leading fashion site in Europe step down because his wife is going to focus on her career. While that's headline worthy right now, I am hopeful, we are hopeful, that it happens so much more frequently that it's no longer newsworthy at all. And men become less ashamed of creating these boundaries. So when a man leaves the office early normally to go watch his son or daughter's baseball or softball game, he says, hey, I got to leave the office, instead of saying, hey, I'm going to go watch my kid's game. And so I think with this work from home and everybody's life literally overlapping, we're going to see more men be more comfortable.
And how do you make women more comfortable? Because you also mentioned the imposter syndrome, women not being as confident to ask for raises or be heard.
Sure. So it's actually really interesting. We have monthly webinars at our Center for Women in Business at Rutgers. And one of the ones we did a couple months ago, or about a month ago, was on how to prep for performance reviews and promotions virtually. And when we started the event, we asked everybody, how many of you are going to ask for a raise this year? 38% said yes. Then 50 minutes after, we gave some tips. Make yourself 5% different, have everything documented, all of your accomplishments, et cetera. And some other basic things, 67% said, I'm going to ask for a raise now. And that's real impact. So one is educating these millennial women to be confident, to know you deserve the compensation to be paid equally for what your counterparts are doing, that you put in the work. And on top of all of that, be able to ask for the raise and believe in yourself. Now, another way to do that is mentoring programs. And one of the things that's been lost in this virtual environment is we need to create more established mentoring programs and across genders as well. So it's really important to have people that look like you in positions of leadership, but it's also important, and it works both ways, to have male mentors. So men actually get a significant benefit by having a mentoring relationship, either as the mentor or the mentee with a woman, because it makes them more aware of the challenges that exist as well.
Lisa, it was great getting your perspective. Thank you. Lisa Kaplowitz, Rutgers University finance professor. We have plenty more to come on Daybreak Asia. This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. it got a little spooked by the idea that geopolitical tensions are rising.
A quick check of latest Business Smash headlines this hour. A new report ahead of Tesla's inclusion in the S&P 500 Monday warns the move is reckless and the stock should be at least 70% lower than at current levels. New Construct CEO David Traynor says the move adds unnecessary risks for investors and the stock should be trading at around $170 a share. That's a far cry from the near $650 it's currently enjoying. Traynor says Tesla has poor fundamentals. DoorDash fell after short seller Citron Research described its IPO as, quote, the most ridiculous share sale of the year, adding that the stock is worth only a fraction of its current price. Citron says cites intensive competition in food delivery, potential new government regulations, as well as a lack of brand loyalty. He says the shares are worth about $40 at best, a 75% decline from Wednesday's close. The biggest US cryptocurrency exchange, Coinbase, has filed to go public in what's seen as a potential breakthrough moment for digital tokens. The San Francisco-based firm says it expects to draft the draft to become effective after the SEC completes a review. Coinbase hasn't offered details of its plans. It was valued at more than $8 billion 2 years ago after a $300 million funding round.
Japan and South Korea come online at the top of the hour. Let's turn to Sophie for what to watch. Soph.
Sherry, car makers are in focus in Seoul. We're watching Hyundai Motor. It is to take full control of its Turkey venture, which exports to more than 40 countries. And over in Tokyo, Nissan on watch after the car maker decided against producing an electric vehicle SUV in the UK on Brexit uncertainty, choosing instead to ship the model to Europe from Japan. And Nippon Steel on watch on a Nikkei news report that it will be targeting 260 billion yen in cost cuts this fiscal year. And telcos in focus on a Nikkei news report that Docomo is to cut the price of its 5G mobile plan by 1,000 yen per month from April. So just a look at some stocks to watch at the open in Tokyo and Seoul. This is Bloomberg.
SAS and Microsoft are joining forces to further shape the future of AI. Now you can run workloads that work for you. It's time to reimagine analytics in the cloud.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
There's a need and a clear need for me to spend money. I need to spend money to boost the economy, the necessary push. And therefore today, as of now, and for this fiscal, I shall not worry about the deficit number.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Welcome to Daybreak Asia from Bloomberg's World Headquarters in New York. I'm Sherry Yan.
And I'm Heidi Stradwatts in Sydney. Asia's major markets have just opened for trade. Our top stories this hour. Still no relief in Washington. Stimulus talks roll on, with the White House claiming that a deal is close, but sticking points remain and the government may shut down if funding isn't agreed. Moderna's vaccine wins backing from FDA advisors, setting the stage for a second jab to be cleared in as many weeks. The panel says the benefits outweigh the risks. And abandoned ship. The virus fallout hits shipping as well, with a sharp rise in the number of vessels left drifting on the high seas. Bloomberg has a special investigation.
Japan and South Korea coming online. Let's get straight to the market action with Sophie in Hong Kong. Sophie.
Sherry, Tokyo stocks are opening to the downside while the yen is trading near a March high. Little change after the CPI report showing inflation falling at the fastest pace in a decade. We're also waiting on the BOJ decision. Its bond buying plan will be in focus, along with clues as to whether it will extend special virus funding program. Plus, local media reporting that Pfizer is to request formal approval today from Japan for the supply of 120 million vaccine doses. Let's switch out the board now to check in on the open in Seoul. We're watching for the South Korean Finance Ministry to release its monthly economic report as Korean watchers assess how rising virus cases may affect the recovery. Yesterday, the Finance Ministry in its 2021 outlook report projecting growth of 3.2% for South Korea next year after shrinking 1.1% this year. The cost be opening to the upside by 0.1%, while the Korean won just slightly under pressure, trading above 1094 against the greenback. Let's flip out the board now to check in on what's going on in Sydney this morning. This as the city grapples with a new virus cluster. Aussie stocks under pressure, but still set for a 7th weekly gain, and UBS penciling in 7,600 for the ASX 200 next year. Now, oil is just a little change above $48 a barrel, but still headed for a 7th weekly advance. And gold trading near a 1-month high, testing that 50-day line. Just a little bit of pressure coming through, but gold bulls seeing the ingredients for a continued rally. And S&P E-minis, a little change this morning after the benchmark hit a record high. And broadly speaking, pulling up the chart a week out from Christmas, we are seeing this broadening breadth for global stocks. Pulling up the chart on the terminal just to show you what's happening. With that picture, we're seeing more than 80% of international shares trading above their 200-day moving average. That's hitting towards historical highs. This after the end of a pretty annus horribilis, one could say, there, guys.
All right. Well, it has been also a year that's accelerated change, for better or worse. Our next guest says one major theme will carry over to 2021, namely the need for global investors to allocate more of their portfolios to Chinese equities and fixed income. BlackRock's head of APAC iShares investment strategy, Thomas Tor, joins us now from Hong Kong. Thomas, great to have you. Let me throw up this chart to begin with, taking a look at the CSI 300, up about 1.3% yesterday. 4th straight session of gains. MSCI China also up by over 1% as well. That record high, though, remaining elusive. It feels like we just keep running into that ceiling of resistance when it comes to this Chinese equity rally. Do you think there's further room to run?
Yes, I mean, certainly into 2021. I think, the optimism around not only Chinese equities, but global equities is pretty consensus now. But I think the difference is in the positioning. And certainly, I think you can see that when you look at foreign investors' holdings of Chinese equities and fixed income we've been talking about this for a couple of years now, the need for investors to get more exposure towards Chinese equities, whether that's onshore or offshore, and fixed income as well, which has been a very strong theme for us, at least in iShares for 2020. The market is running very strongly at the moment. We've had a very strong Santa rally. So in terms of the short term, I'm not really too sure, but certainly into 2021, the expectation for 8% GDP growth. And I think, if you look at foreign investors' positioning, it is still slightly underweight versus benchmark for Chinese equities and fixed income. So yes, I expect that will continue into next year.
So, and that's really interesting to me, because all we talk about, when it comes to the future of the US-China relationship is the bifurcation theme, right? Bifurcation when it comes to trade, diplomacy, the economy, and tech. And you were saying because of that bifurcation, investors really need to assign a bigger part of their portfolio to what is, I assume, essentially going to become pure play China names.
Yeah, so I think this is probably the first time since the GFC where investors are looking for a new playbook for next year. And I think we're seeing that in regards to the flows currently, and that is, need to own things other than US S&P 500 and FANG tech names. And so, where do they actually look for growth? And I think it's certainly in Asia, and it's definitely in places like China. So, yes, I think the message is quite clear. Saying you need to get out of U.S. growth or U.S. tech or U.S. equities in general. I think the message is you need to own both. And because the positioning in Chinese equities is much lower, that is where we think that the trend will be into 2021 and beyond.
What are the risks of more volatility given all of this decoupling that we're seeing between the two economies, and how that could affect market levels?
Well, I mean, if you look at Chinese equities, at least onshore, they are very much driven by retail investing, right? So about 85% of that turnover is retail investing. So Chinese equity market tends to be less correlated to global equities and tends to be driven more by monetary policy onshore. So, we do think that the volatility can continue, particularly in regards to the geopolitical tensions between U.S. and China. As you mentioned, decoupling, we think that will continue, particularly in the tech space. But with a Joe Biden presidency, at least short-term volatility, I think will be somewhat more muted than with a Trump presidency. So, yes, there will be some volatility, but the expectation is that the short-term volatility will be lower with the Biden presidency.
Let's talk a little bit about some other risks that we could see in 2021, because we were speaking to former New York Fed President Bill Dudley yesterday, and he was telling us that inflation might be a greater danger because precisely we're no longer perceiving it as such. What are you seeing as a bigger macro risks into the next year?
Well, I think, for us, that is one of the biggest risks to the market. If you look at what has actually driven this market higher and what continues to drive the market higher is very much a liquidity-driven bull market, zero interest rates, negative interest rates globally. So the question is, what can actually stop that? And historically, it's always come from a spike in inflation, which can happen much quicker than the market expects. Now, going back to the 70s, that's generally been driven by a big spike in the price of oil. But with us coming out of this COVID situation, with a return to economic normalcy, and with the continuation of rates being lower and a big fiscal push into 2021 globally, I could certainly see the case for inflation spiking quicker than the market's expecting. And that's why we've been recommending to have some kind of inflation hedge in investor portfolios. So I think for us, that's probably the number one reason.
What are those hedges that you're recommending?
Yeah, so I think at the beginning of the year, it was more around owning gold in the portfolio. I think at this current level, 1880, I think that's probably a good level to get some gold exposure. The other areas really are in the tip space for fixed income, treasury inflation protection. And I think you can also do it through a sector allocation. So, we have been seeing more interest in commodities, hedging for inflation through owning some oil and gas exposure. And I think those are probably the three main areas that investors can do it. And the three main areas where we've been seeing flows to actually protect against inflation moving into 2021.
All right, BlackRock head of APAC iShares investment strategy, Thomas Tor, they're joining us out of Hong Kong. Really great to have you with us. We are just getting an update from New South Wales Premier Gladys Berejiklian on this latest Sydney cluster outbreak for COVID-19. Of course, we've seen this outbreak of the coronavirus, which potentially throws travel plans just ahead of Christmas into disarray. The Sydney virus cluster has risen to 28 cases. The Premier Berejiklian now warning there's a potential seeding outside of the original Northern Beaches and Avalon locations, where, of course, we know in that area 250,000 people are being told to try and stay at home just days out from Christmas. Of course, that's going to be very difficult for people. Everyone in the Greater Sydney area need to be on high alert, according to the New South Wales Premier. They're saying that she doesn't want to understate how serious this outbreak is. So we'll continue to monitor that, but we have already seen a response from the states in terms of visitors from New South Wales going into Western Australia needing now to quarantine and to test, as well as visitors not being allowed to get into Victoria if you're from that Greater Northern Beaches area where we saw that initial point of the outbreak. All right, let's get you to Karina Mitchell now with the first word headlines. Karina.
Now, Heidi, we start with tech. Microsoft is said to have been hacked as part of a suspected Russian campaign that's hit several U.S. government agencies as well. Sources say the attack took advantage of the widespread use of software from a company called SolarWinds. Malexity says hackers used multiple tools, backdoors, and malware implants that allowed them to remain undetected for years. Meanwhile, President Trump has again threatened to veto a $740 billion defense spending bill, risking a split within Republican ranks and testing their loyalty to the commander-in-chief. The president is unhappy about add-ons that strip legal protection from social media and says China would, quote, love the bill. The Senate is expected to override any veto after the bill passed both houses of Congress. And reports from Washington say the Treasury wants to water down President Trump's order barring Americans from investing in Chinese companies with the state. The order also triggered the possible delisting of some Chinese companies from U.S. exchanges. And Fiji has imposed a nationwide curfew and urged people on the coast to move to higher ground as a major storm system strikes. Cyclone Yasa is bringing sustained winds of 250 kilometers per hour, torrential rain, and a storm surge in possibly 16 meters. The capital, Suva, is already suffering from power cuts. The last major cyclone to hit Fiji was Winston in 2016, which killed more than 40 people. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Sherry.
And still ahead, Goldman Sachs Japan Vice Chair Kathy Matsui will tell us where to look for positives in 2021. But up next, Moderna's COVID-19 vaccine moves a big step closer to final approval. The FDA could authorize it soon. Details ahead. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink
how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
I am David Weston, Bloomberg Television. This is Bloomberg Wall Street Week.
A second COVID shot has won the FDA's backing. The panel voted 20-0 with one abstention, saying the benefits of Moderna's vaccine outweigh any potential risks. The full FDA could give its final okay in the coming hours. Let's get more from Bloomberg healthcare reporter Robert Langreth. Robert, so is the final okay just a formality at this point, or should we be a little bit concerned given the allergic reactions that we've seen from the Pfizer vaccine?
Yeah, no, I think the final okay is basically a certainty at this point. It's just a question of how soon. If it follows the pattern of the Pfizer vaccine, they'll get an approval by tomorrow night, if not earlier. And I think it is likely to come soon because there's also a Centers for Disease Control advisory meeting on who should get the vaccine on Saturday this weekend. So the FDA really act before make a decision before that. So I think it's a matter of tweaking the language on the fact sheets for patients and for doctors and how to use it. And in terms of the allergies, those haven't been seen in the trials of the Moderna vaccine. It's possible we could get some, allergic reactions as the vaccine goes out and is used by millions of people. Those haven't been seen yet with Moderna. There were a handful of cases with the Pfizer vaccine, one of severe allergic reactions, one in the U.S. and a couple in England. But you have to remember that this vaccine, like in the U.S., was being rolled out very quickly to 2.9 million people. And we have one report in the U.S. of a severe allergic reaction to the Pfizer vaccine so far. So you really have to take that in context. If it's just a handful of people and millions of people are getting it, that would be a 1 in a million thing, and that wouldn't be a big cause for concern.
And this, of course, at a time where things are really getting quite bad across parts of the U.S., right? With California seeing, again, record deaths, New York deaths topping 100 a day. In Arizona, I think they're seeing the highest levels since about August. So how critical is this rollout going to be? And in the meantime, you still need to see, particularly going into Christmas holidays, right, the same measures being taken.
Yeah, the rollout is very critical, but it's not immediately going to stop the kind of the broader pandemic and the broader population. That's because right now, because of the shortages and the amount of doses that are available, the initial doses, both Moderna and Pfizer, they're going to healthcare providers and nursing home residents. So just a small segments of the population that are, high risk either for infection or death if they get the infection in the case of nursing home residents. So it's really not going to, protect the broader population for a while until we, can produce the companies can produce more doses.
Yeah, especially at a time when we're seeing U.S. cases now topping 17 million, right? How widespread has the infection become, and also the number of deaths across the U.S.?
Yeah, I mean, death rates, daily death tolls, they are at, all-time highs right now for the pandemic. This is, the worst of it right now in terms of cases and deaths. So, I always say people in the U.S. should really have to continue to keep taking the regular precautions. The vaccine is at hand, but it's, not here yet for most people, and you have to take precautions because the situation is bad right now.
Market. We have more analysis next. This is Bloomberg.